Yo, what is good, dude? Why do I come on stream all the time without putting anything in my hair and I look like whatever this is? I don't even know what it is.
Yeah, well,
But actually, I'm gonna go for some salt spray in it.
You're gonna go for what?
I'm gonna go for some salt spray in it.
Put salt in their hair. Anyway, good morning, everybody. Welcome to Wednesday stream. Dude, does that say bulldog?
Yeah, it's well, that's just the brand.
Anyway. Good morning, everybody. How are we this morning? It's Wednesday. It is the absolute mid-week session. Got a very lovely bunch of people coming up today. First and foremost is myself and Mr. William
Davish.
William Davish. We'll be taking you through just the London Open session for an hour and a half, and then after that we'll have the very, very entertaining and very lovely LJ and Dirk along with Jonatan. Jonatan will be joining Dirk and LJ today. And then after that, it's myself and Mr. William yet again, and then we'll finish the day off with Samir along with Victor and Saul. Saul will be joining us again for some live scalping.
Saul during this.
Yeah. So it is going to be a good day today. All right.
Dude, I think I've missed my potential sell opportunity on EU. Shame.
Okay. Shall we bring up your chart and then we have a look at it? Let's do that.
Oh, no, don't do that. Since I can't do that. I'll tell you what, let's bring up my trading view for now. I am in a GU, so I will bring up my MetaTrader in just a second. But I just want to bring this up and just show you that I'm currently in this trade, guys, on GU. Not looking good. It's not looking good, Brev. I'll be honest. but it does look beautiful. Like the whole setup, layout, the reason I'm entering does hold conviction and confluence.
It's funny because you said it doesn't look good, but it looks beautiful.
Yeah, the price action doesn't look good, but however... the price action looks good. Like all of this here looks good, but this doesn't look good here. Yeah. That looks a bit crap. But I'm in it. I'm in the trade. $300 risk. Nothing too hoity-toity, nothing too scary, because I'll be honest, I really want to go. So I put 4 lots on EU. Because
you have conviction in this move.
I like EU, man. It's if this is like an, you know how I say it's not going to be a good day if I can't place a straight line.
Thank goodness we have a shift button.
I put a shift button. It still didn't go straight down. That's the worrying part. Anyway, guys, EU I think is beautiful. There is, if buts and maybes, of course. We've tapped into this area of interest here. It's and the way the trend is shaping up, it is technically an uptrend. So it could, in theory, be counter trend trading. However, guys, this is a really nice trade. So we've got Asia lows down here, which is also an area of consolidation. Where's my Asia low? There it is. So I've got Asia lows down there, area of consolidation just around here, which is really nice. And if I go up a time frame real quick, you can see we've got all this here to be able to mitigate, which I kind of really like. Now, if the only issue is with this on the higher time frame being the 15, so it's the higher intraday time frame, we got a break of structure to the high side, putting in a higher high. We got a failure to break lower, creating a higher low. Price action moving above, meaning that we've actually got that continuation structure to the upside. And then we've got this area here, which is a potential pullback into this consolidation zone for continuation upwards. So that being said, the euro is a little bit worrying. However, if we go on to the 5-minute time frame, which this strategy works on, we have got Asia. We start moving up. Asia, sweep, pull back down, break below microstructure lows. Haven't really had much of a pullback. Ideally, I'd like to see a pullback into this zone here. I think that's what I've placed, actually. I'll double check on my MT. And then a continuation down to take out either this low here. I'm trying to freehand draw straight lines. Either this low here or the Asia low. They're my two target areas for this trend, for this trade, depending on how it develops and depending on how it acts. Now, we did get price broken and closed above this area. It came back down and broke microstructure. It attempted to pull up, wicked where you can see that I've put this green circle here, and then continued price to break lower and creating lower lows on the 5-minute time frame. So there is a potential for price to shift to the downside. It is an A setup, it's not an A plus setup. Reason it's not an A plus setup because we haven't got the confluence of higher time frame order flow to the downside. So let me double check with my trading view. This is my entry. I meant my MetaTrader, not my trading view, by the way. There we go. So this is my entry here, which is then also a break and retest of this low here. So
I love the microstructure on the 5-minute. I think the microstructure on the 5-minute looks really good.
Doesn't it?
However, the 15-minute is not inspiring me at all.
No, it's not. The 15-minute actually looks really strong for buys, whereas the microstructure on the 5-minute looks really, really nice for sells.
So let's stay on the 5-minute. Let's just keep looking at the 5-minute. We're not looking at the
not 15. Move up the time frame.
We're not looking at the hourly. Stick on the 5-minute.
Yeah, screw the 15, man. Screw anything higher than the 5.
Yeah.
Oh dear. It's okay. It's what's G doing?
I mean the hourly the hourly looks good as well. As we speak. So obviously it's 40 minutes into the hour, and it's printing bearish so far on the hourly, which looks good on EU.
Yeah, I'll tell you what does
on
also
GU
look really nice. GU for a sell a little bit higher up, maybe around here, around these highs. No, a bit higher. Something a little bit like that would be mega nice. So 1 to 3 hour as well. I like that a lot. Like a lot.
Like a lot.
I like it a lot.
GU has come into a 1 hour base. When was this? On Monday, during the Tokyo session, we just wicked it. Yesterday, during the end of the London session, the beginning of the New York session, we wicked into it as well. And this morning, we've been testing a little bit close to it. So we'll see whether or not this ends up being being the top, and then we start pushing lower from here. Even though we do have on Friday, we had a triple bottom, basically. Thursday, bottom, Friday, Tokyo bottom, as well as the London bottom as well. All of it converging. So if we were to come back down again and we do break local structures, we can potentially come back to, what is this? On GU 1344.
Waiting.
1.344 on GU. If we continuously break local structure.
1.344.
It's way down. So this is the lows of last week Friday. So it's last week lows.
3, 4, 4. Wow, yeah, that's significantly lower.
Yeah. So
That would be awesome.
Yeah. So obviously we need to break through the lows of the day so far, first and foremost.
Yeah.
Secondly, we need to go lower than yesterday's lows as well, which has been pretty much the lows of the week so far. And if we do go lower than that, we can go and test last week's lows. So this is the base area over here on the hourly. Wait, I've removed the watermark. So pound on the 1 hour at the moment. We do have a base that was formed over here. Once again, attempt to push higher, start pushing lower. Another base. So if this base is disrespected, we will try and get back up to this point over here. But anyway, so you'll see that we literally just wicked it over there, and then this was on Monday, and then we did try and wick over there as well. So we have been trying to print higher lows. Right now, we've printed almost an equal low, so it's slightly lower, but this hourly candle is still 12 more minutes before it's closed, and we'll see. But we have this action down here that's kind of like indicating a potential to push up. However, we do have this area over here that is resisting the price pushing higher. So assuming that we have the same reaction here as we had over there, try and break yesterday or this morning's lows, we can try and start pushing to get to here. That's now assuming that this area holds. If this area does not hold, then we're just going to start pushing up. Our first port of call is this small little area of consolidation up over here. It's not all that much higher, I would think. And then from there on, it's to this base area up over here, which potentially could be something like this. Yeah, this makes a little bit more sense. So if we do break through this area and we break through the highs of, what is this, Wednesday, we will go to this area up over here. So 135, so let's say 136, back up to 136. That's assuming this area, the 13535, gets disrespected. We push straight through it, we carry on up. Inversely, if we do not respect it and we start pushing lower, 134.45-ish is a good area to test. And then I think this area like this is a good potential test point as well.
Mm-hmm. Hell yeah.
Wait and see.
Wait and see, bro. Away, bro.
Away, bro.
Away, bro. How you doing?
See, once again, I think we had this area marked up yesterday. Being a very nice area of resistance. Price reacted off of it, supported, pushed higher. We came back down, pushed straight through, continued lower, making lower lows in relation to the previous lows. We retested it volumetrically, reacted off of it, wicked off of it during a news event. Obviously, then we had this gap over here. We broke above it. So all of this price action up here is a little bit outside of this area of interest. Price did come into, once again, an hourly base area up over here. Reacted off of that, started pushing lower. Broke through our area of interest again, made a higher low in relation to the previous low, came back to wicket yet again, started pushing lower, made a new low, did not make a new high, made an equal low basically, and now it's starting to look like it wants to start pushing up. We've already had a singular reaction here, but I think this might be potentially something like this. Let me just remove all of the little purple drawings I've made. We have this base area over here on the hourly. If price were to come down and fill this whole area without breaking lower, then I think we can potentially try and retest this. That's assuming now that this hourly candle closes not too strongly and respects this base area. If we do break through, we have this area down here, which is a little bit more consolidative. It's a 15-minute base after a bit of slowed upward ascent, very slowed, where you have multiple lows down here. So if we marked out the multiple lows, something like this, didn't quite get the reaction. Let's look at... come on, there we go. Let's look at this whole section there. This makes a little bit more sense. Last attempt to try and push price lower, all the way down here. Broke local highs, except for this one up over here with this move. Came back down. Rounding, slowed reaction, started to pick up some volume right over here. That's why I'm saying that this area to me is a little bit more interesting than this one down here. Because we started to move volumetrically from this point over here.
Mm-hmm. I think the EU's going to miss me.
Well, once again, this assumes that this base area over here gets respected. If it doesn't get respected and we just break through it, then...
Which hopefully we do.
Yeah.
I mean, I'm not in the EU trade, but for my sake of the fact that I'm in GU, I kind of want EU to be correct as well.
Don't we all? Don't we all just want to be correct all the time? Yeah. I would love to be correct.
We just always want to be always right. I mean, according to my partner, I'm always right, but according to the markets, I'm never right.
I do like this price action on the 5-minute. It does look good though, because every single time we're trying to push higher, we are rejecting. We're creating new lower lows. So this was the high, that was the low, basically. Well, technically, this was the low along with this one over here, but that was then a lower low in relation to that one. This was a lower high. Once again, lower high with a lower low, lower high, lower low, lower, lower. So we're definitely printing bearish price action at the moment, which looks good for the sell. But this is the area of interest right now. Are we going to break through? Or are we going to continue?
We're going to continue lower or break through lower, depending on what time frame you're looking at.
I mean, this doesn't look half bad. You have a almost 4 wick rejection on this high. So...
yeah, my GU has finally made it into the blue. After a little bit of drawdown, we got to about $70 drawdown.
But we are making lower highs and lower lows. So this being the high, this being a low, this is a lower high, this is a lower low. It does look like it wants to potentially push lower. Let's see if we have a 15-minute base area to test. So we have a bit of consolidation right here, which we can potentially come and test. Which also coincides with a little bit of price action to the left. But this price action is ugly, though. This makes a lot of sense. This does also make a lot of sense.
Oh, dude, I need to turn this air conditioner off. I'm bloody freezing now.
Dude, does your body not know how to regulate your own
temperature? Not at all. Not even a little bit.
Yeah, I like this area for the consolidativeness of it and the fact that we had reactions of it as we were coming out of what was this, Monday, as we were coming into Monday, coming out of Friday's price action on Monday. Slowed reaction down here. Nice reactions back up there, back down here, breakthrough, come back down to it, breakthrough, come back up to it. I do like this area potentially for a reaction. That is now assuming that we're going to break lower than this.
Yeah, that's the only area now that I'm looking at it. Like I want to see a break and close under that area, because if we don't get a break and close under that area, which we are wicking, but look, it's the 5-minute time frame. Let's not ignore the fact that this is microstructure. I am looking at it thinking, if buts and maybe sort of thing.
If buts and maybes. Let's have a look at gold. What has gold been doing?
I haven't touched gold today. It's just me and gold fell out a little bit, so we're in couples therapy at the moment. We've got to go on the weekend.
we did fill this gap that we had on Monday. We filled it nicely. Rejected this area of consolidation that we had over here. There was a small reaction off of that, but printing a higher low in relation to this low over here, printing a new higher high in relation to that area of consolidation. Bit of a pullback right now. Opening up, or the opening of the London session so far, not looking the most promising. With this rejection candle right now, it's doing this, it's an inverted hammer, so there is potential that it could start doing that. See the 15-minute. You have a local high. You have a little bit of consolidation, which has been reacted off of. Stronger bearish candle. Not really breaking local structure as yet. We attempted to test the highs of the New York session during Tokyo over here and over here. Rejected it nicely. Gold, I can see it coming up here. But not yet.
No, I think we need to sweep under those lows first. Literally where your cursor is. No, not that far. I don't think we need to go that far. Like, come down and test that area.
This or this?
No, sweep those lows. Yeah, there we go. Yeah, test that area. Yeah, I think we need to come down and test this area first.
I mean, this consolidation that we have here makes the most sense.
Yeah. If prices can come down to there, that'd be really nice.
Yeah, and this consolidation also plays into this idea as well. The fact that
nice EU. I mean, screw you, EU, because you're left without me. But nice,
nice movement.
Nice movement.
Reactions. This area looks good, which is where we are right now. I think we've already broken above, but not with conviction.
Mm-hmm. If we can, so I'm just gonna bring my screen up real quick. Is that all right?
Yeah, go for it.
Awesome.
No, dude, you do you, man.
Mid analytics. So now that we've got the close as well, bugger off. You're stupid. There we go. Right, I'm leaving you for a better looking trade idea. Let's test down lower than the lower lows, but keep it. See, it's 1-to-1. That's not bad. It's 1-to-1. It's not bad. Okay.
How much are you risking on that?
I haven't entered this one. This is what I'm looking at. So this didn't happen.
What is that?
Want to happen.
EU.
So I'm kind of, we were here. I wanted to see price pull down, break and close under this this current low, let's call it, and then pull back. Now that we've got a nice close here, if we can pull back up and then continue lower, That would be very nice. GU is melting nicely, although it's under wick, which I don't want to see. But it's touch wood, it's melting nicely. If we
Touch
can
wood,
get,
you
I want to see a break and close under here. Then we can have a pullback and then continue. That would be nice. Nope. Oh, screw it.
I mean, it looks good.
It does look good, doesn't it?
5 minute does look good on EU, but once
Yes.
again, it's that confliction with the higher time frame, I think.
Yeah,
Well,
EU
it's not conflicting in so much in that sense. I mean, like, we've just reacted off of an area of interest, and we've had these like 1, 2, 3 like similar lows on yesterday. And I don't know. I'm not convinced that I'm not convinced right now with all of the US pairs. Like the dollar does not look strong. So
yeah, I get you.
So why would euro be
I don't know. The DXY is looking okay at the moment.
No, but I mean, if you go check USD CAD and UHCHF,
yeah, fair.
Well, except Swissy has started to push up now, and the CAD is also starting to push up a little bit.
Okay, so we have a bit of strength into the dollar.
Odd dollar also, NZD dollar also just reacted off of an area of interest. Same with the odd yen as well.
No. Gee, what the hell is that? Although that does look nice for the euro, so I wouldn't mind a bit of a pullback.
Bit of a pullback.
Bit of a pullback, I'll have you know. Daddy would be absolutely beautiful.
Kiss me blarney stone.
I am so sorry if there's any Irishmen out there.
What are you talking about, dude? Dude, I have Irish family members. I'm part Irish.
Everyone has Irish family members. Ireland got everywhere. They're worse than the Brits. Well, I mean, some of it.
That's what a British person would say, wouldn't they?
Yeah, fair. I was going to say, bear in mind, I am British. So, yeah. I saw this one post. It was absolutely. I sent it to my dad. It was that funny. Okay, maybe it's not funny, but for me, it's funny. And it was in all fairness, I mean, my dad's probably still. He's probably awake now, but he hasn't replied or laughed at it. So maybe it's just me that found it funny. But there was this one American saying, "These are the things you need to do when you go to England." Of course, England, because the only country in the UK is England, by the way, according to Americans. Again, sorry if there's any Americans out there that I'm offending. But it was this one thing. It was, what was it? It was go out for cream teas and never turn down a cup of tea. And then this other American guy like remixed it and said, "It's okay, you can turn down the tea." And that was an awful American accent. I do apologize. Basically saying that.
Yeah, but that's what they sound like, mate.
And then this Brit goes, "Take the tea." And then it was like a GIF being an old English soldier basically saying this video has been colonized. And I was like, that is amazing. I was like, I love this.
Yeah, that's Britain for you.
Yeah,
the colonizers.
I found it absolutely hilarious. I sent it to my dad, but I mean, no one, he hasn't laughed at it yet, so maybe it wasn't that funny.
Maybe it's like, I see no issue with this.
Yeah, I was gonna say, maybe it's like still very old-fashioned. Dude, what's wrong with that?
Dude, have a look at the yen pairs, mate.
Let's have a look. Wow, euro yen.
You remember yesterday we had Astro. I don't know if Astro is in today. I'm going to have a quick little gander. All I have to do is just check for caps lock chat. Okay, no, he's not in. But this was his trade yesterday that he marked out. So I wrote down Astro straight, no stop loss, 100%, 28.2 hours. That's what he said. He said it's gonna reach
No,
at
he's
100%
wrong.
in
You
28.
lied.
Yeah.
You're lying, Rich. He said buy. Why are you getting it? You're wrong. He was 100% guaranteed. You're trying to
What
say now
buys?
his strategy isn't 100% guaranteed working
No.
all the
He said sells. He said sells target 209.60. Right?
time?
This is 209.60, and it was 28 hours from the point of yesterday. So 28 hours. This is where we are now. This is 28 hours. It's going to be 3 o'clock GMT plus 2, so 1 o'clock GMT. And he said no stop loss. Remember that. No stop loss.
He didn't say how much to risk, though, I don't think. Or did he?
It doesn't matter. It doesn't matter. You're in massive drawdown right now.
Mm-hmm.
Will is right. He said buy. Astro was like, no. He said his target was 209.60.
He didn't actually say buy. He did
didn't say
sell.
buy. He said his target was 209.60. Did not say buy. I made sure of this. I went to go and have a look at the chat again, and I confirmed 100%. I confirmed 100%. He did not. All right. So yeah, this is where we're standing right now. So for any of you out there wanting to trade astrological movements,
Yeah, if anyone wants to like compare Mars to Venus and base a GU trade off of it, with 100% strike rate, no stop loss, there's your answer.
Look, I'm not saying that we are correct all of the time, but that's the difference. We don't claim that we're correct all the time.
Dude, if I was correct all the time, I wouldn't be in 5% drawdown.
Yeah, that's true.
I mean, it sucks to admit that I'm in 5% drawdown, but at the end of the day, everything I've done on this account has been in front of everyone. I've passed phase 1, phase 2, 7% drawdown, clawed back 6%, and now dropped down another 4%. So everything I've done on this account has been on stream. So as much as I'd love to lie to you guys and be like, oh yeah, dude, like I'm always right, 10K payouts every month or every 2 weeks, 20K a month. It's not happening.
Yeah, no, yeah.
You know what I mean.
Let's have a little gander at who's in chat at the moment. Sean Ronald is in. Yo Wagan here.
Yo Wagwan G.
MGN, dude, slacking, mate. Second again.
Wake up earlier, MGN. He's beating you.
Yeah, come on. Yeah. Getting beat every day, mate. Obviously, happy Wednesday. Welcome to everybody. Traders Focus, good one. If you're just hopping in, take a seat, get your trading view ready, and let's get to work. Oh, dude, I love that. Yeah, I don't know what this is. We've got Shami saying hi. We've got Theola. Good morning, Richard and William. Good morning, everyone. Good morning to you, Theola. Martha. Good morning. This is my first time joining you guys. Well, welcome.
Oh, amazing.
Yeah.
Welcome to you.
Lovely having you in. Stash is saying, good morning, everyone. I'm short right now on Euro USD as it reached Asia highs. Session at the end. Dude. Let's see intraday finish now. I mean...
Good man. That's what I like to hear. I mean, we're heading back to break even after being in like $80 plus profit. So heading back to break even on GU, heading up to an entry on EU. So could be nice. We'll have to wait and see.
Miss,
Don't say it.
Don't
say it, Richard.
I don't.
Shut up, Rich.
Okay, moving on. Martha is also asking, I have a $50 account. Is it possible to trade gold? You'd have to go micro lots, so 0.01, which I think is the minimum that most brokers will allow. But I think you can get away with micro lots on a $50 account.
And how big your stop is.
Yeah. It can be done. It's going to take a bit of time. Don't expect to have massive gains every trade. You would be doing micro lots. like Willis said, it depends on the stop loss size, but in general, you can do 0.01s to 0.02 lot sizes with a $50 account. I think that won't be too bad. Gallinaistrati. I'm just going to call you Lena. Good morning, everyone, to Lena. We've got Mixe saying, what's your analysis on DAX? DAX, mighty DAX.
The beautiful mighty DAX.
Where the hell is DAX? Oh, there it is.
Woof.
That's 5 minute. That does not look good.
Yeah, that looks fun.
We did do some analysis at some point here. Let's kind of like walk through. I never actually removed any of the drawings that we had here. Let me just clean up ever so slightly so I can see what is going on.
Yeah, baby. Man, for God's sake, Eve's missed me again. How many times do I need to be missed on this pair?
Man, dude, this. If people can see this, I'm going to keep it like this. I really do dislike having this watermark like in the middle of my screen. It is so
annoying, isn't it?
Okay, so this was the gap that we had that was filled right there. Then this area over here, which was the tops, got taken out here. But if we go a little bit towards the left, it's this area over here that basically got tested, which is just above the gap, which got tested. So I'm just going to remove this one and this, and this. We had a base area that got tested on the 4 hourly. There was a hourly base or a 15-minute base. Let's see. It was an hourly. This one was an hourly base that got tested. So no, this is actually, that was consolidation. That was not a base. That was consolidation. We tested this hourly base over here. This was on the 17th. We reacted off of it, slowed down heavily, and then started pushing up again. Just wicked above these highs previously. This was on Friday the 20th. Started pushing lower, retested this whole zone effectively, this whole upper end that we created over here, this area of consolidation. Started to push lower, we consolidated ever so slightly, started breaking lower, came back into this area of, or this base area of mine, did not really have much of a reaction out of it. What was this? This was Tuesday, so this was yesterday. Did not really have a very strong reaction. We did slow down significantly, which is a good sign generally at an area of support. You want it to slow down and then change character as it starts going up higher. We broke lower. We came into, this must be a 15-minute base. Yes, it is a 15-minute base. Technically, it is like this. We reacted off of the 15-minute base twice. So one reaction here, started to push up. This one over here is the one that broke local structures, creating a new high, came back down, made a higher low. And that was yesterday coming into today. Today, this is not very pretty, this movement that we're having right here, because the problem is we have just swept yesterday's highs. We have just swept yesterday's highs already. We have tried to break lower than this area over here, which we failed, which happened to be the top section of this as well. So this is not very pretty. The MACD itself is quite flat at the moment, but that makes sense because we're not really getting much momentum here. I am a little bit I'm not very enthusiastic about this movement, to be dead honest with you. You have a sweep of a high of the previous day, which makes sense. That sweep pretty much came into this area of consolidation as well. When you tried to push lower, you just took the lows of Tokyo. You came back up with all of this momentum in this candle, tried to push lower again. I don't like DAX right now. This, I think, is horrible price action. 5 minutes. Yeah, this is dark water, mate. This is dark water. There's your low, there's your high. When you're supposed to get volume and you're supposed to get follow through, you're getting the volume, you're not getting the follow through. So you have a reaction, you have a nice volumetric reaction after that, and then it's just it takes it all back again. So this to me is just not very pretty. I can actually see it potentially push up higher from here, to be dead honest with you. Let's go back over to the 4 hourly and let's just kind of like see. Yeah, I mean, you have this upward structure that looks a little bit better. On the 4 hourly, it does look a little bit better, even though we've slowed down significantly. We've slowed down significantly over here on DAX, but it is in line with multiple structures. If we just do this. So I would love, I'm going to remove all of these base areas from previous trades. This upper end. Let's remove this. Let's just simplify things ever so slightly. Get rid of that. Get rid of this. Let's try this again. Okay. We have this whole area here, which was reacted off of quite clearly. Strong reactions lower, strong wicks, breaks, retests. I think this area can actually be refined a little bit more. Something like that. Makes a little bit more sense. Where we are right now does not fill me with confidence that we are choosing a direction. I think we're going to be sideways a little while. We're going to consolidate ever so slightly. And then we need a break. Question is, which way are we going to break? I would have hoped to see an area down here tested first and foremost. But it's not a particularly strong area. It is a strong reaction, but not a strong area in my opinion. We can try and reach the highs of Friday, so last week's highs and last week's lows. So last week's highs, last week's lows, and we are smack bang in the middle at the moment. So having that is most probably what we're going to see today on DAX. That's on the 4 hourly. On the hourly also, it's just we're waiting for a breakout. This is very, very consolidative since last night. We have these small areas over here of consolidation as well. This is an hourly base though. But it's got disrespected right here. Yeah, DAX to me is consolidative. I'm not keen. I mean, look at this hourly candle. Look at this. If this does not prove indecision to you,
yeah, fair.
That's just horrible, mate. There's no lower time frame structure apart from consolidation. This is all consolidation. So we need some sort of breakout, retest, continuation on either side. And then even then, you have this area over here that already got wicked. And you have this lower area down here that is very close to what would potentially be a breakout and retest. Yeah, I don't like this. This is very consolidative. I want to see it break out.
Has gold tapped me in? Has EU tapped me in? No, it hasn't.
You want to show?
Of course it hasn't. How annoying is that? I thought
Slowing down ever so slightly here on this downward trend on EU.
I know. It started speeding up. It started like really hammering down, and then next minute, it just stopped. I was like, okay, maybe this is an opportunity for me to tap in. So I'm at the candle close and open, not the wick. That's where my entry is. So I thought, ooh, that may be quite nice. No, it's wicked. And then GU wicked into drawdown and then continued lower. I'm like, oh, okay.
2 more minutes before this 5-minute candle closes, and it's a little bit of a rejection candle so far.
Yeah, it does look nice, to be fair. If we break and close above that prior high, then the whole move's invalidated for me. I'm out.
Yeah.
The dog's in.
Just go into consolidation over here.
Oh well, we'll see. We'll see how it goes. Like we said, time will only tell.
Yeah, I think. Okay, so gold has closed, quote unquote, a bullish sign with an inverted hammer. Bit of a wick lower. Looks like it could potentially be picking up, but I don't like the fact that we have this wick down here. I mean, the 15-minute doesn't look horrible. We are bouncing off of this. I wish I could refine this area a little bit more. These like very long wicks over here. Obviously, there was some news this morning with Donald Trump's speech and whatnot. These big wicks and whatnot are not the most convincing, let's rather say. US JPY is still flying, as would all of the yen pairs. Odd yen. Okay, let's go over to the hourly, and that looks a little bit better. Odd yen, CAD yen, Swiss yen, Euro yen. They're all climbing. Even you with your Hong Kong dollar yen. So for the time being, there's a little bit of weakness in the yen. So price is picking up. This could just be because of what was it that LJ said yesterday?
Oh, the Fed.
The Fed. There we go.
Yeah, the Fed talks with Trump.
Yeah.
Okay, that was a really nice close on GU, by the way.
5 or 15.
Oh, my dad's just replied. Funny. No laughing emoji, just the word funny.
So it could be haha funny or like you're being strange funny.
Yeah. Yeah. My dad's a typical dad. He's a thumbs up dad. You know, like I don't know if you guys.
The whole passive aggressive.
Yeah, it's the. Dad, just pass the funded account. Dad, I'm getting married. Dad, I've just got a kid.
Dad, I won the lottery.
Literally, man.
Oh, dude, that's funny. Yeah, that's pretty good. Let's have a look at chat a little bit. Let's see. SJ is asking about GU. Obviously, Will has been going through his GU quite a bit. On the 5 minute, it did look pretty good for sells because we had this very nice rejection off of the Tokyo highs, very close to this high section of yesterday, just kind of like in that last vestiges of yesterday before coming down. We had this slow upward tick. We broke a little bit lower, retested it, and looked like it wanted to push lower from the London Open. We came into the small little area of interest down over here, reacted off of it, and since then we've kind of like been stuck right here. So this is on the 5 minute. On the 15, it did, let's rather say, it did look good for a potential to push lower, but this 15-minute candle over here does not inspire confidence. Large wick above, small wick below, small candle body reacting off of a previous area where we struggled to try and push lower after a volumetric candle, and then just a slow upward tick. I would love for Will's trade to, carry on down. But
I think me and a few other guys in chat would.
EU still looking good. We've created a base area within a previous bullish base. This is a bearish base. Kind of just stuck below it, so no real volume or follow-up, let's rather say. Slow descent. My apologies, not ascent, descent. Same idea. Tokyo high was created. We just wicked it, started to create a slightly lower low in relation to the previous low. Came back up to try and test a new high, to try and create a new high. Wicked lovely. Started pushing lower, creating new low. Makes 100% sense on the lower time frame why Will wanted sells. That would have been a lovely sell point, and just kind of like try and go all the way down to this area of consolidation, area of interest. Even though this area of consolidation does look a little bit stronger though. Because when you started breaking up and you retested it, you got this volumetric push up. So
yeah,
I do like EU. I really do like EU now for the continuation of sales.
Yeah, I don't think it's going to tap me in though. Hopefully now it's just a matter of it's going to melt. That's what I'm hoping for. I kind of feel like I've made peace. I kind of feel like I've made peace with the whole idea that EU may just move down now. And if so, like I kind of like it too, because that means that GU could potentially move down as well. But we'll see. It's been a bit funny at the moment. I want to see it break these lows.
Look, I can see on the lower time frame it's struggling a little bit, going slowly.
Yeah,
because it is right now. It's really struggling. But yeah, maybe a bit of a pullback, a continuation, or maybe this might even be the lows. And in that case, let's say on the hourly or so, we'd try to...
It would make sense, Yeah, it would be.
And then we can try to...
It would be this area that I'd want to see lows. If it's going to create lows before continuation higher, this is it.
Yeah.
So on GU now, as a discretionary trader, if we don't get a strong bearish close within this candle, I think I'm going to be looking at exiting. Because if we have a look on the 5 minute and we can see that sort of all those wick rejections to the downside, it's not filling me with confidence.
Yeah.
So I'll probably be in this trade another 5 minutes at best, 5-10 minutes. We'll see. I'm up $112.
Let's give it some time, mate. Let's see.
Yeah, well, I got an alert set at the previous lows, or at the most recent lower low. On the 5 minute. I've got an alert set, so I know that it's going to break and close under. If it breaks and closes under, that's when I'm going to be a bit more confident and like, oh yeah, okay, cool, sweet. Let's continue this trajectory.
Chat saying, Stash is saying we're on the same EU USD trade. Just realized after you presented your screen, my entry is on 1.1807. I think it's the only difference. So slightly different entry, but Stash is in the same mindset as you are for EU. We've got Louis saying good morning. We've got Unbiased Trader saying good morning all. Offie saying good morning, profitable traders. So you're not talking to Will right now.
Hey, I'm $150 up.
Dude, I lost an account the other day, so I'm one to talk.
Class.
Yes, Offie. Good morning, profitable traders.
You must be chatting to chat.
Will my account automatically change status /close if I reach the profit target, or is there a delay before system detects it? And I see that Lockie has already answered saying, once you've crossed the target and all open trades and open orders have been closed, the system will detect that you've passed and target or the target, and after a short period, normally between 2 to 15 minutes, typically. Ace 4 high. Richard, the watermark in the middle of all is hideous. I agree. I hate it. But somebody asked if we could please put it up, so I've put it up for them. But I absolutely hate having something in the middle. It is so distracting. It is so annoying. So
yeah, it is. That's why I removed mine.
Yeah, I'm just putting it up here so people can see, but I absolutely hate having a watermark on my screen. I hate it. Like, genuinely, I hate it.
Do you not like it now?
No, dude, I despise this. I really do. I don't like the idea of having something smack bang in the middle of my screen. I don't like it. Like it. Yeah, I don't want to say it, but it pisses me off. When I see it, I start like thinking, I want to remove this thing.
Yeah, fair.
But
just remove it, man. Damn.
No, but I want to ensure that people, when they see the screen, it's clear to them, because looking up here in the left is not for everybody, obviously. So
fuck's sake, man, look at.
Anyway,
I mean, hell, what's happened to EU? Let's just tap me in. All right.
It's picking up. Teddy is saying price has created a bullish fair value gap on Euro USD on the 4-hour time frame between 1.17904 and 1.17824 zone, which is coincidentally tallies with the 4-hour time frame trend line. I expect a bullish reaction at this zone. Okay, so let's go over to the 4-hourly. Once again, guys, sorry, I don't trade fair value gaps, but I will take your input in this. So a 4-hour fair value gap on Euro USD 1.17904. So that's 904, and the bottom is 824. Teddy, correct me if I'm wrong. Doesn't this 4-hour candle first need to close in order for it to establish a fair value gap? Look, I'm not questioning. I just don't know. Do you mind just confirming yes or no? Because I understand that you have this.
I believe that would need a close. Yeah.
You do have that previous candle low, yes, but wouldn't this candle first, as a 3-candle pattern, need to be closed first and foremost in order for it to qualify as a fair value gap on the 4-hourly? Just please confirm for me, because that then means that this low over here still needs to be finalized within the next 24 minutes, obviously. In which case, the fair value gap would then be this area down here, in theory. But do correct me if I am wrong. If we look at the hourly, there's more of a fair value gap right there on the hourly. Anyway,
trying to work out what's going on with EU and GU at the moment.
unbiased trader saying we should ban Astro. The gold was hit 5,200 given by Astro.
Dude, I'm taking out. Yeah, I'm not staying in this trade. I'm taking out of this. 178. Oh, I paid 20. Okay, yeah, 4 lots on EU. I paid $16, $24 commission, banked $202, $178 realized profit. Dude, it's ugly, man. If I just bring my chart up real quick, sorry, man. I'm just gonna show you why. You know, followed by this massive push up, which actually closed heavily bullish, followed by an instantaneously bearish candle down. Dude, nah. Nah.
Did you close it? Did you close it at break even or in profit?
Oh yeah, I banked $172.
Oh, that's good. That's not.
Yeah,
dude, a winner's a winner.
Yeah, exactly. Yeah, same with GU. You know, consolidation. Way too many attempts to break above. Way too many attempts to push lower. Rejected, and then it was this candle here, which was the decider. It was just way too bullish. It closed hella bullish, and then again instantaneous candle down. That was just God giving me the signal that here's your last opportunity to get out before I push this up. And I was like, hey, look, I'm taking it. I'm taking it.
What if it turns around and says nope?
Then if it does that, so be it, because look,
you've made your decision.
Yeah, I've made peace with my decision as well. Not only that, I would ideally, like I looked at this trade earlier, I would have ideally liked to have gotten in around here. So I'm already. Let me get my pip calculator. How can I do this? Why wouldn't it let me? Oh no, wrong one. Okay, well let me go a little bit more then. I'm already like 8 pips lower than I should have been. So I didn't like. I wasn't in love with this EU trade. I'm already giving away half the profits by being too late to the party. Same goes with GU. GU, in theory, I would love to have been trading more up here. But again, I didn't really like GU as much anyway. We had a nice wick above, but it just played about a bit too much. So I'm glad that I got up with 170 odd bucks. I'm super fine with that.
I was about to say, dude, just take the small little wins and just accept them.
Yeah, exactly. Yeah, 100%.
LJ, thanks, mate. Japan PM encouraging Bank of Japan to not hike rates just yet. Thanks, mate. My memory when it comes to stuff like that is like, you can tell me something right now in the conversation, I'll remember. Give it 24 hours and it's like gone.
Yeah, same. Or I'll remember like snippets. I'll be like, oh, Bank of Japan. And the rest of, yeah,
bank rates. Yeah.
I will even remember that. I'll just be like, oh, Bank of Japan did something and said something about someone.
Yeah. That's why LJ is the fundamental trader and I am the technical one. He remembers stuff like that, whereas I do not. Trading 24 hours is saying, what do you think about gold in the minority time? So minority time being 15 minutes. Wow, you're a minority if you're 15. Anyway,
fair.
what do you think of the 15-minute on gold, mate?
15 minutes is 5. I'm going to the 15. I mean, we've pushed into this consolidation zone. We've wicked and then starting to continue a little bit higher. I'd love to see price move above this high. Break and close above this high would be nice. I'd prefer to see it come down to about here. I'd love to see gold come down here and then start making a move up, if I'm being honest. But look, doesn't mean I'm gonna say. Also, it was really nice price action yesterday. If anyone jumped in on those gold shorts, really nice gold short opportunity.
It was a very simple consolidation breakout, and that's exactly what we needed to happen. Unfortunately, we didn't have follow through. Would have been kind of nice if we had follow through, instead of it coming back up to consolidation and then breaking through it once again. Would have loved
so
to.
I like to have a break, close, open candle, execute trade. I didn't take this trade here because of the size of this candle was ridiculous. So I thought, I don't like this. If we had a short stubby candle that just closed here or just closed here, then I would have been in this trade. But it just didn't match my confidence, unfortunately.
Yeah.
But would have gone for about a 1 to 2. Would have taken a really nice 1 to 2 as well. Would have been 5, 10, 20, 25, about 30-minute trade. And then you would have banked about 1% if you're risking 0.5%. Gold, I reckon if we can break and close above these highs on the 15-minute, then there's going to be some buy potential. But in my honest opinion, I think price can come a little bit lower. But it doesn't mean it can. But that would be what I want to see. I just drew a fish.
Now that you mentioned that, when I used to be in school, drawing the fish just out of boredom was something that we used to do a lot, but it wasn't on paper. It was like on the school benches.
I was going to say, yeah, it was on the desk.
It was on the desk, and then at the end of the year, you'd have to go with like sanding paper and sand down your masterworks for the next year.
Yeah, I remember. I was a real troublemaker, and this is what I mean. Don't ever be a troublemaker, guys. For those of you who are in college, school, university, whatever you're doing, any form of, or just in your workplace, don't be a troublemaker. I remember going into a science block, and there was graffiti everywhere, and profanity as well, like bad graffiti. And I just used to doodle. I used to like carve my name, or like, I used to do those, those like special S's, like the
blocked S's.
Yeah. So I used to do stuff like that. Anyway, there was this awful like profanity on the workshop benches, and I got a bollocking for it, and I had to go into detention for like a week, and then I had to like scrub and sand off the tables. I didn't actually do it. It wasn't my fault either.
I don't believe you for a second, mate. I think you were guilty. You were 100% guilty of what happened there. So don't believe you.
Yeah.
No, I'm joking, mate. But you were a troublemaker in school, so it was easy for you to be the scapegoat. Basically, everybody's like, it was Will.
I was cannon fodder. Like, just instantly, they'd look at me and be like, "Well, it's you, innit?"
Dude, look at EU. Look at EU.
Oh, savage, mate. Look at that.
Yeah.
Okay, GU is a bit crap, but
yeah, GU is crap, but like EU is. You remember what you said earlier?
Mate, I don't care. I'm gonna leave it up because I want to see if. Oh, it was a nice break as well, a nice close. I'm going to leave it up and just forward test it to see, because this is like a bit of a concoction between my current strategy and my old strategy. So I'm trying to keep as much. Oh, hello.
Okay, it seems as though your internet just failed.
Yeah, apparently so. Yes, good job I was out of the trade. Yeah, so I'm gonna leave it on and draw it up and keep it there, see what happens. It's gonna go into the journal as a break even. Even though I smashed out $170, that was across both pairs. But I don't care, man. I'm gonna make peace with it.
I mean, fair,
It's
mate.
just stupid pair.
Aside.
Stupid trading conditions at the moment, anyway.
Stupid trading conditions, stupid parents, silliness.
Let me see what I do. I'm down again for this month in Feb, I believe.
Oh yeah,
Dude, I'm down 8. I'm down another 2%. I'm down 1.8.
Dude, you can do it. You can do it.
Well, not in February. I can't. But...
Yeah, I was about to, maybe not this month, but you can do it.
Yeah,
you can do it a month. We just don't know.
I will
which
do
one
it at some point in a month. Yes.
Yeah. A month will go by, and you will do it within that month.
We'll see. Dude, a 4%. I mean, I did a 3% month in September. No, October. So that was pretty cool.
Well, yeah, we'll see how it goes, mate. We'll see.
Since January, I've had minus 3.7%. Yeah, that's not actually that bad. That's pretty bad.
Bruce is saying GBUAUD.
Uh-huh.
GBPUAD? Pound odd?
Oh,
I'm
yeah.
I'm going to assume. Yeah, I'm going to assume the U is supposed to be it's supposed to be GBP, not GPU. Yeah. Unless graphics processing unit Australian dollar is a new currency. Bruce, we're just joking, mate. Like, it's obvious that you're talking about GUAU. Well, GPPAUD, GA. Yeah.
Or it could be the Great British Underground. Don't know how or why, but...
I'm trying to think of what the AUD could stand for. Automotive undergarment distributors.
Or automotive under distress.
Automation under distress.
Yes, I like it.
So, yeah, dude, no, it's all good. We assumed as such. How's it, Rich? What's up, Bruce? I'll give you a little bit of my South African accent there for you. Nice little beer rolling my arse. Fun Life is asking, can I still take entry on Euro USD?
Don't bother.
Look, Euro is pushing lower. I do think that there is a potential for us to get maybe another 10 pips or so, between 6 and 10 pips. So if you're willing to risk it, and this is not me saying, hey, go for it. If it follows your plan, you can try for another sell. Personally, I probably would not have gotten in. I think it's a little bit late. I think that the majority of the move has already happened. And on top of that, even on the 15-minute, we're starting to get stronger wicks above the price instead of lower than the price.
Yeah, we're trying our hardest to push higher.
Yeah. So me personally, I would not.
Yeah, I'm
where's
glad.
Astro? No idea, mate. No idea.
Yeah, he's got his head in the clouds at the moment.
Stash saying, Richard, I saw you recently lost an account. Since I'm just starting out, I struggled with the emotional side of these losses. Do you have any advice or a routine you follow to recover? Great question. So the account that I lost, I spoke about it on, when was it? Monday?
Was it? Yes. Yeah, Monday. Yeah.
It was Monday or Tuesday. I lost an account due to I have a copier. All right, let me just tell the story right from the beginning. I had a copier.
Once
All right,
upon a time.
and yeah, what? Sit down and get yourself a cup of coffee and a nice warm
Take a
blanket, as
knee,
I'm about to
kids.
tell you a story. I had a copier on one of my accounts, and this copier had reset its settings. The terminal updated, and it just reset everything. I did not notice. I went and opened up the terminal, didn't even bother looking at the settings. Everything was as expected. So what happened was the copier had a standard lot size multiplier, which was basically 10x, a default one, which you would have to go and change in the settings. And it had hedging on as well by default, which is weird. So I entered a trade on EJ, if I can remember correctly, and it took the trade on my master account normally as it was supposed to. It was a buy held overnight. No, it was on Thursday. It was on Thursday. It wasn't on Monday. I told you guys about it on Monday, but it was on Thursday. Left it overnight. The one account had profits, no problems. The other account with the copier, I got an email saying that my account equity lows has been reached and that the account was lost. Went and had a look, saw that the copier settings had reset. It had 10x'd my risk on that account, and it also took an opposite direction trade to the one that I initially entered. So I entered on a EJ long. It took an EJ short. There was news that happened as well. Price came down and it just hit equity lows. Price came down. It looked like it was going to be in profit, but then it started picking up and then hit equity lows sometime during the morning. So when I woke up to the email, it was gone. So that the thing is, I was annoyed, and rightfully so. But the person that I needed to be annoyed at was myself, because the idea is that you're supposed to check everything prior to taking a trade. Even if you do have a copier and you have the idea of that the copier is there to simplify things for you so that you don't have to go and manually enter each account if you have multiple accounts. So it's supposed to simplify things for you. But sometimes what can happen is that settings can change, go to default, and it might not happen all the time, but it can happen. And the onus is still on you as the trader to ensure that you check everything prior to entering a trade. So a good idea, I would think, is to have some sort of checklist available. You don't have to have it on a screen somewhere. You can have it on a little post-it note that you can place up on your screen with like steps, things that you need to check in the morning before you start actively trading. So before you start looking at the market, ensure that you have the right risk set up on your lot size. Make sure you have the right accounts. Make sure that you have the right assets up. Let's say you are looking at GU, but you have a EJ screen up. Make sure that there are things in place for you to visually confirm all your settings for the day is as it should be. If you have a risk tolerance for the day, 2%, that kind of like thing, make sure that everything is set up prior to you even considering taking a trade. Now, this is not even talking about your pre-trade checklist, like saying, okay, I have these confluences. This is where I'm going to enter. If this confluence and this confluence aligns, this is the kind of trade that I'm going to look for. I'm looking for my higher time frame biases and all of these things. That's your pre-trade checklist. But you have a pre-trading day checklist. And that, I think, is also a good thing. And that is where you check to make sure that all of your accounts are active, that there aren't any errors, make sure that your internet is fine, make sure you don't have packet loss, you're connected to the right server, are you using a VPS, all of that kind of like stuff. I'm a person that I've lost a fair few accounts throughout my career. That's normal. At some point I started like making the decision to not attach a lot of emphasis on the importance of an account. And Richard Wells helped me with this, where he said, listen, Why do you put this account on a pedestal? Why is this account the be all end all account? Yes, it's a funded account. Yes, you've got some payouts out of it, but why put it on a pedestal? It's just another account. Started thinking about it, went back, considered why do we put so much emphasis on how important this account is? It's just an account. If you put too much emphasis on the importance of account, it might come back and make you feel like I'm afraid to lose this account, or you might start building on the idea that I'm not a good enough trader. I don't deserve to have this this account, that kind of like thing, and then you start self-sabotaging. But anyway, so I would suggest trying not to have this account or putting so much emphasis on the importance of that account. It doesn't do well to dwell on losing an account, first and foremost. You've lost an account. The best thing you can do is to go and look at what led to you losing that account, and then try and put in steps in place so that when you do get a new account, that you try and like not redo those previous mistakes. So there's a lot of stuff as well. I'm pretty sure Will has had his fair share of losing accounts as well, and I think he can also give you some really good advice on stuff that he's done. But for me, personally, it's that kind of like thing of just get over it. Just don't put so much importance emphasis on the account. You're going to lose accounts and carry on.
Yeah, 100%, man. It sucks losing an account because it's a fail, isn't it? You failed the challenge. Yeah. You've blown the account. No one wants to have something taken away from them, or no one wants to feel like they've failed at something. But unfortunately, that's just how the market goes sometimes. You've gone through a losing streak. I went through a 6-month losing streak where I actually risked a huge amount less than I normally do, and I still lost the account because it was over a 6 month period. I am not afraid to have up to a 6-month drawdown anymore because I know that it can happen. So when I say I've gone break even November, December and losing January, February, technically I've only had a 2-month losing streak at the end of this month. So it's simple things. It doesn't matter and it doesn't mean anything. You can't stress over something that isn't actually going to be that important. And a big thing that I like to ask myself is, how is this going to affect my life in a week's time? How is this going to affect my life in a day's time? And that's how you determine how much energy you give to that particular thing. So if, for example, you blew an account, is that going to make you miserable for a day? Yes. Okay, great. Yeah. Is it going to make you miserable tomorrow? You'd probably be a bit pissed off, maybe, but you'll be able to analytically improve. You'll be able to put in provisions to be like, right, okay, I'm not going to trade today because of this. So your logic kicks in more than your emotion. So therefore, it's only one day of emotional trauma that you've got to give respect to that account. Your partner leaves you. Is that going to affect you tomorrow? Yes, emotionally. Is that going to affect you next week? Possibly emotionally. Is it going to affect you next month? Maybe a little bit less. Your logic can start kicking in. You can start putting in provisions like, I need to step away from the markets. I need to do this. I need to do that, to start putting in place things for my life to move forward. So therefore, you can, give enough emotional value to that particular event happening. So it's all about understanding what it means to you. And a bit like Richard Wells said to Richard Butler is, why are you putting this account on a pedestal? What does it mean to you? Great way is asking that. How is it going to affect you if you lose this account tomorrow? And then therefore, that's how you can psychologically deal with it.
Hello, Dirk.
Hey, guys. Yo. How is it?
Dirk.
How come every time I'm joining, like William is talking about psychological trauma?
It's because
in a weird spot.
He uses this as his therapeutic session, and he's using me as a therapist for him.
That's good.
Yeah,
it's good.
It costs me a lot less than a therapist.
It's honestly speaking, it's like something I struggle with myself, like the funded accounts that I could just try things, because I don't need to be sad when I lose them. So be far more aggressive than I tend to be. But since like prop trading, this whole structure is still feeling kind of new to myself, I always tend to treat the accounts like, I'm losing real money in the beginning there, which of course is kind of true, once they are funded, but not for the evaluation phases. And I should be much more aggressive there, much more, to just try things, and really put myself in a spot where I feel uncomfortable so I can grow as a trader.
True. Yeah. True. I really, really agree with that. The idea of having to not necessarily push yourself, but test the limits of your comfortability.
Yeah.
So push yourself outside of those boundaries and see up to which point you can handle without absolutely breaking down and losing your mind.
Yeah.
So yeah, I like that. That's a pretty good way of looking at it.
Yeah, exactly.
Yeah. So have you guys been trading anything?
I had an EU sell and a GU sell as well. Banked about $170 from it before EU then decided to absolutely melt. But I don't care. I'm out of it now. I'm over the whole sell. GU would have hit a break even yet again. GU I don't think it's going to do what I want it to, and I don't think EU is either. I think it's just having it's given everyone who is in a sell an opportunity to get out, in my opinion. I think it's just, it's given everyone that last wind of, look, we're going to do absolutely nothing now. Here's your chance to get out, or if you want, be patient and hold it. But other than that, I'm not in anything.
Yeah, EU is pretty...
EU is actually dropping quite nicely now.
Pretty solid downtrend there now. It's like, especially if I look at the 1 minute.
Yeah.
I've been missing.
I didn't get in where I wanted to either. I wanted to be getting in up here somewhere on EU. So I got in at a much lower price, which I didn't like. GU, again, I wanted to get in a lot higher. Didn't. I got in at a much lower price. So I wasn't over the moon with the price action anyway. So, yeah.
Yeah, kind of weird markets anyway at the moment. The only thing I touched this morning was a bit Ethereum, a small long position, but really just a couple of bucks there. And other than that, it's like, the market for me, it's like kind of feeling like, everybody's on their toes, expecting the orange guy is going to tweet something weird again. And it's more of a reactive market. Hey, LJ, finally joining. Good
morning.
Good morning.
I'm very sick.
Evening. You're sick
Very
now.
sick.
Oh man.
Yeah.
Is that from your food poisoning still, or what?
No, I did. That was a bit ago. I have some kind of flu.
Nice.
So my nasal
Welcome to the club. Luckily, mine is on the decline already.
Yeah, I'm also feeling a lot better. So sorry, LJ.
Dude, I feel like death. So I might be a little bit useless because I'll have to be muting myself constantly, probably to cough or sneeze, but I'm here. So
still
run through it.
Do you like sushi, mate?
I love sushi. Sushi is probably one of my favorite go-tos.
Where are you going with that one?
Okay, so go and order yourself some takeaway sushi and ask them for extra wasabi and extra pickled ginger. And then you just eat that whole lump of ginger. You don't even eat the fish or the sushi.
Give the sushi to your missus and just scram down on ginger and wasabi.
Yeah, just eat the ginger, and then afterwards you eat the wasabi just to kind of like burn open your nasal passages, and then.
Oh, okay. I see.
Yeah,
it sounds twisted, but he's actually got a fair point. It
don't listen to that, really. Go for some.
Yeah, I don't know if I'll. I don't know if I'll do that, but fair. I understand the principle. I did before. I did actually sit over a bowl of steaming hot water, trying to because.
Do you put some Vicks vapor on it?
Yeah, have you got Vicks? Put some Vicks in it.
Yeah, I do. I've got some under here. I've had it all day.
Yeah, and two finger Vicks nose. Just on your mustache.
Dude, that's what we used to do when we were playing rugby. We used to because all of us had mustache. We'd all put we'd lather Vicks vapor rub on our mustache.
Oh man.
My question is why?
It opens up the nasal passages, doesn't it? We'd be walking around the field and you'd watch everyone randomly go.
You like breathe
I
better.
think you're all a little bit addicted, mate. Like,
That's
does
probably a bit
everybody have
wild.
like allergies when they get onto the rugby field? Like everybody's all of a sudden like stuffy noses, like guys, I can't run.
Oh
Nose
man.
is blocked.
Yeah, it clears the like the nasal passage. You know, it's so good, dude. I love the smell of Vicks.
What's up, guys?
Hello, Jonatan.
I'm
What's
happy
up?
to hear that we're having a nice trading related discussion here in today's live stream.
Cool. Yeah, cool.
How's
Yeah,
it-
just
that's
get
what
rid of
happens
that
when
guy.
you have. That's what happens when you
There
have
you
5 men
Better.
sitting and
That's fair.
chatting.
Right, that was funny. That was very funny, very professional. My second
me.
most favorite Australian person,
It's who's your favorite?
Steve Irving.
Fair.
Yeah, well, he doesn't
Hey.
anymore. So logically, LJ is now your favorite.
I'm pretty sure any Australian would
Of
be
a
happy
stingray?
to take second place
Second place to
to
Steve.
Steve
yeah.
Irwin. So
Yeah.
Yeah. What about Crocodile Dundee?
I mean, he's up there
Crocodile
too.
Dundee.
Yeah, definitely love her.
You call that a knife?
My name's
That's a knife.
I'm sorry, why is Dirk just randomly got a butter knife on his desk?
Because earlier I wanted to open a bottle of Spezi, which is a German mixture of Coca-Cola and Fanta. And I don't have a bottle opener here, so I had to get a knife, to do it the German way, to get the
Yeah.
what is that called, the cap of it.
Yeah, we used to do that with like big lighters.
Yeah.
So you had
Yeah,
like
I was
light
gonna
and you
say,
go-
yeah, we used to do that with lights.
That's how you.
Yeah.
That's one of the traits you gotta have as a German guy, that you basically can open, for example, a bottle of beer with almost anything. You don't
At
need
all.
a bottle opener.
Table.
Yeah, with the table.
you can do
yeah.
it with your shoe as well.
Yeah.
Yeah.
That's good.
Some
We
people
used to
do it
do-
with their teeth.
Yeah, I
Oh,
wouldn't
no,
recommend that though. Maybe.
Dude,
Yeah,
I've watched too many friends literally snap their teeth doing that. It's just like
Yeah.
it makes me
Yeah.
cringe when someone tries to do it. I'm like,
Dude, just the
we
idea
felt
of
like
someone
beers
biting
going on
onto
the-
a piece of metal makes my brain go, oh, no.
Yeah, fair. No, it
Anyway.
cringes me out.
Anyway, trading, right?
Yes,
Yeah,
right.
yeah.
I'm going to skedaddle and love you and leave you. I'll see you in about 2 hours. So, guys, thank you very much. Make sure you do absolutely smash that like button if you haven't already, guys. 200 of you in watching right now. We want 200 likes. So, guys, absolutely smash the like button. Subscribe if you are new here, and we shall see you in a couple hours' time. Peace.
Yeah.
Take care.
I share his sentiment as well. Jonatan, LJ, and Dirk, have a good one. We'll see you guys a little bit later.
Catch you later, Richard.
peace, guys.
Alrighty, here we are. Guys, did you guys trade anything already today? Or are you also sitting on your hands, at least for traditional assets, like I'm doing?
Well, I'm long gold.
Long gold.
Let me share my screen here on gold. I do have a long position open on gold. Let's see if I can find that one. We have a beautiful breakout above resistance right now. We got the breaking retest of that level as well. We've been looking at this for quite some time here on gold. The measured move here is just not really exactly what I'm trading. It's more educational because we know that the measured move of a triangle like this one, because we entered from above, the probabilities doesn't align with the traditional measurement of a ascending triangle where you basically enter from below like this, right? And then that kind of like traditional, because there hasn't really been any research on what happens if you enter the triangle from above. So there's no statistical significance to that. But it makes sense, we got to break it above a resistance. We have a daily open and close above that level. We have a break and retest in 4 hour. So I actually got in on this on the actual breakout, and I believe this is my setup. I think I got my stop loss around here, and I'm looking for a move up here. So that's the current trade I'm in on gold. That's everything. I've exited my AUD NCD trade. Hit that TP. I contemplated, should I just move my stops up, and that would have been the best solution, really. But before I really could make any meaningful decision on that, it hit my TP. So I'm happy with that. It's a 3-month hold, 5.5 R. I risked a little bit over 2% on this one, so it's like 15. I think it's like a 15% win on account. So I'm very happy with that. Basically my best trade of the year. So that one. What else? I had last time I was on, we talked about USD JPY, which was this trade right here. Obviously, that one turned out quite good as well. And that's about it. And now I'm in gold, and I'm trying to find opportunities in the markets. I'm still looking at AD. I'm trying to find where do we have any significant cyclical shifts in the market, and I think AUD/NZD is definitely one of the most interesting pairs still. So I'm looking for a pullback here on the daily. I mean, we can clearly see that the trend is kind of slowing down in momentum. So I'm looking for a reset within the daily trend, right? Because you can see that you have a lot of momentum here. You can kind of think of it like a vehicle, or let's say a Formula One car. Okay, a lots of acceleration right here. Okay, and then it kind of brakes in the corners, and then more acceleration, and then it brakes more, and like with time, the acceleration becomes less and less, right? It's almost like it's running out of gas, right? So that velocity and acceleration of price is kind of slowing down, and that's what price momentum is all about. You can kind of think of it like a rocket, right? Think of it like you got SpaceX right here. So SpaceX, Elon Musk is like, gonna launch a rocket. So he launches a rocket like this. This is the
that
rocket.
What he does when he launches the rocket?
Yeah.
He's like, on the things like, launch it.
Launch rocket. That's what I do. And then it launches, right? And it goes up into not orbit, but it kind of touches the outer plane of our what is it called? Atmosphere, right? So you have velocity, acceleration picks up. This is momentum picks up, and then it's kind of like momentum slows down and slows down and slows down, and then boom, it picks up again, right? And this is basically the RSI. So think of it like gravity reaching the outer atmosphere, and then it slows down and then reverses back to the downside. And that's pretty much how you can think of price momentum, right? So if we look at AUD/NZD here, what am I doing? Yeah, so if you look at AUD/NZD here, the rocket launched here, right? And then it's kind of reaching potentially the upper atmosphere somewhere here, probably up here. And then it's going to come, slow down. And it's this reset that I'm looking for. And once we have that reset in momentum and everything, that's when I'm looking to get in on the next leg. I'm hoping that it can happen before hitting this level, because I would like to get in maybe down here, or even all the way down here for that next move up into this region. Because I see AUD/NZD, if it truly has entered a new cyclical wave, AUD/NZD is probably going to be in a massive bull market throughout all of this year. So I want to try to get a new trade on this one. And this is just the beauty of following the trends. It's once you understand like the behavior of a trend, you simply just enter at the best possible entry point in that trend, and then you just ride it until you see signs of it ending. So the mistake I did here was I was really not riding the trend till the end of the trend, because we don't know when the trend is going to end, right? We only know that a trend is visible, and then that's all we know. We know it's a trend, period. And when will it end? We have no idea. So we just got to follow that trend. And I'm a little bit bummed out, because if price would have moved like this, if I would have been TP'd here, imagine holding this through December to May, and the swaps on this was minimal because a lot of it was actually positive swaps. So if I hold this all the way to May with the minimal swaps, I mean, we're looking at like a 10R trade with doing nothing. And that to me is just the beauty of swing trading with the trends.
Yeah, dude. I was going to say, I know you said you got tapped out because your profit target got hit without you seeing that. But I was going to say, yeah, this is probably exactly what you wanted to keep holding the trade. So it did get the inflation data today for Australia, which was a touch higher, 0.1%. On the year on year, and then the monthly was it was expected 0.26, it came out 0.4, so 1.4% above. Now we've only just started going to monthly inflation data in Australia. Previously it was quarterly. The RBA still relies mainly on the quarterly, but they appreciate that we've now the release what are they called? Not the BLS. God, that's America. Anyway, I forget, dude. I'm sick. All right, just forgive me.
Yeah, I understand.
But they've got a similar name. Where's Henry? Henry, you'll cover me. It's they've got a similar name. Anyway, so they released that today. Basically, we got those numbers. So it's pretty much priced in. Yes, rate hikes are going to continue in Australia. I believe two of our major banks, so Commonwealth Bank and Westpac, have already increased interest rates by another 0.3% today, well ahead of the next interest rate hike. So the current pricing for the interest rate hike is going to be in May, right? So they're already lifting home loan rates, all that kind of stuff, interest rates in general, and we're in Feb still. We're end of Feb, ahead of that. So it seems very firmly baked in. So this is going to keep rising. And New Zealand's definitely on a bit of the opposite track, as is the whole globe right now. To be honest, I don't think they should be increasing rates. We've talked about this before, but that's that's what they're doing.
What's interesting with this as well is that we're seeing that the fundamentals agree with the technicals here, and that's when you have a trending market like this, that's pretty much always going to be the case, right? Otherwise, you wouldn't have a strong trending markets like this.
Yeah.
If the technicals and the fundamentals would not agree, then you would be in more of a ranging or neutral market regime. And I've actually just now finished developing a range like a range regime filter, and I'm going to show you something interesting. Let's see that regime filter. Let me. No worries. Let me see if I can find it. Yeah. So this just a snapshot of what it looks like right now for the forex market. So this is a regime filter that is using, and this is sent over to it's a Discord server. It's easier for me to get the visually get it into the Discord. And these are the it's a system based on 7 different indicators, and it looks at the variables or the numbers from the indicators, and then it normalizes that to a number between -1 and +1, and then it creates a score, a composite score based on all the indicators, and then it categorizes it as a simple traffic light system, with green being advancing, bull market, yellow being neutral, and red being declining. And then it has a specific weighting to each of the indicators, depending on if it's a lagging indicator or if it's a leading indicator. The leading indicators has a little bit more emphasis. I think it's like 15% on 2 of the leading. It doesn't matter. But anyway, what we can see here is that currently ADNCD is the strongest forex pair right now, which makes a lot of sense because you look at the chart. It tells us that it has flipped into a advancing regime after being in a neutral regime for quite a long time. And if you look at the, let's see if I can find the actual regime, the chart for this one. It's actually pretty cool. AUD. Okay, I will I will generate one, and I'll show you what it looks like. But basically, the idea is to create a regime filter where, I mean, the most interesting thing with a regime filter is not just to understand what current regime the market is in, but when it's shifting, right? So when AUD NCD might be shifting to a neutral regime, it's going to be very interesting to see where that is. Maybe it's going to be up in this region. And the regime filter is based on, like I said, seven indicators. And it's not just random indicators, right? It's actually, what I did was I did research on any type of academic research in technical analysis. So I looked at research that has gone through peer review documents, or whatever that is called, that has actually been confirmed to have certain statistics, right? And that led me to 7 different indicators that have had proven results all the way back to the 80s and 90s of showing good shifts in regime. And then I took all of that, combined it into one, and it's surprisingly effective, actually. I can show you a chart on Bitcoin. Let me see if I can copy that one. Does that work? Okay, the image is too large. I have to just do print screen.
I just went long gold, by the way.
Nice. Good choice. So this is Bitcoin. And I'm actually quite impressed with how it caught this switch right here, which happened in, I can't see the dates here. But this to me actually looks quite interesting, doesn't it? So this is the 2017 bull market. This is the last one. And what's interesting is that it actually changed from, changed the regime after this top, and then it had some issues with that one, and then it confirmed there was truly a bear market, and then it switched right here. This is, to me, pretty cool, because this is actually the level where I have had my average entry in Bitcoin. And where did I sell Bitcoin? Well, I sold here. That is my exit from Bitcoin. And then it's actually quite interesting how these indicators together.
If you combine that, for example, with a regression model, the logarithmic regression model, or like the minus the pain of mine, what is it? Minus capitulation, I think, is the correct term for that. That could be very interesting to kind of spot, okay, when is probably the trend shifting into the other direction again, and then have this indicator, for example, as confirmation.
Yeah, and it works quite well on Forex as well. If I look at Euro USD for the last 5 years, and what's interesting about this is nothing new. And I don't even think it's very unique. I mean, maybe the only unique thing is the different weighting to the different indicators, how it's used in the index. But look at Euro USD. I mean, I must say that I think this is pretty solid stuff here.
The question is, did you back test the setting, or did you optimize the settings to fit the path? So are you in curve fitting territory there, or is it just as it is, without optimizing the individual indicator?
This hasn't been optimized at all.
Okay, then it's solid, man. Really.
This is the first chart it ever created on Euro USD without any optimization whatsoever.
Super solid, yeah.
Yeah, and it's I can see if I can find actually, you know what, I wanted to keep it proprietary, but it doesn't really matter, because anyone, in a couple of years, anyone will have access to it.
For example, I can see this being super useful for option trading, for example, for me to
it's actually
directional bias.
Really, so let me explain. Let me pull up the document that explains this in detail, because a lot of you watching here, you can probably just watch the replay here and probably create your own type of indicator based on this information, or understand Let me see where I can find this.
I was just going to say, what I've been seeing from both this and Bitcoin, I think if you figure out how to put in, because they're sort of slightly lagged, but I can see, whereas if you just put a slight offset of maybe it's like 60 days or something, everything seems to line up as like a nowcasting, forwardcasting type aspect, right?
So I can explain what it's all based on right now. So it uses a weighted composite score combining 7 indicators, each normalized to between -1 and +1. And like I said, it's a composite score that determines the traffic light regime, and the 7 indicators is based on research done by 2 people, George and Hong, in 2004 on the something called the 42-week breakout proximity. And the logic behind this is that assets that is trading close to its 42-week breakout on in a trending market tends to continue to trend, because it means that it has recently broken above its 42-week breakout. And if it continues to the upside, that 42-week level will always be trailing just below, right? So the idea is that if you're close to the 42-week breakout area after a breakout, the trend tends to continue. That is weighted at a 20%. And then we have the multi-timeframe trend, looking at multiple timeframes, looking at the simple moving average, the difference between the 12 and the 26, I believe that's the MACD, and then it's looking at the RSI. And then the very simple regime filter baked into this at 15% weighting, that's the research done in 2007 using the 200-day simple moving average, which tends to be a really, really good indication of the overall trend. We all know that the 200-day simple moving average is very simple stuff, right? And then it's another indicator called absolute momentum, and this is created by some Italian physicist that uses I'm not sure exactly what it's based on. It's quite complicated, but it's a dual momentum indicator. And then it's volume confirmation. According to the Dow theory, it uses the OBV to confirm that the volume is confirming the trend. So if you have rising OBV with a rising trend, that is confirmation. If you have divergences between price and OBV, then volume is not confirming the trend. And then we have the Weinstein stage, which is a 150-day SMA baked into the 200-day SMA. And the Weinstein stage is very interesting because it says that if the 150-day SMA is rising with price rising, it's in advancing stage. If the 150-day SMA is becoming flat with price above it also flat, that is stabilizing. And if the price is above the 100-day SMA and moving down, it goes into the next phase. So it has 4 different stages, and it calculates what price is doing in the context of the 150-day SMA. And then it has the also the 12-month momentum indicator. So all of those 7 weighted differently creates the regime, and it's based on 50% of this is leading indicators, and 50% of it is lagging indicators, and it has a 14-day duration filter. So it has 14 days has to have passed for a new regime to be accepted. So there can be a lot of shifts within those 14 days, and that won't register. So a regime has to have been active for 14 days for that to be registered. So it's always going to be lagging 14 days, but that doesn't really matter, because when you're looking at the higher timeframes, you're looking at this from an investor point of view. 14 days doesn't matter. I would rather be behind a top 14 days than actually getting in or getting out too early. So it's actually, I believe, this is. I think one of the coolest thing I've created, because it's so elegant in its simplicity. I've tried to create so many different things in the past using very advanced ideas. But then I figured, okay, let's just go back to the basics. What do we know that has been confirmed through academic research in technical analysis and economics? Let's just use that and then combine it into this. And I believe this is what like most of the professionals use when they talk about regime filters. So looking at Euro USD here, this would be an example where I would look for longs, right, until it shifts. But we also see that I wanted to go long on that breakout, and of course that would have been a great trade, right? But you can clearly see here that if you trade short in red and long in green, yes, you're going to miss a lot of opportunities, but you will be on the right side of market risk. And I think that's the key to this.
You could maybe combine this also with, some sort of oscillator framework that might help you to determine when we are in a trend, so when we are in a downtrend or uptrend, where might be the extreme points where price is going to snap back a little bit again. So like the concept of stochastics or something like this, to kind of help you. You still want to trade with a trend, but you want to wait maybe until whatever the framework is for the S oscillators is going to show you within this trend, we've now reached a pullback zone, for example, again. Or within this trend, we are in a zone right now where there's the danger of a pullback coming again. So you don't run into the danger, of trading with a trend, but buying at the highest price, and then it goes down first again. Eventually, it will come up, and you will be in profit. But going down first again, the position running against you might be something that most people, including myself, have difficulties dealing with. Then
I think maybe in that case, I'm thinking maybe. Because basically what we're talking about is this regime filter is basically a way for me to find out what the primary trend is.
Yeah.
And what you're talking about is the secondary trends, like the intermediate trends. So I might have to research how can one because basically what I could be doing then is to take everything here and try to quantify what time frames this is based on, and then simply just make it faster.
Yeah, I don't think necessarily on time frame. I think this, like an oscillator framework, you could also put on the daily. Like something like, how high is the chance that the momentum is exhausted already, or that the trend at this stage is, for now at least, exhausted? I don't know if I can make myself clear enough, like what I mean. Maybe I should like build upon your work and take some sweet time and then present to you what I mean. It's just an idea.
I can send you I can send you the source code to this, and you can use the cloud code.
Is it Python, or did you do it in PineScript?
This is Python. So nice. This is all original.
Financial research. You want to go with Python, yeah, always.
Yeah, of course. But you know what? I've just created. It's so insane. I've just created a Discord bot as well. So I decided to run it locally because I have, of course, the cloud session, and with GitHub, I have the web server on deployed on Railway, so everything is very automatic. But now Claude Code has the agentic teams, right? So you can set up an agent team and distribute all the tasks throughout the team, and then in an hour you've built a software. It's just absolutely crazy. So I've built this. I've integrated into Discord. I've also used now, right before the live stream, coded a Discord bot in, I'm not kidding, 10 minutes. 10 minutes. I have a Discord bot running in a channel, and I simply press a button and it just calculates everything and gives me everything, right? Now, what I've done as well is I've just taken all of this whole framework and asked it to create an indicator for me in TradingView, where it's supposed to show all the things that we should see on the chart, but in TradingView. And I have a very hard time seeing how that is going to work, but I will try it.
The thing about TradingView is it's quite limited also, because everything in your indicators basically always computed on their servers, so they only give you a limited amount of computational power there. That's why like some of the indicators I created also, they are like super laggy. They make my whole TradingView super slow because if I compute them locally, for example, on my machine in Python, it can use like 100% of the CPU or GPU power. On TradingView, on their servers, of course, they're not allowing this. This is why PineScript tends to be very limited if you really want to go deep into financial research. I see that also with some indicators where alarms do not fire, or they fire late, or they fire early and stuff like this. So eventually, if you guys also want to do, and I highly recommend doing that, go more into the depth of financial research, create stuff like Jonatan was showing to us just now, there's actually no way around doing that in Python. And you don't need to be a coder yourself. You have Claude Code. You have the agent teams of Claude Code for that now, and it's beautiful.
Yeah, I think definitely. And guys, you need to implement AI in your trading. That's just, I think, it's not. There's going to be no question about it. You are in a couple of years going to have tools that you would have only dreamed about today when it comes to trading, and you're going to be able to create your own systems, your own indicators, your own everything's going to be able to be created on your own. Now, I was like a little bit afraid of sharing most of this because I thought, okay, am I sharing an edge here? Am I sharing too much? But I know that I would never have been able to create what I've created now without the knowledge that I have on technical analysis through most of it through my CMT studies, because all of these indicators comes from ideas that I've gathered through CMT. So let's. I don't think this is going to work because this is just the first instance. But let's see. It's 500 lines of code.
Yeah.
This is probably not going to work, but let's see. This is the Clarity Edge regime score at the bottom. It's loading. Wow, is it actually working? This would be crazy. This is the first time trying it. Okay, let's go to Bitcoin.
It's a one shot. And that's also different, no? Like a couple of months ago, if you would do something like this, you would have gone like back and forth with ChatGPT or Claude until
it's actually working. This is crazy. This is insane. You can see that it entered the bearish regime on November 2025. That's the actual top. That's 16% from the top. And here you can see that the market is indecisive. It kind of goes in and out of neutral to bearish. Yeah, this is actually just like the chart. This is crazy. I can't believe that Claude. All I did was take all the information from the charts created in Python and just transform it into a Python script. And this is it. You see the composite score right here. It's declining. Let's go to AD and CD. AD and CD should be super bullish. Now, what's cool about this is I can now, advancing, and it started to enter the advancing here. Yeah, this is good. So, and I'm guessing you're gonna have alerts on this as well. So if I add alerts, it's gonna have here. It's gonna have alerts on regime turned bullish, bearish, neutral. The issue I'm having with this, and here you can also see all these 7 indicators and their score. You can see there's no volume confirmation here. I'm not sure why that's the case. Maybe it's because of the volume in the Forex market, but volume should be confirming this.
I don't think you'll get the. Yeah, you need that tick volume. which I don't know if that'll work properly through TradingView.
But I know that. But all it needs to do is just look at the OBV. It just needs to take the data from the OBV and see, okay, is it advancing or declining with price, basically. But this just blows my mind. Now, what you can do here is obviously see if it. The thing here is there's a lot of choppiness here, right? But yeah, very very interesting. So the way I would use this is, of course, to first get an understanding of what. Let's try the S&P 500. That's going to be interesting because the S&P 500 is something where it's just very easy to backtest, right? Because you can very simply see, okay, if I buy a bullish regime, sell in the bearish, and then buy back in a bullish, it's going to be very easy to see if you have outperformed the index or not. And it's very interesting to see that it just barely changed regime here in the April tariff dump. This one, it failed to track that one.
The question is here, if you, for example, use this as a systematic entry for stocks or indices or something, is whether you might want to just ignore the red phases. So not go short in the red phases, but just ignore them under the premise that over time stock markets will always go higher because the companies within the index are going to grow as companies are going to earn more, and so on and so forth. So maybe that's what I would try to test. You stay out of the market when it's red, for example.
I would say get into the market when it's red.
Or get into the market even.
Oh, you mean like dollar cost average when it's red?
Yeah, that's also interesting. Yeah, every day it's red, you start buying a bit more, for example.
That's probably the best. The best, like, always stay in the market, but buy when it's red, basically.
Yeah,
because especially with AI, like the company margins are gonna they essentially go infinite. Like, like, it's ridiculous. I was actually doing some further thinking on this today. Whilst I was sitting here sick, I was kind of feeling rubbish. I was like, oh, I'm bored though. I was sitting on the couch doing some reading. So I might try and put it in like a small summary. I might send it to you, Dirk, just like general thoughts. And then obviously you can talk about it on stream sometime as well. I'm kind of thinking 2028 is when we get the bubble.
Okay, interesting.
Yeah.
Why 2028?
Well, I'll put it all into the thing and the reasoning. Otherwise, we'll be here for for ages. But yeah, it's all the liquidity timing of things with the midterms, the playthrough with Kevin Walsh, where that will line up at the same time of acceleration of AI in general, some of the debt financing profiles, blah blah, this that. Yeah. So
interesting. Yeah, send it to me. Looking forward to reading.
Yeah, I would love to see that as well.
I'll try put my brain on paper for you guys.
Yeah,
It'll probably be scrappy. I'll be like this thing and then that thing and blah blah blah.
Now that I see this, I'm thinking I'm still thinking that the Python scripts that I have running is going to be more powerful than this and able to optimize better and build upon better. But now that I see this indicator, it's actually quite interesting that it got it on the first try, and it's actually showing pretty decent regimes here. I mean, gold is just
The thing is, no one's using AI yet, as much as it's apparently so big. Most companies can't use it. They're like constricted to like Microsoft Copilot, They can't use any of the open, like internet connected AIs, right? It's pretty much the equivalent of like ChatGPT 1.0. You know, it's useless basically,
Copilot,
right?
yeah.
So everyone's so behind, and that's because of security reasons, all that kind of stuff. So any of you guys learning this stuff, even though it almost feels late, you're actually way ahead,
Yeah.
right? And same in the hedge fund finance type world, like no one's using this stuff yet. Just the like tech forward companies like Citadel, Jane Street, these kind of players, like yes, they're using it. I'm pretty sure Jane Street cleaned up 10 billion this quarter, which is ridiculous.
Yeah, that was insane. But they got
They
banned
also
from
do a
the.
bunch of weird stuff, yeah, with spoofing pricing and all sorts of things. But hey, they're just playing the game. Right?
And that's the thing, you know, whenever you hear something like this, like you have like an investment bank or some sort of structure like Citadel, for example, and they're earning like billions of dollars, and you might think like, oh, they must be super advanced when it comes to trading strategies. In reality, they are not. You know, they are most likely exploiting something that nobody else is seeing, like spoofing, like the Nifty in India, for example, especially when it comes to options and stuff like this. It's sometimes it feels like, you know, don't follow what the big ones are doing, because they are probably doing something that's like only half legal. Like in Germany, for example, like a couple of years ago, we had this. They were abusing dividend payments in a way that they got the dividend when they didn't really hold the stocks, and they got the tax that was paid on the dividend also into their books. So it means they got the dividend plus the tax. And this cost the German taxpayer really hundreds of billions of euros. And there's hardly anything is done about it. It's like, oh, yeah, okay, it happened, you know, please, let's ensure it doesn't happen in the future anymore. Bad bank, you know.
What avenue were they getting dividend rights from? As like a major firm.
If you have an entity, I can only explain it at a very high level. If you have an entity, for example, overseas, outside of the EU, Dubai, for example, and you buy a German stock, and I think on the day you're supposed to get the dividend, you loan the stock out to a bank. And somehow with this construction, it means like you get the dividend, you don't have to pay tax on it, but you get the tax return also. There's some kind of weird loophole that used to be in German law. And it was hundreds of billions of euros that were just siphoned out of basically from the German taxpayer. And there were high-level politicians in Germany involved into this, especially our Chancellor Olaf Scholz, who always said, "Oh, I cannot remember anything. I don't remember about stuff like this."
So, like a technicality that you got paid a thing, but it's not a revenue source because you didn't have ownership rights over the underlying asset.
Something like this, I don't quite understand it as well. Yeah, but it's insane, really. And
in Australia, there's so many adjacent laws that you would get killed for that. Right? There's no way you could get around stuff. Yeah.
I mean, I had last year one time I forgot to pay my taxes on time by 1 day, and I already got this heavy worded letter from the IRS with fines. You know, we're going to fine you another 500 euro because you are 1 day late to pay your taxes, and it's not okay, of course, that I forgot it. Don't understand me wrong, but if I see like, how come you're like so much on my neck immediately when there are like billions of euros siphoned from taxpayers' money?
Yeah, it's insane. It's crazy. I mean, I had my one accountant of mine I had before the one I have now didn't really do a great job, so he was late with the yearly reporting. So I got a letter in the mail saying I now have to pay 800 euro because I'm late. And I'm going to be paying, if I don't give it to them in 1 week, it's going to be another 800, and then it's going to be like 800 times 3, and after that they're going to remove my rights to run a company, which is like insane. 3 weeks, and after that I can't run a company anymore. It's illegal for me to run a company in Sweden. which is like, yeah, good, nice, you know.
It's
what
not
if I'm like
constructive
on a
period.
vacation and the guy's sick or whatever, you know?
Yeah.
Exactly.
Then you have to go to court and do all this other stuff and blah blah blah, and then that costs money and the whole it's like, and then it comes to this point where you might as well just found the money somewhere else and paid it. And
the courts are super busy, you know, so it's going to drag on for 2, 3, 4 years until decided.
And it costs the actual the tax collectors money as well for the court, which ends up being more than the original pay. It's like just give someone like a payment structure, let them pay it out over time. It's fine. God, yeah.
I've just started a backtesting. I'm gonna try to backtest this. So I've asked Claude to run backtesting on this. Basically, said buy 1 Bitcoin when it's green, and then sell it when it's red, and then buy back when it's green again. And then asked it to do the same on the S&P 500. So we'll see. We'll see. I mean, we do see that it's a lot of choppy price action here, but overall, it looks good. And then I'm gonna compare it with just holding, and I'm going to compare the Sharpe ratio and the Sortino ratio, both of the back tests, and we can see if it's actually better from a risk-adjusted return. Might not be absolute returns better.
I think on momentum type assets, stuff like Bitcoin or potentially S&P, NASDAQ, that kind of thing, I think it will. I think on currencies it might be a bit hard.
Yeah.
Like obviously,
but this is
carry, swaps, whatever. But on momentum sort of stock-based or momentum type assets in general, this looks very nice.
Yeah, I mean the whole idea with this is to create something for the equity indexes, indices, commodities, and Bitcoin, because the whole idea here is for me to, for the 2 macro, right? For the 2 macro, they do a lot of fundamental analysis, but they also say like, okay, our fundamental analysis is only for you to understand the signals, you know. And so they have a regime filter like this one, and then it talks about why the regime filter is shifting. So when there's a technical shift, they get out of the market. And then they explain why they get out of the market and why it happened from a macro point of view. Now, I don't care about the fundamentals. I don't care about the macro. So I only care about price. So when this is flashing red, if on the S&P 400, for example, if it starts flashing red, and I see from a market structure perspective that we're breaking down, like for example here on Bitcoin, if I had this here, I would look at this and say, well, okay, so if we break that one, I'm just going to get out of the market. And it broke and it retested, and then it went down how much? Like 40%? Yeah, 40%. And I could have done the same thing here, but then got in when we broke that level, right? When we had that breakout. So
it's definitely very aligned with the 200, obviously, right?
Yeah, this I think this is the 200 SMA. Yeah, exactly.
Yeah.
It's the 200 SMA, I believe, is one of the more important indicators in this, because you can see right here the 200 SMA starts pointing upwards with price above it. Here it points upwards but price is below it. So the 200 daily SMA is definitely a very important aspect to this, but it doesn't have the highest weighting. So
no, it's good. I like it. It's very cool.
Likewise. Also getting like kind of the idea in the back of my head now. If you, as I said, I can see this working very well, as we actually just saw on like assets that long term tend to trend up, like the SP 500, for example, like Bitcoin, you know. And then you kind of have a strategy like you were suggesting, LJ, start buying, you know, when it turns red, with the goal of not selling, but to build wealth, you know, over time for your retirement or whatever you have planned, and do this specifically like for a basket of assets where you see that long-term growth. So not only maybe an index or Bitcoin, you could put individual stocks in there, something like Nvidia, for example. I think Apple, stocks where you're sure, like, okay, in like 10 or 15 years, they are probably still going to be around. They are probably still going to earn money. Can also be something like Walmart. People always need to eat, or McDonald's or Coca-Cola or something like this. So we're in Warren Buffett territory then, of course. And then you kind of can backtest maybe also like what is the optimal percentage in allocation. So how much should go when it turns red of my cash that I have available into S&P 500? How much in individual stocks? How much in Bitcoin? Maybe I want to be a little bit more conservative there because we have those large swings to the downside, obviously, as well. I think a really, really good tool that combines portfolio adjustment and timing when to invest into a portfolio.
It's very interesting that you mentioned this, because this tool right here is exactly what it's meant to be. So the idea here is So so what you're seeing right here is part of something much, much bigger, right? So I'm paying quite a lot of money on a monthly basis for. I'm buying research, I'm buying analysis from different firms and different research firms and macro analysis newsletters and things like that. And what I've figured out is after doing that for about a year and really diving deep into it and trying to understand the processes that they use and trying to also reverse engineer some of their signals, I've come to the conclusion that I can do this on my own. I don't need to be paying for all of that. I know why they're selling. I know why they're buying. It's very clear for me when it comes to technical analysis. So I will simply develop this on my own. And what I'm doing here is this tool is going to be taking most of the work from this tool will be done on my my portfolio, my long-term holdings portfolio, which is in the stocks, gold, and Bitcoin. And this will help me understand when is the time to buy, when is the time to sell, when is the time to. And then also, I'm going to be adjusting the portfolio allocations. Basically, what I'm doing is I'm doing risk management by using volatility adjusted position sizing, looking at the beta of the asset. Obviously, Bitcoin being one of the highest beta assets, so therefore should have a lower size in the portfolio. The S&P 500 lower beta than Bitcoin and gold. Therefore, that it can be the highest portfolio allocation in that portfolio. And then, of course, I'm going to have a portion of the portfolio will be in swing trading, the forex market, and then I will be looking at the beta of the returns of that trading part of the portfolio, and then I will allocate certain percentage of the overall portfolio into that swing trading. And this will be the driving factor of all the decisions made in the portfolio. Basically treating my whole financial life as a portfolio. Because now I've realized now that I'm doing the CMT3, I realized that now it's all about portfolio management. So in CMT1, it was like understanding technical analysis. In CMT2, it was understanding how to combine everything into a system. And then CMT3 is actually how do you manage a portfolio using technical analysis. And that's why I got the idea of okay, I'm just going to create this, because now I have all the knowledge that I now know how to diversify and risk manage a good portfolio. And I noticed that okay, I need an unbiased, unemotional way of making the big decisions. And these are the big decisions. When should I buy Bitcoin? Why should I sell? Okay, so I have the results of the back testing. Okay, so on Bitcoin, so on Bitcoin we have these are insane numbers. I obviously have to start from probably 2016, but the return on Bitcoin using the strategy was 15,000%. Nice. The buy and hold is 14,000%. Analyzed return for strategy is 55, and the buy and hold is 54. So only 1% different there. But
did it buy one Bitcoin every time it was in the red zone, or only on the first bar that went into the red zone?
It bought one Bitcoin when it became green, and then it sold it when it became red.
Oh, okay. Then I misunderstood it.
Win rate,
but not every time. Like for every daily bar that it was green.
No. Only the shifts.
The first one. Okay.
Yeah, and it ignored yellow, so it's only like buy green and then get out of the market on red. So that's the first retest, which shows that there's something to this. Now I need to obviously compare the. I'm gonna. With Bitcoin, you can't backtest Bitcoin from its Genesis block. You kind of have to start with like 2015 at least, or 16. Okay, so for the S&P 500, that's interesting. So the strategy gave a analyzed return of 7.7%, and the buy and hold gave 8.8%. So it's 1% less profit on the strategy, which doesn't mean that it has to be worse. It can actually be better if the risk-adjusted returns are better. So I'm gonna see now the Sharpe ratio and the Sortino ratio.
I'll be back in 5 minutes. Need to get some more coffee.
Yeah. Isn't it just stupid that we can do this?
I know, it's crazy, dude. Like once you start using it, you're like, oh, bro, this is good.
Yeah.
I think that's the thing. As like people are watching AI stuff, and they're like, oh yeah, that's cool, from afar. But once you actually start doing it, you're like, hang on, I can do whatever I want, and you can start doing.
I've set up my own email server, so I'm just telling it right now to create PDFs of the results and send it to my email. And it's literally gonna send me a PDF to my email inbox with the backtesting results, and this is running on like a $500 mini PC in my living room.
Yeah.
It's just mental. It's just a whole new way of trading. And people are watching this and they're viewing this like, oh, can you give me a setup on gold? I'm like, what? Go
develop this, and it'll give you 800 setups on every asset.
Yeah. You can literally just copy paste the chart of gold with all the indicators on it, give it to Claude, and then it's going to say do technical analysis on this, and it's going to tell you, oh, there's an RSI divergence on support, you should buy here. It knows how to do technical analysis. Therefore, like I have to kind of move away from the traditional way of doing technical analysis, but because now AI can do it. And people say like, oh, they're not good at reading charts. They're very, very good at reading charts. Not only do they read the charts, they create a whole Python script to also create the charts with the indicators and everything, and know exactly like, yeah, it's stupid. It is just stupid. It's a very fun. It's a very fun time to be a trader. That's for sure.
Yeah.
So we'll see. It's currently doing all the analysis. I'm gonna see when I get my email to see if they have anything.
But yeah, trades wise, guys, like we're still just bleeding out. Euro dollar, Aussie dollar, pound dollar, everything. Dollar yen's still just creeping higher, so it's the same one-way direction. Like we're talking about when Rich and Will were on just earlier. So at this point, it's probably waiting for that to actually top out. The dollar index has had, we did have a slight break of the lower structure. We're now climbing back up. And we're sort of waiting for that next direction coming towards New York. News-wise, there's not too much. We do have some Fed talk later. And I guess the other big one today is going to be, we do have NVIDIA earnings. So that'll probably be the drivers for the market. We had Trump talking earlier. And we'll see if when he wakes up again, if he tweets out. So right now we're probably just waiting for the majors to base at some kind of point, and for the dollar to at least take a temporary turn. Gold is pretty mixed. We've been up, we've been down. Same deal. It's trying to find direction.
What do you think about EU? I mean,
at least for the session today, I'd probably be looking at buying somewhere down here after such a drop, you know. I did think we might actually hold up a little bit higher after that sort of the break of the recent kind of lower range that we had. But it's mainly dollar yen driving everything. I did go long dollar yen earlier today at about 155.60, but I jumped out very early at 155.95, unfortunately. So it was that last dip at the end of Asia today. So I missed out on, I don't know, a good 80 pips or something, unfortunately.
Yeah, that sucks.
But either way. So I'm personally waiting for these guys to turn up. So once euro bases, once dollar yen finds a top, then maybe at least get a sort of intraday for the session kind of scalp type trade.
Okay, so let's see if I can do a. Like, I mean, I'm just trying to figure out where. Do we have some good trends anywhere? And then are we hitting any interesting levels that might be tradable? So I'm going to look at the regime here for AUD CAD. I believe it should be. Yeah, I mean this is gonna flip. This is gonna flip bearishly, and I wanna go short on Euro CAD. I think it's just a matter of time, because this looks very much like either it's just a new. Like, there's a lot of changes here in Euro CAD because we're trading in an area where we haven't traded above for a very long time, and historically we've usually don't trade for long up here. So I do think that there is a possibility of breaking down here and then starting a new downtrend all the way down to 1.5. I'm just waiting for that, but that's going to take can take months if we're unlucky. And same thing here with Euro NCD. I'm also waiting for this to break down. Interestingly enough, we also see the regime shift here, and it seems like it happened when it went below the daily 200 simple moving average, which is it's just a very simple. It's very simple. It's just a very simple way of looking at price, but it's surprisingly effective when you combine it with price action. Euro GBP. I'm also thinking.
Just give me 1 sec.
Yeah. For Euro GBP, I'm also thinking something here to the downside. Euro AD, obviously, I missed a very good trade here last end of last year. Like that, these are the typical setups that I look for. I wished I would have shorted this one. So that's one of the. That's just a typical trade of mine, where I look for that move to the upside, consolidation, which would be distribution range in this case, and then a breakdown. So that's what I'm looking at. And if you look at, this is Euro AD, and then if you look at Euro CAD, you'll have basically the same idea here, Euro CAD and Euro AD. Euro AD has done what I believe Euro CAD will do. And then Euro USD, looking at this, I'm obviously quite bullish on Euro USD. And I want to see Euro USD trading to the upside here to somewhere between 1.22 and 1.25. The question is when is the time to enter? And I do believe that it has recently hit the 200 simple moving average here. I mean, obviously, the risk to reward is if entering at current prices, the risk to reward is actually not too bad. It's going to be an almost 3R up to that level. But I would love to perhaps get in here, you know, because I believe this is the level where it's very close to trend invalidation. So somewhere in that area, I'm thinking I want to get in on Euro USD, because then it becomes a 6.5 R trade, which is obviously much better. I would probably exit here, so we're talking about a 5 R trade. So that's what I'm waiting on for Euro USD. Obviously, looking at the regime filter here, I don't think we don't really have to look at that. We know that Euro USD is an overall uptrend here. So that's what I'm looking at, Euro USD. GBP CHF, not interested. I can just remove that one. GBP AD, now this looks oversold. This looks oversold. It kind of, when I look at this, I get the feeling of there being, oh, let me change the color of this one. I definitely get the feeling that it's oversold. And I will be looking at this whole area as a potential buying opportunity. And I guess one thing we can do here is look for RSI divergences. It's important to note that GBP AUD has hit a historic low on RSI. If we zoom out, this is the daily RSI, and not very often does it hit that level, but it doesn't really matter. What matters is potential divergences between price, and that's actually what we're getting right here. So if you go into the daily, we do see something that looks like actually looks like a head and shoulders, an inverse head and shoulders pattern on the RSI. You can see here that you have a clear resistance here on the RSI. Price is in a downtrend like this, with RSI creating that low and then a higher low, which is a divergence between the momentum indicator being the RSI here and price. Now let's look at OBV. OBV is still trending to the downside. What I'd like to see here on the OBV is potentially breaking this downwards trending pattern. So GBP AD looks very oversold. It's showing potential signs of bullish divergence on the RSI. If we can get a breakout on OBV and volume, we might even be able to wait for confirmation on price, because the risk to reward here is awesome. We can get in on a breakout here, stops below that one, and the risk to reward will even be 2R on confirmation. So I quite like GBP AUD here. And if we enter at current prices, we can have the stops all the way down here and have a 3R. I like that. And because of the fact that this looks so oversold, I'm thinking there might be a relief rally or even a dead cat bounce. And even if we get that, we'll have the opportunity to protect this position, because I mean we might get a move like a bounce up here, and then move stops down here, and then it's going to be a temporary relief rally or a dead cat bounce, and it's going to take out the stop and potentially move lower, which gives us another opportunity to perhaps enter on accumulation in this area. So I'm probably going to enter a trade on GBP AUD.
I'm now long gold. I short.
Yeah, I'm stopped out of my gold. I was a bit too early on that one.
Yeah, so I jumped in into here on this dip because I was long early through here and jumped out of that. I've jumped out a number of positions pretty early today. So that guy jumped in through here after we seemed to be picking up, and then we just sort of stalled out. So I think it was on that candle I just got out because I was like, oh, this is not great. Originally, I was looking to hold that right up to the top of the channel, hoping we'd actually stay in the channel. But yeah, we weren't really kicking on. So jumped out of that, back down here. That was a tiny trade. And then I saw we broke this channel and we still had downside pressure. So TP'd on that there, and then now I've jumped in here. So we'll see, because we may still come down to about 51.50, perhaps.
Interesting that you say that. That's the area I'm looking at, like to re-enter that long, actually, around 53.
Yeah, that kind of seems like what we're doing at the moment.
65, I got stopped out just now. Let's see.
Yeah.
Coming down now.
Where you're trading gold like on the lower time frames here, I'm assuming.
Yeah. Need to prepare this.
Yep. That's how you lose money.
Yeah, it's for an evaluation account where I don't have any other strategies right now, and I don't want to let it go to waste, so I might as well go a little bit crazy on that one.
Yeah, that makes sense.
So
man, there's a lot of interesting movements here in the markets. It feels like we're at an inflection. Is it inflection point? Is that what we say? Inflection? In
Inception.
Yeah. Okay.
Yeah, I mean, everything's ran pretty hard. I think the Dixie is just trying to like top out, maybe get like a bit of a double top as well. As far as the majors, Aussie dollar's getting smashed after today. I've got about 70.70. Looking out somewhere down there, across the bottom. I don't really like this price action overall.
You don't like what?
I don't particularly like this price action overall. I thought we would have sort of paused a bit earlier and maybe had a bit more back and forth. It's quite interesting that it's been pretty relentless, per se.
It is very relentless. But this could be interesting. That one, and then bounce off back to 100 or something. Let's see. Yeah, what else? I'm also looking actually at dollar yen right now, so it would be nice to see some action at the upper band now again. So this is typically where I would look for a signal from my swing indicator to short dollar yen, to sell the dollar, like for a bounce back into the area of 153.50, but gotta be a little bit patient. By the way, is Trump still talking today, or is that already behind us?
That's behind.
Yeah, that already happened. Yeah.
Did he say anything about
the longest State of the Union ever?
Yeah. What did he say? I didn't follow it at all this morning.
He said, but bunch of stuff.
So you all follow it.
Nothing in particular. Nothing important, really.
Other than he's the greatest, the best, the most popular, the smartest, the most handsome, and so on and so forth.
Yeah, pretty much. There was not a lot of. I don't think there was a lot of comments, like no market moving events. No market moving comments, I believe.
Okay.
It was more of the same. It was more of like a kind of a talk to the people, voter base, pretty much just shoring up confidence around the trade tariffs and markets and AI and this and that, and then him just talking his normal stuff. So
Okay.
I'm thinking, do we go long on AUD JPY? I mean, it just broke the highs today. It's a very clean breakout. I think it just broke actually above all-time highs today.
You want to ask the Aussie expert about that?
Yeah.
You are muted.
My bad. My only concern is that dollar yen's kind of topping out.
Yeah,
So
exactly.
obviously we did have the good Aussie news today, and then we've seen the yen getting sold off further, so hence dollar yen higher. That relates back to the comments from the Japanese PM the other day asking for the Bank of Japan to hold off on rate hikes, at least for time being. So we've seen that big push up once again in dollar yen. But I think at this stage we might be sort of slowing down, at least for today, especially with no other financial data on the cards. There'll be some Fed comments later, but apart from that, I like to buy on a dip. The one piece I will say is obviously Aussie dollar has come right off. So if the Aussie recovers, AUD yen will probably hold up a bit better than some of the other yen crosses. But that would be the only basis for me, at least intraday for today, buying it.
Man, I missed pulling the trigger at gold. I wanted to enter at 53 and we came close.
Yeah, I've got a second entry at 51.50. So
but I put in a limit order here, I think.
I would really like to see a break above the highs here on gold, a break above 5,250, so I can start securing this. It does seem like it's losing momentum here. Looks like it might want to come down and test the breakout area, maybe even the 5,000 area here. I do have very wide stops though, so hopefully I'll be fine. We'll see.
Yeah, I pulled out of stuff way too early today on a couple occasions.
Right. No, the only thing I've made money today was my Ethereum trade earlier.
Like, that's where I pulled out on the Aussie dollar short. Because Eurodollar was still running higher and we weren't really relenting. And there are some higher levels up here that are sort of the proper resistance for the Aussie. But yeah, I could have kept holding this the whole way down. But I jumped out up here, so absolute waste of a trade. And same with the dollar yen, right? Like that's where I jumped out. It ran higher. So.
Yeah, but I got the email report on the back testing. Wow, there's a lot of shorts here. It's crazy. Okay, let's take a look at this.
What were you back testing now? I didn't get it because I was away.
I back tested the is buying and selling based on regime shifts on Bitcoin and S&P 500, and I did another back test starting from 2016 on the Bitcoin because I feel like that's more applicable. So we can see the this is interesting. So this is the why can't I copy this one? Okay, so we can begin with the drawdown comparison on Bitcoin, which is quite interesting. So we have the this is the drawdown comparison between buy and hold and the strategy. Buy and hold is purple and the strategy is green. I don't know what this is. I think I probably exited there, right? So you can see that the drawdown is interesting. The buy and hold obviously has a much deeper drawdown here at that bottom. The strategy had around 50% drawdown, while buy and hold had almost, I think, 75%. So there's a huge difference between 50% drawdown and 75% drawdown, obviously. And you can see here, currently in the current drawdown as well, the strategy would have exited around 25% drawdown, and Bitcoin is currently in like 45% drawdown. So that's nice. But what about the actual numbers? Let's take a look. I think it might be just easier for me to open up a. Bless you.
Sorry, I couldn't pause. Couldn't mute myself quickly enough.
Okay, so this is the actual PDF that it generated. It blows my mind that this is possible to do in like just a couple of minutes. So this is the PDF then. Let me switch over. Okay, so we got the chart ratio of the strategy versus the buy and hold is slightly better at 1.087 and 1.005. Sortino ratio is 1.335 versus 1.026. So Sortino ratio and chart ratio is better. I don't know what this is though. Max drawdown of 8,000%. For those of you watching, that's not correct. You can't have a drawdown of 8,000%.
Probably calculating it from like the initial start, and then like a drawdown towards the end of it.
I don't know what.
And then it's calculating here from like say like 10K, and then you've got a mil, but it goes down, I don't know, like 600K. That's going to be like 8,000% or something like that.
But this must just be an error in the way it's presenting the numbers, because if you're looking at the chart ratio and the Sortino ratio, there's no way that it's being calculated on minus 8,000%.
Yeah, that's what I mean. So it must be,
yeah. Anyway, what we see here is that total returns are higher, analyzed returns are slightly higher. So you're actually getting better analyzed returns, lower volatility, better Sharpe ratio, and better Sortino ratio. So on paper, this is better.
What is nice is the comparison between average winner and average loser also on Bitcoin for the strategy. Is that correct? Like,
yes. Average winner 300% and average loser 8%. That's just insane. But that's just what Bitcoin is. And then here's the actual chart with the signals. So you can see it biased in the beginning of 2016. Obviously, this changes everything, because if I start in 2018, we might have very different. I think this is anchoring, not anchoring bias, but you're anchoring backtesting on a win, which sets the backtesting up with a cushion of winning. But you can see here what happens, and obviously it catches the bull markets and the bear markets. And then this is the regime strategy versus buy and hold. Regime is green, and then buy and hold. So you can see that you are getting out and in at overall the right time, which is interesting. Okay. But the interesting thing is
that's the interesting graph. It's like one trade makes up a majority of the profits.
Individual trade P&L. This is 1,500%. That's it's an issue with. But now it gets interesting. The S&P 500, right? Because you can see there's quite a lot of signals, quite a lot of choppy signals here. And here, obviously, the S&P 500 buy and hold outperforms the strategy long term. But the question is, does it outperform in terms of absolute only? I mean, here you can see the drawdown on the S&P 500 is actually 2008 better drawdown. But then you have pretty much equal drawdown here, more drawdown here. So this is an interesting graph. This shows that it's capturing most of the upside potential, but not all the downside potential. So the Sortino ratio should be better on the strategy. I don't know what this is. Let's go up and actually look at the numbers for the S&P. Okay, so strategy for the S&P 500, 341 versus 438. Analyzed is lower, but volatility is 16.5 versus 23.5. Sharp is slightly better. Sortino is just slightly better. Max Drawdown is just slightly better. So I wouldn't really call this a success, even though on paper it is better. It's not much better. But it's interesting that it's actually better on paper, even though not much. And I haven't done anything.
The thing is probably
it's got potential.
It got potential, but if you factor in something like trading fees, for example, your Sharp ratios and Sortino rating are probably going to be around the same as for the buy and hold.
Yeah, exactly. Especially when you're, maybe getting in and out of positions using ETFs or ETFs, and you're maybe getting out
taxes.
with.
Yeah.
So
that's the thing. Yeah, exactly.
And then there might be fees on the ETFs and things like that. But it's important to remember that this is not a trading strategy. It's just a filter that tells you now it might be a time to get out of the market. Now it might be a time to get into the market, and then you look at the actual market structure on that. And remember, there's no stop loss here. You can't calculate return in R because there's no stop loss here. So if you're actually trading this instead of investing based on this, you might have much higher risk-adjusted returns. But it's interesting that still very interesting, and it tells me that okay, this is actually something that you can go with if you're a risk-averse investor, because you're capturing most of the upside potential, but you're not capturing all the downside potential. And if you're invested in Bitcoin and you're holding Bitcoin as just a buy and hold strategy, it's not very nice to have 90% drawdowns on your investments. That's you're gonna have issues with that. It's much easier to say, okay, I'm getting out here at a 40 to 50% drawdown, and then I'm getting back in when we're in a bull market, or once it gives you signals to exit the market, you start thinking about exiting and then deploying a dollar cost average strategy on it, which I'm now thinking, looking at where we are on Bitcoin. The signal has triggered long time ago on Bitcoin. It triggered in November, right? So is this a good time then to start the dollar cost average? Because I can show you what I'm not going to say projections. I'm not really doing projections, right? But I do see a potential. Let's see, a potential path forward for Bitcoin. And if this is something that might happen, where you see that we're going through phases of distribution and accumulation, and if we are starting to see accumulation maybe down around, if this is the correct one. You can see here that we RSI went into the oversold territory on the weekly. This is the weekly RSI. You can see right here. It's at its lowest point has only happened 3 times, which means it has no statistical significance at all. I don't even know why people, talk about it, because it doesn't really matter. It happens only 3 times in the past. But what's interesting is once Bitcoin enters that region, we also see, I believe it was on the MVRBC score, I believe, maybe it was, we start entering a buy zone. And when that happens, last time it happened, we actually went down 30% more. So people are looking at this and saying, oh, this is a buy signal, we're going to be buying here. But it's just the beginning signs of a potential buy signal that might come in 3 months, right? So we dropped 30% more when that happened last time. And 30% more would be down to 40K. And I'm thinking there might be a case to be made for this to be an accumulation zone somewhere within this region.
And the thing with the RSI and Bitcoin is you cannot read it in a classic way, the RSI, because it's such a heavy trending asset. Normally, when the RSI reaches under 30, it's actually like you were showing basically just now, is actually an indication that we really have a strong trend. So it's an indication that it's wise, for example, to play more of a short side. Opposite of that, also, if it reaches over 70, it's usually an indication that we have a very strong uptrend.
And there's been research on that. In the stock market, when RSI reaches an extreme, it means that a strong trending move is beginning. If RSI, especially in the stock market, because it's inherently if you look at bullish, exactly. So if you have an extreme reading on the RSI, that just means that something new is happening and a new trend might be forming. So then this is the thing that people don't understand. When Bitcoin breaks to the downside with a lot of violence, a very strong move, and you have a extreme RSI reading, that basically tells you that, okay, we're in a very strong bear market, and we're probably going to continue this trend to the downside. So it's not a buy signal. I actually got a request for a commentary on a website that were writing an article, and they were asking me, well, we're getting all of these buy signals on Bitcoin. Why are we not bouncing, right? We're getting, the weekly RSI and the Sortino ratio and Sharpe ratio, whatever. Like they had a long list of buy signals for Bitcoin, and I basically said, well, I looked at all of these buy signals. I did some research, and I saw that none of these buy signals have ever happened more than 3 times in history. So first of all, I said, okay, well, it's a completely insignificant number of occurrences for there to be any statistical significance to this at all. And just because there's confluence between these indicators flashing doesn't mean there's correlation between what's actually happening in price. And historically, when these buy signals are triggering, you have like a 30 to 40% decline in the price of Bitcoin before the bottom is in. So you see right now, I believe I was one of the first to start posting on the RSI printing, because I had an alert on the 20 level for the weekly RSI on Bitcoin. So as soon as that started flashing, I went on Twitter and I said, okay, RSI is at a historic low right now. And then I didn't write anything else, because I knew that people were going to be retweeting that and saying, okay, this is a buy signal, we should be buying here. And that's exactly what happened. We had the whole Twitter started blowing up with people saying, you need to buy Bitcoin here, showing them that you're hitting the weekly 200 SMA and RSI is this low. But the reality with the RSI is that the whole wording behind it, oversold and overbought, is really not the correct way of using it. Just because something is oversold doesn't mean that you should be buying. It just means that it's very strong momentum to the downside. But what is very useful is the divergences, especially when you see like weekly divergences on between price and RSI on Bitcoin when you get into an accumulation zone. That's exactly what happened in. Go back here. Look at the bounce here. You had a beautiful bearish divergence on RSI. I mean, bullish divergence between price and RSI. And I think that's one of the strongest way of using RSI and momentum indicators. You can of course use look at the MACD as well. You have a buy signal on the weekly MACD, and it starts trending upwards while price trends to downside. So I believe that's I'm not going to say correct way of using it, but I believe that's one of the strongest way of using momentum indicators. So I guess the question here for me is this the time where we start accumulating Bitcoin, or
I think like you're saying, like it's relative strength index, right? So it's always relative local to what's going on. Like you're saying, you can print lows, rise back up, but the market structure is still very much bearish, right? And you'll get another, collapse lower.
Look at the. Yeah, sorry.
No, it's right. Yeah, go on.
Look at the difference between the log scale and the arithmetic scale. This is what most people are looking at. And here you see just an insane drop. Like, this is crazy. You look at this and like, oh, this got to be the bottom of Bitcoin, like it's just dropped so far. But then you put on the log scale and you see that in relationship to the actual trend, in percentage-wise, it's not really that huge, in dollar value, which is the arithmetic scale is based on dollar values. Each move on the arithmetic scale has the same dollar value instead of having the same percentage value as on the log scale. This looks massive, but when you're viewing long-term price action, you should always be using the log scale, because that gives you a better representative represents the percentage of the moves much better. So I would just look at this and say, okay, if this is truly the beginning of the bear market, we're just hitting our first major support in a bear market.
Exactly. Give me 1 sec. I just spilled my coffee before.
Yeah.
All right. You know what? If I look at like fundamentals, I mean, I don't need to tell you, Jonatan, I don't need to tell you guys out there that I'm still a big fan of Bitcoin, that I'm starting on a monthly basis right now to accumulate again. But one of the things that's a bit different, I think, from the last bear markets is that we see a lot of the big mining companies basically just giving up on mining and leaning towards building AI data centers now. So they are saying like, oh, we're not going to return to mining, and instead we are going to use the infrastructure that we have, the warehouses also where we had all our miners formerly, for AI now, to provide like data center services for AI, especially if they have a lot of rigs of GPUs. That is, no, I mean, that's not typically for Bitcoin. You don't use GPUs for that anymore. But I think this is like parts of the reason also why we see at this stage already, at this early stage in the bear market for Bitcoin, already this massive selling. Because some of those large companies out there that were sitting on a lot of Bitcoin from mining, they're just selling. They're liquidating them because they want to reinvest into IT infrastructure to build up AI data centers or data centers used for AI services instead of returning to Bitcoin mining. It's kind of so a bit like what we saw during the last bear market with China, banning Bitcoin and so on and so forth, is like happening a bit more at a grand scale now. Does that mean Bitcoin is dead? No, but it's leading to more volatility.
Yeah, I must admit that when it comes to Bitcoin, or when it comes to any type of investment, I'm very. I try to be very unbiased, and I try to be honest with myself, with what I'm seeing and what I'm feeling, and I'm having conviction in the future of Bitcoin, but as they say, strong convictions loosely held. And one of the reasons why I'm not buying this bear market for Bitcoin, I'm not dollar cost averaging, is because I have a feeling the future of Bitcoin that I'd never had in past bear markets. In past bear markets, I was almost certain that we were going to go up again. I think we're going to go up again. But there's less there's less conviction in that this time around, because I feel like Bitcoin might not have lived up to what I wished it would have been today when we first started talking about the future of this technology in 2017. It might not be so much as Bitcoin in the future as, and it pains me to say this because I've always said Bitcoin, not crypto, but now it's like maybe it's about blockchain and not Bitcoin, which is, it pains me to say because I've always felt like from a fundamental perspective, almost been like a Bitcoin maximalist, right? But it might also be the case that this is a 17-year-old failed experiment that spawned a new technology called blockchain. You know what I'm saying? Like, do you guys feel that as well?
Not really.
I know what you're saying, but yeah, I don't feel it just yet. I don't think.
It's like, for me, the feeling is the same as in the other bear markets. And
yeah,
back then I also like kept asking myself, okay, has anything really fundamentally changed for Bitcoin? Like you said, for Bitcoin, not for crypto. You know, if we talk about altcoins, it's a whole different story. At least in my opinion. But for me, it's like, okay, what is Bitcoin supposed to do? Supposed to create a new block roughly every 10 minutes. The system itself is self-adjusting, meaning if there's not enough hashing power anymore, then the difficulty is going down. So it's balancing itself out. And this is still happening. What that means for the price, like, are we going now back to 20K? Are we going to hover around for the next 5 years at 20K? I don't know. But I wouldn't be surprised to see like this whole cycle of rinse, repeat, bear market, then 2 to 3 years of bull market repeating itself again. Once this whole AI thing gets a little bit saturated as well. By saturated, I mean once the margins for data center, I know there's a huge demand, but eventually the margins for data center, the cost in relation to the profit I can make with a data center are going to get as low that maybe Bitcoin mining becomes attractive again for those vendors. So if something, you know, bad, fundamentally flawed or based on a fundamental flaw would be happening for Bitcoin, it would have happened already. This is not the stage where this would happen. This would have happened maybe in 2013 or 15 or 17. But now there's too much money also from institutional side that is already pouring into this. And the value of Bitcoin, in my opinion, comes from the decentralized network and not from the fact that Donald Trump is, you know, propagating it or that BlackRock is buying it or something. It's all about the decentralized network.
I agree. And I think the whole crypto sphere, I mean, if we get a bunch of AI going wild, you know, how are they going to transact, right? They're going to use crypto and try and get humans.
Trump coin, of course.
Stuff, right? Yeah, Trump coin. So yeah, I think it has legs. Like you were saying, I think every bear market, that kind of thing we have, like everyone goes through this cycle of like, is that it? Is it over? You know? Yeah. I mean, it's the same as stocks. Any given industry, this, that, the other. I think the fundamentals are all still there, like you said, Dirk. So I will say, have a look at the daily chart for euro dollar now, Jonatan. I got to say, if we don't recover today on euro dollar, this looks. Look at the candle we're currently printing. This looks nasty. Probably have to zoom in a a bunch.
Wait a minute. Yeah. So yeah, what I'm still, yeah, it doesn't look very good. Looks like it might be breaking down, but that there is, it looks, I don't like how this is going to be acting as, I mean, this is very strong resistance. I don't like how we broke out of the range. We signaled very clearly that, okay, we're breaking out of the range. We're probably going to continue to the upside here, but then we formed that type of, ascending triangle type of pattern. Again, entry from the downsides, it doesn't really matter. But what I'm looking for is, I mean, Euro USD is bullish to me unless we break below this area. If we break below that area, then to me is very, very clear that we're going to start retracing downwards wherever that is going to be, because we have a lot of momentum that happened here. I mean, this whole move right here is, I think, 2 or 3 daily candles, which is just insane. Same thing here. So that feels like there's a lot of gaps here that would make sense to see them getting filled. Not gap in terms of like opening gaps, but in price, it just seems very logical to see, that's the range, and we had the same type of deal here. Price broke down and then boom, straight down. So I still think that the path of least resistance is to the upside, and I have my eyes on the 1.22 target. But as soon as we break this level, there's, to me, that I'm looking for shorts. I think a bear trend will develop, but it might just be the case that we're going to start ranging in here. So it's a difficult one. It's definitely a difficult one, but the risk to reward to enter within this range is very good.
Yeah, options are all still pricing higher. Everything else still pricing higher, but it's like I've talked about a number of times, like the positioning for euro dollar is already quite stretched long. So that's why every time we've tried to pick up, it's sort of failed. But like, I mean, look at this candle right here on the daily. This looks a bit nasty, right?
Yeah.
If we don't manage to pick up or potentially close lower or flat here tomorrow, into the end of the week as well, we got end of month flows coming through. So maybe that will be enough to pick us up. But this looks very much like a core decision point.
Yeah, I mean, you can see by, you have the 2 candles before we get that type of what is the type of, not a hammer, is that a hanging
man or whatever, I guess.
It's a hammer. It's like a bearish hammer. I don't know what that's called actually. But and then the 2 candles before that also has like a pin bar-ish doji type of characteristic. So to me,
you mean here?
No, the I'll show you. So what I'm looking at is this candle is obviously quite bearish, but it's 10 hours. We get 10 hours left. So if you look at this candle, that's indecisive candle. This is a typical indecisive candle. Same thing with that one. So I wouldn't really put too much emphasis on the current candle, because it's within an area where you've already had 2 indecisive candles with wicks to the downside. So it tells us that this is just following the overall characteristics of price within this range. So I would only really put emphasis on a candle like this if it happens at a top. I don't think the context is very clear for that candle. So I mean, and I still view this as a pretty decent trend. The problem is that level is going to act as, it's a very strong resistance, most likely because of that reaction. Because we had a breakout, a retest. It's very clear that there's a lot of demand here. We had a very strong push to the upside, and now if we break down, all that demand, well, it turns into resistance. So I kind of want to be buying here, but then what am I doing? Am I buying right into like a resistance that has capped price since last summer?
I think, like, that's what I'm saying. Like, that's why what I was saying earlier. Like, been surprised today to see price trail down as far as we have and had no, like, little to no bounce, or even pause points. Like, it's been very one way. So I do prefer the upside, at least near term, for euro dollar. I think it's just literally that stretched positioning that's basically strangulating the currency right now. So at these levels, it might be more appropriate to actually see us come up. Yeah.
Maybe the best course of action would just be to. I mean, it looks like we're going to be breaking down, and the best course of action might just be to wait for that level to get reclaimed again. We'll see. There's a lot of there are quite a lot of interesting pairs out there. If you look at like on the higher time frames, structures like we have on EuroCAD here, I do feel like we're getting. I remember we had live streams back in the beginning of last year. I said the exact same thing in the beginning of last year when EURUSD was trading here. I said it's a very interesting area, especially beginning of the year, because a lot of markets are at an inflection point, or whatever that's called. It's in an area it's ranging, it's indecisive, and we are most likely going to get some explosive moves this year in either direction, depending on where we break. And that's exactly what happened, right? And I mean, it's not, you don't have to be a genius to understand that. You only have to understand that, you know, after low volatility comes high volatility, because volatility is extreme seeking and it's expanding. That's just the nature of volatility in the financial markets. And obviously what we saw from that range is EURUSD had on the breakout to the top a 15% move to the upside on a currency, right? Insane. And the same thing happened on pairs like USD JPY. We were trading at this top. Strong move to the downside down here. So I feel like we're right now on USD JPY as well. We're testing the highs here. We look at pairs like EuroCAD. We're consolidating at a price level where EuroCAD has never created this type of structure above here since the financial crisis, the great financial crisis. Same thing with GBP CAD. Strong move to the upside. That began in this trend began in November 2022, and this is actually the first time where we're creating this type of rectangular ranging pattern in this whole move. So the trends that we've seen develop now over the course of several years is now consolidating, right? Same thing with I mean, Euro AUD, the move has already happened because we know that AUD has been extremely strong, so that move already happened. But the same characteristics showed up on Euro AUD, which is basically just a consolidation after a big move. You can look at pairs like GBP NCD. If this is not a dip in an uptrend, it might be a breakdown of that consolidation pattern as well. So I do feel like a lot of markets that we're watching right now is in a place where we're seeing potential signs of accumulation and distribution ranges, which is exciting because we might then get opportunities like we had on AUD NCD, where we can get in on the start of a multi-month or even multi-year trend, and that's I believe that's where the money is made.
Indeed.
Yeah, time will tell, but I tend to agree with you. Some interesting things forming, like maybe it's also because the geopolitical landscape is changing once again. I hope we are like in calmer waters. I doubt it, but it's like, everybody's waiting to pull the trigger.
Yeah, and that's that's what I kind of like, having this lens, because what we're doing here is we're looking at, or at least what I'm doing is I'm going through 50 to 60 markets on a weekly basis. So I'm really getting and when I'm looking at the weekly and daily, I'm getting a glimpse into what might be happening on a global scale, because we're looking at the forex market, we're looking at risk assets, we're looking at commodities, and everything is being affected by the overall geopolitical situation around the world. And when you're starting to see new breakouts or new price extremes or consolidation of their multi-year trends, it means that something is happening, something is changing. And when you see it across all markets, you can really get a feeling of something big is about to happen. And what happened, in the beginning of 2025, that extreme move on Euro USD. I can't remember what happened, but that was
Greenland.
Was that at
2025?
Oh,
that was
25.
Trump.
Sorry.
That was just Trump. Yeah,
that was
Trump with the Liberation Day and all that, and the tariffs coming in. So we went 104 to
Yeah, so I mean,
113 immediately.
Something's about to happen. We all know that. We live in times where there has been times where people have said that they're happy. They're generally happy with their living standards. They're happy with inflation. They're happy with their salaries. They're happy with the housing markets. They're overall happy with the way the economy and the world is moving. There has been times in the past, like right now, we live in times where we might not feel that, right? We might feel the opposite, and that's just the signs of the times. We know that something big is going to be happening, and AI is probably going to propel that in whatever direction we're going. But it's interesting. I think people watching this, pay attention to the higher timeframes in both the currency markets and the equities and commodities market, because if you get in on a trending move, like for example on AUD and CD, you might be trending all the way up here till next year. You have the potential of getting. Let's see what that is in pips. Yeah, we're talking about 1,000 pip move on AUD and CD and 9% move to the upside. I mean, if you're able to catch that with a good risk to reward, you don't have to take a lot of trades on a personal account, that is, because that's not the way you should be trading prop firms. All right.
Welcome back, Richard and William. Once again.
What's Good. Up? And anyone else need to...
Sorry, guys, I need to cut it short. I need to jump onto a call right now. So, yeah, have a good rest of the week and see you again next Monday. Take care, everybody. Bye-bye.
Thank you.
Peace, Dirk.
Bye, Dirk. Have a good one.
I might jump out as well, guys. I'm dead. I think I'm declining. Yeah. So I don't today. Well. Yeah, I'm pretty ill. So we'll see you guys tomorrow. Hopefully I'm feeling better tomorrow. And yeah, till then. Peace.
All right, take care.
Good luck, LJ.
Well. Have fun, okay. Will and Richard.
Oh, nice work. Thank you very much, Jonatan. We'll see you next week.
Take care.
No, we'll see you tomorrow.
Yeah, we'll see you tomorrow. That's right.
Yeah, there we go. Enjoy. William.
Richard.
Sir William. The fair.
Did you see UNG earlier? Yeah, fair. I do apologize if I have deafened anyone in the process of that.
Jeez, mate. I just hear in my like not in my ear, but like in the middle of my brain. I heard you go, "Have you seen EU and GU?" It's like,
man.
Yes, yes, I have.
What?
Did you take out? Yeah, mate. You know what I think? I think you should go back. You should go back to setting and forgetting, mate. And then
you know what? You know what? I think I may just bloody well do that.
Your gold trade of the other day, your EU trade of today, your pound trade. Well, you didn't enter EU, but like GU trade of today.
No, EU tapped me in. EU did tap me in.
Oh.
Hence the $200, not just like $90.
Hence the I am angry at life Life is horrible.
Yes. Oh yes.
So yeah.
I'm so glad my partner has gone to the shop right now. If she comes back in a bad mood, I'm not going to be happy. I'm walking off. I'm joking, guys. I'm kidding. I'm not that emotionally involved in it. But nonetheless, though, it's fun to joke, but it is annoying. But do you know what I'm glad, though? Do you know one thing I'm over the moon about? That it played out. Bro, it played out. It worked.
Yes, it did. But it's the idea of capitalizing on the move when it does go good.
I know.
And we can't always just sit here and say, well, I was right. And it's just like, yeah, you were, but you didn't follow through.
I know. Yeah, I know. Oh well.
Bye, Kirk. What is it, James T. Kirk? Oh, that's probably why. But you're thinking more of Jean-Luc Picard, with the. Anyway, having a look at gold.
I'm guessing gold dropped also. Yeah.
Yeah, but like gold, this whole day so far. Obviously, we had the reaction at the high there. We had the reaction here on the base, reacting off of it ever so slightly. We did have this area of consolidation that was broken out, retested, and now retested yet again. But this is a bit of a much stronger test, in my opinion. So I don't know if gold is going to continue pushing down, if this makes sense.
Well, we're in that area that I kind of wanted to see gold push up from.
Yeah. So here's the thing. Even though this was consolidation, it was ever so slightly bearish.
Yeah. Dude, you could have, in fact, if you had the break and close strategy with the candle close, you could have smashed a 1-to-1 if you had your TP at the new consolidation high.
Yeah. I mean, like, it was technically not entirely consolidation.
True.
We were consolidating here, definitely. And then small little attempt at a breakout, a retest of the top section of the consolidation, and then the breakout. Yeah. Anyway, it is what it is.
Man, it's annoying. I think price action's just been a bit funny recently, though. So I feel like I feel like we're a bit more hesitant than perhaps we should be. I think that it's markets are still markets, and they're always going to be a bit strange. There's always going to be a reason for you to say markets are weird today, markets are weird this week. There's always going to be a reason. So I think it's a bit of a wake up call, certainly for myself. And guys, this is the whole thing. I am a real life trader. I'm not Mr. Perfect. I'm not one of these social media gurus that posts my Lamborghinis and 100% win rates. I've got learning to do as well. Rich has learning to do. Everyone that jumps on stream has some form of learning to do. We can't be perfect all the time. It's just a matter of taking accountability for it, which I've done with my EU trade, for example. I've taken accountability and I said, look, I'm glad that the trade played out because it shows my analysis is right. But why didn't I just have confidence in, because this strategy is, like I've told you before, is a combination between my discretion modern strategy and my set and forget old strategy. Now, perhaps I should be relooking my set and forget idea and think to myself, you know what? No, I'm going to 0.5% risk it. And I'm just going to go and jump straight into the trade idea and have confidence in it and whether it plays out and hits stop loss or hits TP, there's always room to improve as long as you're accountable and you hold yourself at fault. And I think that's what I'm going to be doing. I think that's what today is for me, is realizing that markets are always going to give you an excuse to come up with, or markets are always going to give you a reason to come up with some bullshit excuse on why you shouldn't or should do what you shouldn't or should do. So I think now is an opportunity to self-reflect for myself and improve. And I think as of tomorrow, that's what I'm going to be doing.
I think ultimately that's the only thing that you can really that you can ultimately it's the only thing that you can do, but it's also the thing that I think creates the best opportunity for you to succeed. It's the fact that you have you hit rock bottom. In this case, it doesn't have to be rock bottom, but like you have a bit of a setback. You realize there's this setback, and then you don't immediately try and jump in to try and change it. You first try to either understand it, or you first try to like realize where this step back originated and where it really started like running away. And then you do a bit of inflection and you realize, okay, I understand where it's coming from. What do I do about it? And then you have to go and take some time to kind of like work at figuring out what is the best approach, what is the best potential remedy for this issue that you have. And then comes the hardest part, which is the actual changing certain habits and adapting different routines and just kicking against this whole monster that you've created for such a long time. And that is genuinely the difficult part, in my opinion. I mean, you and I can sit here and we can have a discussion about, Will, why did you close your trade? And you'll be like, no, I did it because I saw something that was changing my opinion about my trade. And then after the fact, you're like, I should have stayed in. It's that hindsight. It's the fact that you don't have that information in the moment. And not having that information in the moment is something that you're always going to have. That's a constant.
Yeah, 100%.
So, you know what, Will? I think you and I, with the fact that I've basically decided to take a bit of a pause with trading, I'm more than willing to mark stuff up, but I'm not really taking trades right now. I'm like in the middle of a self-inflection process, like the week.
Right. Yeah.
And I think it's important that people go through stuff, negative things, so that you can inflect and learn from, so that you can move on stronger out of that area. What you and I should do is, over the weekend, I think we should have a call, and then we talk about like interpersonal things, like introspective stuff, because you're going through a bit of an introspective phase. I'm going through a bit of an introspective phase. Let's do it together. Let's sit and talk. Let's get Richard Wells in as well. Let's ask him.
I was gonna say, dude, I rate that 100%. Yeah, man. Let's definitely do
that. Yeah. So when it comes to stuff like what we're talking about now, is we're talking about the idea of community, and how having friends and people in your community that kind of have gone through stuff together, so that you can lean on them and you can say, hey, listen, I'm having this problem. Can you help me? Or can you at least just listen while I rant?
Shed some light, or just be an ear. I think being an ear is equally important.
Yeah, just be a sponge. Just absorb what I'm saying and then let me get it off of my chest. Otherwise, I'm going to sit with it in here the whole time, and I'm only going to ever hear my own voice and my own rationale about what it is that I'm going through. And this is one of the reasons why we have the Discord, the Fiverr's Discord, is because of community. It's the idea of, it's a safe space for people that are either really good traders, but they struggle with psychology, or they have really good psychology, but they struggle with trading, and so on and so forth. And it's for those that's really good at both, and those for that's really bad at both. For everybody together to come to one area and have a community, have people to riff off of, have people to just sit and listen to what you have to say. And I think that's pretty good.
Yeah, 100%.
Yeah.
Man.
Yeah. Can we get into a sauna together and hug it out? 100%.
I mean, we can certainly jump in a sauna, but I don't know if I fancy touching you while you're in a sauna.
Dude, I thought we were friends.
Oh no, I'm on about chat. I never said anything about you, Rich.
Cam, I'm more than willing to get into a sauna with you, hug it out, and then come out there acting as if nothing happened. Ishan is saying, hey, Richard, which indicator are you using? Right now, what I do have is I have a sessions indicator by Leviathan, which is these... man, I hate this. I don't know why I went and switched it on now. Screw that. I have a sessions indicator that I use for sessions, surprisingly.
No.
The Tokyo session is this pinkish color, London is this bluish color, and then New York is this orange color for obvious reasons. And then I have a 50 EMA, which is a doc standard 50. If you look here, 50. These other ones, you can have any one of them on, but the 51 is on the close. That's the source. 50 EMA. That's what I have there. And then I have another, this is called the Zero Lag EMA Trend Levels by Chart Prime. It is a EMA that has another EMA attached to it. So this dark line here at the bottom, or the thicker line, is the 20 EMA. And then this shadow that you have here is a faster version of that. It is a EMA of this EMA. So it kind of gives me a visual indication of momentum. Generally, if price is above the cloud, it's very strongly bullish, as an example. So I can see if price starts pushing above it early on, whether or not it's a little bit more bullish or volumetrically bullish. There's a tendency for price to come back down to try and test the 20 EMA or even the 50 EMA. And also, it shows when there's slow changes, let's rather say. So it changes color from blue to black. I like blue and black. Black for me is bearish. Blue for me is bullish. So it shows where price has kind of like drifted lower than the 20 EMA, and you can set it whatever. I don't use this for any sort of trading strategy. I just use it for visual confirmation. That's pretty much it. I'm not always like right in front of the chart. So sometimes I'm a little bit further back or something, and I just want to have a quick gander at the chart. Then I can say, oh, okay, we're busy slowing down very quickly. Yeah, so that's what these two indicators are. Regular EMA, more often than not, it's like this. It's without the zero lag. It's called zero lag, even though there is lag. So don't pay too much attention to the naming of it. It's just an EMA with another EMA. Yeah. It's still a lagging indicator. You still have to wait for you won't see it here, but like if you look at the source code, it waits for the candle to close, which means that it's lagging. Anyway, yeah, that's it.
I'm just looking at
live stream of Richard Wells coaching with Will. Dude,
I'll see you tomorrow. That's all I'm saying. That is all I'm saying.
Thursdays is Richard Wells' section. So stick around for tomorrow. Primal Light. I like this. I finally signed up for the Fivers and trying to do my prop challenge. If I reach the max loss of 5%, can I purchase another challenge? Which one did you get? Because 5% is, I think the boot camp is 5%.
You've got a max daily loss of 5% on the high stakes, but
yeah, but like if this is max loss is 5%, it's the boot camp.
Yeah, sounds that way.
Because the bootcamp starts out 5% and you need to make 6%. And then once you're in funded phase, it goes to you have 4% drawdown available and you need to make 5%. But to answer the last portion of this question, if I reach max loss of 5%, can I purchase another challenge? Yes, you can. That's a very typical thing when it comes to prop firm trading. You're not restricted to a singular purchase. If you failed the evaluation, you can always try again. So that is always an option for you. Took trades on gold today and it hit several of my stop losses and then it bounced right back to where I thought it was going to go. What were you trading? Give us an example of a trade that you did take today. Just one or two of those trades that you took today, Primal Light, and just kind of we can have a look at gold. Tell us what time frame you were trading it on. Just give us a little bit of a brief overview of what it is that you're looking for. And let's see whether or not we can assist you maybe to try and broaden your approach. Tabongo is saying, where would you look to buy, Richard? You can't buy me. I'm not for sale.
I'm sure if he asks your wife on the right day, at the right moment,
yeah, maybe
at the right price, I'm sure they would be.
For gold, I generally take my trades on the 5 and the 15. So if I go down to the 5 minute, and I'm kind of looking for an establishment of a new trend. So if we were bullish or bearish, I would like to see it slow down either at an area previously where it tested. To give you an idea, this on gold here on the 5 minute during Tokyo, this area over here, this was the last attempt for price to try and push lower. This was obviously the low of the day, but this was the last attempt for it to try and push lower before it volumetrically started pushing up. So you can think of this whole area over here as an order block. I just call it a base because that is the base from which price moved volumetrically really strongly. It's that back and forth between buyers and sellers where the sellers in this case completely lost control and the bulls completely took over. So the idea is price comes back to it, taps into it, and then starts pushing up. Now, the idea, if I just remove that one, actually, I can remove both of them for now. The idea is that generally price would try and have a similar reaction in the same place twice in a row, So price reacted strongly out of this area. When it does come back, it should try and have a similar reaction. If it has a similar reaction like it did now, today, what I would look for is I would look for a specific structure to be broken. So in this case, this was the low. So I'll mark it out as low. I want to have the most recent lower high because this was a downward trend. I want this downward trend's lowest high to be broken as well. And I'm not talking about wicking above it. I want it to close volumetrically above it. So with this downward trend that we had, the last swing point was either this section over here or the last bullish candle. In this case, that was the last bullish candle. So this was a lower high in relation to this high point up over here. Just to give you an example. Okay, so if this was the high, this over here was the low, then this would be a lower high and then this would be a lower low. With me so far? So what I would want is I would have wanted this low swing over here or even this low swing over here to be broken volumetrically like we did earlier, okay? And then I would like to see it attempt a pullback. So you can consider this whole move here. So this whole section like this. Oh, that is horrible drawing. Let me try box. This whole section here is a rally. And then this is a base. this whole candle over here, this bearish candle, is a base, because that is once again this back and forth attempt to try and break this upward trend. And then I would want to see a confirmation, which is this candle right here. That is a bullish candle after a reaction off of an established area, a break of a recent structure indicating a new structure is being formed. And then I would like to try and enter for a buy on something like that area over there. And then I would have set stop loss and take profits, looking to try and be a set and forget strategy. Get in, forget about it, and then leave it to either take stop loss or to take to hit profit. Myself, I would have entered there if I was paying attention to this, or if I was trading today. That is where I would have entered looking for a trade. Once again, even if you used this, let me just remove these boxes. Even if you did use this swing point over here for a break, you would look at this bearish candle and you would think to yourself, this is a rejection candle. Look how strong this leg was in relation to every bearish attempt that followed it. And will know this. I'm big on the idea of comparisons between the momentum of a move relative to how it was previously. So in this case, we had a lot of strong downward attempts, a weak upward attempt, a strong bearish attempt, a weak bullish attempt. A little bit weaker bearish attempt over here, but it was eventually followed up by a very strong bearish attempt. And then this attempt over here, this bullish attempt, is a lot stronger than each of the previous attempts to try and push price higher. So this area down here being the area where the bulls started taking over again. And then you see the confirmation of this happening on this bearish attempt to try and push price lower again. It fails. So new structure, new bullish structure. Yes, it is a short-term bullish structure, but it is also a V-shaped recovery. If you would consider this whole section down here as a downward trend, we have effectively recovered on a V-shape. So reaction off of an established area, an area where previously we had a reaction, a strong reaction. Price came back down to it. This was a downward trend. It changed its character, started pushing bullishly. And every single time it tries to take a previous high, it did so volumetrically. So a nice volumetric push. And then I would just look for a base area to get in on. So my trade would have been on the close of that candle. Even if there's a little bit of slippage or something, it's fine. I would generally have gone for a gold trade, something like this. Okay, no, this is not right. I think this is, I tested this a while ago. It's supposed to be a 1 to 2. So something like that. So this is generally what I would be looking for a trade. And then normally what I would do is I would also take the very last swing with the last bearish candle before price started pushing lower. And I would generally try not to be too deep into this box, not more than 50% into that candle itself. That is if this high over here gets respected. So sometimes price doesn't even remotely get close to it, and then it starts pushing lower. So this to me has a higher prevalence to hit its take profit rather than reacting, pushing lower again. So yeah, that's generally what I would be looking for.
Yeah, nice. I'm trying to work out what would I be looking for if I was to be placed on gold. I don't think it'd be on the 50 on the 5 minute. I think I'd have to be. I don't know. We didn't get that consolidation. It was almost like an immediate move off, which is nice sometimes, I suppose. You know, it's always good to show some nice momentum, but I wouldn't see anything until like, or maybe if I was 1 hour trading it. So if you look on the 1 hour, we got that consolidation, we've got a nice fib pullback, and we've got a fair value gap imbalance. That, that in my opinion would be a nice place to be trading from and taking a buy from. So I'd probably be looking at trading around, if I can get the exact coordinate, there we go, 5162. Yeah, 5162 177. Stop loss would be around about 5126 204.
5126.
Yes, 5126.204. And then TP would probably be either as at a 1-to-1 at the local high, which would be 5211. Sorry, did I say 5226? I meant 5126. TP would probably be about 5211.357, or if we could go for the prior day Asia high, just above that, we've got, and that would be a 2-to-1 risk to reward at 5250.062. That is what I would have been looking at on the 1 hourly on gold. But anything lower than the 1 hour, I'm not seeing anything worth trading on gold anyway.
Yeah. No, I get it, mate. I get it. Like I said, personally, that's just me following my strategy.
Yeah, exactly.
But I get it. Let's see who else has got anything.
NASDAQ was nice as well, mind. NASDAQ is just taken out the pre-session highs, which is nice.
So on the 5 and the 15, we had this ascending flag pattern. We had a lovely breakout. Didn't trade it, obviously, just sat and watched it. Like I said, I am not trading this week at all. Just sat and watched it, kind of like looked at how it was moving. We had this recent, I'm saying recent, but this last attempt for price to try and push bullishly, fail volumetrically pushing lower on the 5. We have broken above this whole section, retested it, and it seems as though it wants to try and push up. So overall, not bad. It looks good. It's still overwhelmingly bullish since yesterday. So we did have a little bit of a high point on Monday, triple low, another test on that low over here, and then eventually a break, but it was consolidating in this whole section the whole time, and it seems now as though we're getting a little bit more of a break on NASDAQ. So I would wait for New York to open up, and then from the New York open, I would say, okay, wait for structure to calm down, from that initial volatility, and then start looking for entries. It's the same as like with yesterday. I didn't take the trade. I just marked it out. This was my NASDAQ long that I marked out. Like I said, did not take it. Waited for price action to show exactly what it wanted to do. I think I also had the 200 EMA on as well. Yeah, I had the 200 EMA on for this specific section here. Very, very deep attempt to push lower. If you go all the way to the left, you can see that we had the very lows, this low section here, which was tested. So obviously multiple attempts to try and push price lower, failing, and then pushing up. Right over there, you could have had even this very last attempt over here as a potential area, and it gives you the same result, as you can see. So I just took the whole area, pushed off of that, took all of these highs over here. So the whole let me grab that one. The whole high of Tokyo. All of this was completely pushed above, retested, and then started to push up. When we start picking up a little bit of volume, we respected the 200 EMA. We respected the 200 EMA here. We just tipped it and then started to push up again. I would have expected, if this move was to continue pushing lower, that we would have at least, with this candle over here, tried to break lower than either the low of this bullish candle, this one over here, or broken lower than the previous candle low, this swing point over here. So if this was the high of the day and then start pushing lower, I would have wanted it to break lower than this section over here, which it didn't. And then it started to print another bullish candle, and I was like, okay, cool, I'll mark this. This is in line with what I'm looking for. Reaction off of an established zone, breaks a recent high, pulls back a little bit in this case, but this is volatility. So this whole section here, the first half an hour to an hour of the New York session is quite volatile. And then we just wait for price to start indicating what it wants to do. You pay attention to whether or not lows and highs are being taken. In this case, that candle high was wicked over there. No low was taken at all. So this candle's low wasn't taken. This candle's low wasn't taken. And we're starting to print a follow-up bullish candle. Signifies bullish price action to me. And then my take profit is a 1 to 2 risk to reward ratio. And that's where I would have entered had I been trading. And then I would just leave it. And the thing is, if you look at what NASDAQ is doing at the moment, we've already been trading above the whole of yesterday, even though it is the high point of yesterday was tested and then consolidated above. We tried to push lower, we failed. Coming back to this last area over here. So price never came back to push lower than this point over here at all, signifying even more bullish momentum, bullish continuation, even though it might have seemed slowly pushing lower and a little bit of a slow upward tick. The idea is, to me, it's still relatively bullish on NASDAQ. So for NASDAQ, I'm just going to wait for New York to open. And one of two things. I would either want the price at New York open, which is here, which is in 2 hours or so, New York will open up. I would want to see during that initial phase, either this low over here wicked or just like broken through, but not closed through. So wicked through, or either just wicked on the box or wicked just through it. Or I would want to see this area down here wicked and tested. If it does come and wick and test over here, it's going to be a little bit more touch and go because you're taking up all of these points over here and not really reacting off of it. So in that case, I would like price to make its way down, preferably not break past this point and then start to push up again strongly, retest, or not retest, pull back a little bit and then start pushing up, preferably breaking these highs in the process. And then continuing up. And if it does continue up, I will look for the exact structure I was looking for yesterday. I would just wait for price to push up, show an attempt to try and push down, and then start pushing up higher. Preferably this high be higher than that. This movement be from down there. As an example, this pullback over here not be too deep. It shouldn't be taking the whole movement. It shouldn't be doing that. If it does that, there's no trade to be taken. It needs to be reasonable, not too strong. Preferably, if it were to come back down to this area where we did have the breakout, that would be fine. So if it comes back down to here, I'd be happy to still take this trade as a bullish trade. And then I'd just wait for the continuation. And then I'd wait for price to either prove that it doesn't want to push lower and then start picking up, and then I can get in on a trade with a 1 to 2 something like that. That's what I would be looking for today.
Yeah, nice. NASDAQ, I haven't really done too much of an analysis on what I want to see, but it does look really bullish.
Yeah. There is also something, US Tech, is this NAS 100? Yes. Yes, it is. So on IC markets, it's known as US Tech. If you look at any of the other, like if I add any symbol, so let's go to indices. So there's US 100. Pepperstone calls it NAS 100. Owanda calls it NAS 100 USD, but it's all the same. It's the same stuff. So even Capital.com uses US 100. So US Tech 100, NAS 100, NQ, it's all the same, except that NQ is obviously the denomination for the futures portion of it. But yeah, US Tech, NASDAQ, NAS 100, they're all the same. There was another thing here I wanted to... joint late with trading or hindsight only. We're doing both. We're doing hindsight analysis. We're doing forward projections. And then if there is a trade set up for us, we will take a trade. We're not just going to take trades willy-nilly. We'll try and take trades that conform to our strategy, our risk appetite, and so on. If something aligns, we'll take a trade. If it doesn't, there's no point in taking it, because all we're doing is we're just we're not practicing what we preach. And what we preach is good fundamentals, sticking to the process. So sometimes you'll get a signal from us. Sometimes you won't. It's a gamble.
I mean, facts. True that. Never true words spoken. However, if you are just joining, you would have seen. I was looking at Euro USD earlier, but
no. Martin, Rich and Will. First of all, hello, Martin. How are you? Did you try already the futures account? I have not been active yet on it. I've not been given the go-ahead to get my account as yet. Still waiting. But once I can buy an account, I will do so, and then we'll test that.
I'm gonna wait till I get back to the UK. I feel like I need full attention and dedication to that account. And what I don't want to be doing is end up trading the account out here when, clearly my strategy, not necessarily a strategy problem, but clearly, it's a little bit, I'm going through a couple of changes with the strategy. So I don't want to just end up, what do you call it? Getting like a new account and just fumbling it, and then trying to learn it all out here whilst also trying to change my CFD strategy. I'd rather just get back to the UK, get back in the comfort of my own office, then look at getting the futures account where I can actually give proper attention and dedication to that account.
I think anything that you can do to give yourself an advantage, you should do. So in this case, if it means that it's going to be better for your trading style to do it once you're back in the UK, do that. Don't try and force it. Sam, the sniper VWAP, saying, Richard, I don't have fix RR, sometimes 1 to 1.5 or 2. Is that okay for me? Look, it really depends on what it is that you've backtested. It really depends on whether or not your strategy is reliant on fixed risk to reward, if your expectancy is in line with your risk to reward, or it's going to depend on whether or not you're more of a discretionary trader like Will down here that takes specific areas. Like for argument's sake, you take a buy up over here. Well, that's a sell. If you take a buy with your stop loss all the way down there, you can go for a 1-to-1 or even a negative risk to reward. Whatever your strategy has been tested on, follow that. In my case, my back testing that I have done, my forward testing, and my whole expectancy curve is based on the idea of doing a 1 to 1.5 or a 1-to-1 during London on NASDAQ. or a 1 to 2 during New York session. So I have the two, they similar strategies, but for different volatility. So for, well, not even volatility, volumetric movement. Generally, for London, you don't get the craziest of moves all the time. You do get days like this where it moves very nicely. But even this is still just a, if I do my normal one, which is this is 1 to 2, for New York, for London, it should be a 1 to 1. I would have taken my profit here now. This is what I've tested. So 1 to 1 during London works well for me, and then a 1 to 2 for New York works just as well. So that's the idea. I hope that makes sense.
Yeah, that makes perfect sense. Yeah, that does make perfect sense, to be fair.
So your expectancy, that is the thing that I almost always look at the most. I have a poker background, so I work a lot with expectancy. For me, it just makes the most sense. If I expect to win 60% of my trades and lose 40% of them, if I have a 1 to 2, that means for every time I lose, I'm going to lose 1. Every time I win, I'm going to win 2. 60% of the time, I'm going to win 2. 40% of the time, I'm going to lose 1. So 60%, so 0.6 times 2 versus 0.4 times 1. And then if you subtract that from each other, you will get your expectancy. And that expectancy is, if it's positive, then you know that every single time you take a trade, in the long run, it would be profitable. If all the other variables stayed the same. But if you keep changing your variables, so today you still have the same strategy, 60 to 40%. If you keep changing your risk to reward, now it's a 1 to 1, then it's a 1 to 1.5, then it's a 1 to 2. Your expectancy changes based on that. But if you keep your variables the same, your expectancy stays the same. So I have an expectancy for London session, and I have an expectancy for New York session, and I treat them differently. So if I'm trading London session and I'm getting good results, but I'm not getting good results during New York session, I might pause trading during New York and I might focus more solely on trading during London, and vice versa. So I always look at my expectancy. If my expectancy moves 15% away from where it normally is, there might be a concern. And that is usually over a month's time period that I look at my expectancy and see, okay, I've reached my expectancy this whole week. The next 3 weeks, I have not at all. I look at the end of the month. My expectancy is off by 15, 16, maybe even 20%. Fair enough. I need to either cut back on my risk to reward, going from not risk to reward, but my risk appetite. So instead of going 1% risk or 0.5% risk, I go to 0.25% risk up until my expectancy reaches my anticipated expectancy, if this all makes sense to you. It's the same reason why I don't look at dollar value when taking a trade. I look at percentages. And the R value to me is not the most important. It's just the expectancy. As an R value, that's fine. But that's if all metrics stay the same.
Yeah, nice. That makes complete sense, dude. That is awesome.
Do you know that answer that you just gave now seems like the most I wasn't really listening, but I assume that what you said is true. When someone has a conversation and they're like, yeah, mate, no, awesome, yeah, cool.
Sorry, man.
Anyway.
I'm trying to decide if I want to buy gold or not.
I mean, I call it the automated answer. It's
just yeah, fair. No, I am listening. I'm like, when you're like half listening in, but then you're like half doing your own thing. I'm literally doing that. Oh man,
wait, you were saying you don't know if you want to buy gold?
Yeah, I'm trying to decide if I want to buy gold now.
This is the 5-minute chart, the 15-minute. Okay, so we're busy with more of a, let's call it a base on the 15-minute right now.
Yeah.
So 10 more minutes before this one closes. This 5-minute candle is most probably going to close as a bearish candle, my apologies. And we've already had 2 pullbacks, 2 bearish candles already. Let's see how volumetric these bearish candles are, and then just wait.
Because we've gotten our reaction. If I just bring my chart up real quick. There we go. Because what we got here, okay, this was the 1 hour. In fact, if I just jump up onto the 1 hour, you can see it. So this was the 1 hour that I was talking about. You know, we've got this this consolidation here. Right, there you go. We got this consolidation here. We had the sweep down into this area, the push up, the pullback down into this area, and then continuation. Now, I'll just delete that quick. No, I haven't taken it. 15-minute doesn't look as nice. The only thing that's worrying me is that we've got this here. Let's delete all this now. No, wrong
that's
one.
like little area of consolidation.
Yeah. Which we're currently within. But then if we drop down to the 5-minute, this is a nice area that we can potentially bounce off within, or that will technically, I suppose, we have ish come and touched into it. Maybe if we close above the highs. I don't know. I think we're gonna have to close above this for me to actually want to participate.
Dude, but that's so high.
I know. That's okay. That's what I mean. That's...
All right. Let's think about this like logically. The move has already started way at the bottom. All right, and obviously we don't know where this move is going to go, but you're already seeing the new bullish structure take place or take form. Obviously, you want confirmation of the continuation to push higher. But at what point are you going to say, it's kind of like run its course. It's gone too high for me to participate. Where's that area for you? If we consider how it's been moving throughout the day and how it was moving yesterday.
Where would it be too high?
Yeah, where would it be too high for you to participate?
Up here. You know, up at these prior yesterday's Asia high.
Okay. Fair.
You know, for me right now, if anything, to be really sure on price direction, I'd love to see it break and close above here. That was rubbish. Break and close above here. If, however, we jump down to the 5-minute, if we got a consolidation zone around here and then broke out, there's a good chance I'd already be in this trade. And I, you know, it's think about it like over trading, and this is what I try and get into my head. And so, guys, I don't know if like this is going to help you, you lot at all. Imagine I held through this trade, and I hit TP, and I banked. I think I had $600 on the line here, so I banked $600. This trade here, I had $800 TP. No, it wasn't. I had 700 there.
So 1,003 on the day. Okay.
So you're about so about $1,300.
1.3%. Yeah, 1.3%.
So I just banked 1.3%, meaning I've gone from 95k to 90, just over 96, so 96.3 because I was just under. No, I wouldn't be 96 bang on because I was $300 under. Yeah, so fair. So now you imagine you've just taken 1.3% from the market. You've just hit 2 TPs that you traded this morning. Would you really trade this? What is that? Wrong button.
No, I'd be done. But
that's what I mean. And now I'm thinking,
but that's because I follow best of 3. So
yeah, okay, fair. So now my thought process is, in theory, I took the trade. You know, it happened for me. I personally had a human input that caused the trade to be taken out early. Nonetheless, the configuration still happened. If it was an automation, it still would have executed. What has happened has still happened. So why am I looking at this trade? It should be a punishment, not a FOMO. You know, I should be looking at this like, dude, you should have taken out 2 full TPs. You know, that should have been 2 full TPs there, 2 trades, 2 TPs. You are done. Now your punishment for taking out early is less profit. I wouldn't take this trade if I hit full TPs.
Fair.
So I'm thinking, I don't think I want to get in this trade, and I think I am done for the day due to the fact that I'd already taken 2 trades and I'd already, in theory, hit TP on both those trades. Due to human interaction, I took out early. There must be punishment in place for that.
Well, you don't need to punish yourself, but
what I mean is the punishment is the lack in profits. Now, if I go and take this trade, in theory, it's going to be chasing profits that I should have already had.
Yeah, what I mean is like, if you're going to look at it in the sense of punishment, you're thinking of it as you've done something wrong.
Okay, yeah,
and that you need to be punished for it. Where you didn't do anything wrong, you followed your plan.
I still followed the plan.
Whereas if you turn around and said, you know what, I'm not going to trade anymore because I am only going to allow myself 2 trades a day, or let's say I'm going to allow myself a maximum of 2% risk allocation for the day, that kind of like thing. Once you've hit either one of those kind of like milestones, let's put it like that, then you can stop and you can say, I'm done for today. If in this case you were like, you know what, I'm willing to put up that risk that I had gained today as potential leverage to try and get more. And if this trade did conform to your exact strategy and your exact plan, then by all means, go for it. But if you're not willing, and if it's not according to your strategy, then don't do it.
Exactly. And that's what I mean. That's what I'm trying to understand. I'm trying to ask myself, is this really my strategy? And is this really according to my plan?
Is this FOMO? Is this overtrading? I mean. Is this you following your strategy? What is it? And you can only know if you've actually kind of like sat and thought about this previously, and you've come to a conclusion. You won't know in the moment unless you've actually delved into it a little bit deeply and said, you know what, I think I'm overtrading. Why am I overtrading? Because I'm taking several more trades after taking profit and I keep losing it. I keep giving it back. Then you're like, maybe you're overtrading. Maybe you should have stopped after the second one. And it's going to be different for everybody, obviously. I just wanted to first and foremost, hello Sam, haven't seen you in a while, mate. Good to see you here. The problem with expectancy in trading is that the market dynamics are constantly changing. It's not the same as poker, where expectancy is usually fixed, and that's where the problem is. It's usually fixed. It's not usually fixed. That's the problem. The thing is, when it comes to poker, you have a theory. You have a theoretical expectancy that you're trying to meet. Like in theory, you want it to be a certain amount and then you would be profitable. But the dynamics also change because you're playing against other players. And these players themselves, they change their bet sizes, they change their frequencies and all of that kind of stuff. So at the end of the day, when you're trying to put in theory, I should be winning this pot 50% of the time, that 50% is based exactly on that theory. Because you have the maths, but the maths is based on hypotheticals. And it's the same with trading. The math is based on hypotheticals. The hypothetical is that if I do A, this is going to be the outcome. If I do B, this is going to be the outcome. But those are always, there's more than one outcome as well when it comes to trading. And the same with poker as well. There's a lot of decision points, and each one of those decision points has its own expectancy. And that's where I feel poker is more confusing, but also at the same time more a little bit more difficult for you to kind of like know exactly what the outcome is going to be. Even with trading. With trading, you have historic information. And this historic information tends to repeat itself in some pattern, some way, shape, or form. You don't always get that with poker. And if you've played poker for a long time, and you'll kind of like come to see it play out like that. Whereas with trading, you see it a little bit less frequently, that it deviates that far from expectancy. The expectancy is a little bit closer if you have backtested, because even your backtested stuff with trading is based on information that's already there. And when you're doing your Nash equilibrium tests with poker, those are simulations. It's the same as this. It's like a simulation amount of information that's available to you. Those simulations are only is only as what's the word? You will net only a certain amount of information from it based on the variables that you've put into it, certain assumptions. A player continuation bet at this frequency. They have this range of hands at this frequency. So there's a lot more hypotheticals with poker than there is with trading. There was a question here from Martin asking, does the 5-risk futures have an activation fee after evaluation completion? From my understanding, it's no. And thank you to Remy for answering this. The activation fee is a one-time fee that it's only paid after you pass the evaluation of the base camp program. Thank you for that one, Remy. We appreciate that answer. Is this real life? Is this just fantasy? Caught in a landslide. No escape from reality, right?
Easy come, easy go.
Will you let me go?
We're not doing a Bohemian Rhapsody lyric. What do you call it? Or just song full thing. Dude, I love this color. Dude, I love your color scheme. It literally looks like you've just robbed my chart. It actually looks like you've just completely robbed my TradingView chart. That is amazing.
Primal Light. I wanted to get to a few of his things. Here it is. It's definitely a mental game. I find that I am very focused on the dollar amount, and that's distracting me from setting stop loss correctly. So there's this thing where if people overvalue the value of money. I know this sounds like a contradicting sentence, and they're like, yeah, money is valuable. Yes, we're not disputing that it's valuable. We're talking about how much value we're putting to any certain inanimate object. In this case, money. You look at money and you think to yourself, if I have $10,000 at hand, humans in general are more afraid to lose what they already have than to have the opportunity to gain something new from that. So I have $10,000. I would be afraid to lose that $10,000. So when it comes to trading, you look at it as if this $10,000 is yours. When you're doing an evaluation, when you're doing a funded account or anything like that, you look at it as if you've already have this money in your pocket. So you're afraid that you're going to lose that. But the actual fact is that the money that you put into the evaluation, that's the only money that you risk losing. And that is significantly lower than that $10,000 for that 100K account that you have, which is 10% of 100K is $10,000. So you're looking at that and you're thinking, oh, I'm losing $10,000. No, you're losing the evaluation money, which is, let's say, $500. 20 times less than what you thought you're losing. So we overvalue the value of money. We look at it in the sense of I am losing a lot more than in actual fact. Bring down your opinions of money. Like, bring it down a little bit. Yes, money is important. You need it in order to survive. You need it to pay for all kinds of stuff, whether it's medical bills or whether it's just like regular living. Take a step back and look at what you stand to gain rather than what you stand to lose. If you go into it with a fatalistic mindset and the idea that I'm going to lose this, I am fearful of losing this, the likelihood is that you're going to lose it. because your actions are going to be dictated by this fear. Whereas if you're a little bit more optimistic or you're a little bit more skewed towards the positive side, saying, what do I stand to gain from this? Yes, it's $500. I'm okay losing this $500 for this evaluation. What do I stand to gain from this? It's a $10,000, it's a $100,000 account. I can, up to 10% of this I can gain, and then basically 80% of that. So 0.8% of this $10,000, so $8,000. I stand to make $8,000 if I pass the account and I reach my 10% goal. But because we're so focused on that $500 loss and thinking, oh, I'm going to lose $10,000 on this trade, you're looking at the dollar value and you are grossly overestimating its importance. It's hard. It's not an easy thing to do. And a lot of people are going to call me out for this and say, oh, yeah, but you can't say that. That's the reality. It's we're putting the idea of losses on a pedestal. We're making the idea of losing something way more important than the idea of gaining something. It's our brain telling us that if I lose this thing, I'm going to be destitute. I'm going to lose my house. You're not, because you shouldn't be trading with money that you cannot afford to lose, first and foremost. Secondly, that is you trying to stop yourself from making good conscious decisions, because you're looking at it from a fear response. You're looking at it from I am worried that this is not going to go in my way. So you're not process orientated, you're results orientated. And it all comes back to the same concepts at the end of the day. Traders with Patel, YouTube 100K subscribers giveaway date. I have a date for you.
I was going to say, do we have a date?
Yeah, we've got a date.
Nice.
Yes. However, we are first going to have some graphics made up, and we're going to have a nice little thumbnail for that date. But I will give you the date. The date is I wish we had a drum roll.
No. Hang on. No, don't give us the date yet. Okay.
That was nice. Do it again.
Okay. Do it.
11th of March.
The when of March?
The 11th of March. 11th. 1, 11. The 11th of March, we will have the 100K subscriber giveaway. Yes. And that is as much as information as I have for you right now, because I'm still in the process of waiting for the exact account giveaways. It will be accounts that we're going to be giving away. It's the exact number that we're going to give away that's going to come into play. That I'm just waiting for feedback from my bosses. So so from tomorrow, the whole of next week, I'm going to start asking everybody to just mention the 100K 100K subscriber giveaway, and then we'll have a nice little giveaway on the 11th. We will do it between LJ and Saul's section on the live stream. So for everybody that is here, Saul, who's going to be here later today, he is the CEO of the Fivers. He does some live scalping in the afternoon session. So the next time that he is on stream, which will be the 11th after today, he'll be here today. After today, the 11th of March, we will have the 100K subscriber giveaway. So there you go. Frank Goku is saying, whenever I hold my trade to TP or to hit TP, it reverses midway and hit my stop loss, yet when I close early, it comes to TP. When I break even, it takes me out and go my way. I'm battling with this trauma. All right. So obviously, you're going to have to give us some context. How do you manage your trade? Do you take out half of your trade and then move to stop loss? Do you move your stop loss when a certain swing is reached and then a continuation is proved? tell us a little bit more.
Yeah, it's good to look on structure as well. Like, people got to understand that structure is still relevant even when you're in a trade. Like, you can't look at price and then say, okay, I placed a buy now. Everything else to the left doesn't matter. It's all about what happens next. Not necessarily, because there's still areas of interest that maybe you're not quite looking at, or perhaps you've seen enough areas of interest validated for your entry. But then what happens lower down? Because what you've done is you've looked for valid. In fact, let me make a get chart example here. Let me go to GU. No, is EU cleaner? Yeah, EU's a bit cleaner. So you've looked for validation for the trade entry. So what that means is you've looked for validation anywhere within here. Actually, no, let's go a little bit lower because I entered down here. You've looked for trade validation here. You've now looked for stop loss validation, which is where the trade becomes invalid, which is here. A lot of people fail to remember they look for a TP zone. They look for, which is usually lows, highs and lows. So now you've looked for a TP zone, which is down here. People fail to remember there is internal structure lower than your entry, which could cause reasons for reversal. Even price as it is can potentially reverse. Look at this. Price is slowing down, failing to break lower. Okay, just because now it broke lower doesn't mean that it won't break lower again if it consolidates. You know, you've got to remember that price will still act according to what is left of it, and you've still got to manage price as is. So when you are holding to a full TP, remember, if you want to see price look like this entry and just look something like that, cool. But what happens if you get price and it looks like this? Is that still valid? Because what happens there is you've had consolidation zone, which means price is flattening out. Potentially you've had a break in structure to the upside. Now there's a reason, there's a potential now that this trade could completely reverse and hit your stop loss, because that can happen. And that is potentially due to the fact that something to the left-hand side, there may have been some, in fact, let me just get rid of some of this. There may have been some consolidation here. There may have been a base or an order block or a fair value gap, an imbalance, a consolidation zone, whatever you want to call it, a liquidity, a point of interest, a higher time frame point of interest, which has caused the trade to reverse from that point. Now, if we go over to gold, those who are trading the gold sell, why isn't it going to load then? There we go. Those who are trading the gold sell may have been targeting these lows down here, or these lows here, or this consolidation here. Now, it doesn't mean that it's going to get down there. If you have your stop loss up here, let me just get my marker out again. If you have a stop, typical, there we go. If you have a stop loss up here and your entry is here and you leave it, you're now in drawdown. You're consolidating in drawdown and potentially the trade is invalid, but you don't know that because you haven't taken into consideration potential higher time frame areas of interest, which could cause the trade to react from and reverse. So always remember to take into consideration potential areas underneath entry. Not enough traders do that, I feel. I hope that helped a little bit. It certainly helped me when I'm trying to gain profitability.
I like that. There's another thing that you can do as well to kind of like help the idea of getting stopped out early, is give your trade room to breathe.
Yeah.
So when you go and do some backward testing, kind of look at what is the most obvious movements. So if there is a pullback, generally the pullback would be 20 pips as an example. So if you're entering during a pullback, do you have your stop loss at 10 pips, 12 pips, 13 pips? When you know backtesting information, or because of the backtesting information, you need at least 20 pips on average. So it can be less, it can be more, but 20 pips on average. So go and put your stop loss lower than that 20 pips, and then you know more often than not, your stop loss would be safe. Bar that you keep in mind the fact that it's not always going to move exactly the same way, and it's all going to be probabilistic trading. So speculative. I believe it's going to go to this point and not lower. It can go lower, but in theory, it should kind of like reach that point and then react off of it. So do a bit of backtesting to go and find what is for that specific asset, what is the best place to place your stop losses to give your trades the best opportunity to continue rallying. And if that means that at the end of the day, you get a 1-to-1 or even a negative risk to reward like 0.8 or 0.7 or something like that, at least it gives you an opportunity to have your trade breathe. And then when you do have runners, where you have a trade that really runs, that goes 3, 4, 5, 6 R, that you can let it be. And you can say, okay, cool, I've reached 5 R, I'm happy with this, I close my trade. So just something to also take in consideration.
I love this comment here. I trade a 10 pip stop loss 1 to 3 R. I used to trade the exact same, and I'm pretty sure I've still got the template here. I have. This is a 1 to 3 R 10 pip stop loss. Yeah, I used to trade the exact same. However, it was my first invalidation of profitability. My 1 to 3 R 10 pip stop became unprofitable. It was my first time I'd gone from making seriously good money to making seriously bad money, and blowing all my accounts consistently. And I was like, wow, I've gone from consistently profitable to consistently unprofitable. Why? My trades were still hitting TP. They were just hitting my stop loss first. My entry, in fact, where, my whole sniper entry was from that method of 10 pip stop loss. I had to try and time the entry exit perfectly. Otherwise, I'd get shafted all the time. I started doing what Rich just said and realizing that why am I putting my stop loss at 10 pips? Because it's just what I liked. It was easy. It was a whole number. It was an even number. It was just what I liked. However, what I started doing then was placing my stop loss wherever the hell I was wrong. And when I learned that is when I got my 18% January. It was a breath of fresh air because I have traded with a 3 pip stop loss, and I've also traded with a 30 pip stop loss, all within the same week. It doesn't matter where your stop loss is. It matters how much you're going to risk, and it matters where you're wrong. Now, if in fact, going off of the 10 pip stop theory, if we drop down to the 1 hour, there's some nice areas in here. Sorry, the 1 minute. However, let's assume that we took a trade somewhere around here. Now, if we lower our stop loss to this high, and the reason I'm putting it to this high is because if it breaks above it, I'm wrong, because there's a breaking structure to the upside, potential pullback continuation. So, that being said, let's target the lows. Let's target my prior TP. 7.45%. Now, let's go in the theory of having a 10 pip stop loss. You've now got a 3R trade. You've potentially cost yourself money by having a 10 pip stop loss, even though you could have been wrong here. You could have been wrong here. You could have been wrong here. Either way, if it breaks and closes above this high here, you are wrong. So it doesn't matter where, and same goes down here. You know, if we had a 10 pip stop loss here, this trade would have been a 2R. But what if I hit stop loss? Why would I hit a stop loss here? It could still move like this. There's no reason why this could potentially hit a stop loss and reverse. It's just in the middle of nowhere. So with that theory, I started understanding that I need to put a stop loss where I am incorrect in the trade. And if price moves into that direction or moves above that point of interest, my trade is no longer executable. You know, I can no longer execute and open that trade if I hadn't already. And that would be this high. Or if it consolidated here and then broken close above. So then you could potentially have a stop loss here or a stop loss here. Now that is what changed the game for me completely. Yes, I know if you take in price at a lower point, it is going to affect your risk-reward ratio in a negative way, but that's just part of the game. You know, that is just... I've just deleted my... There we go. That's just part of the game. That is just trading. You've got to find the higher probability trades, and then you've got to help yourself in best possible situation by putting your stop loss where you're wrong, not where you want a better risk reward.
Yeah. Sorry.
Yeah.
That's my version.
Like that was a very much I'm not listening response.
Yeah, that was my version of your cool, awesome, mate. Yeah. Sorry, I was just I was doing some admin in the background while you were doing your whole analysis there. But I feel like everything that you said was true, 100%, no shadow of a doubt. K4PO14, sorry, mate. We kind of like went on a tangent there. What's your outlook on GU and DXY? We'll look for you immediately.
Yeah, hopefully that helps people though. You know, like guys, genuinely, like I know it was a bit of a rant and a bit of a tangent, but seriously, it was a game changer for me. I can't stress enough how grateful I was to learn that. And feel free to go test it, back test it. Don't take anything me and Rich say as gospel unless you've back tested it and prove it works for you.
Unless you've joined our cult, in which case
it's unless you have joined our cult. Well, that's a bit different then, you know. It is gospel.
GU. Let's have a little gander at GU. Do you mind if I bring my screen up?
100%. Yeah. Go for it.
Bring mine up. Okay.
I feel like people are looking at my screen for too long now.
Yeah, let me just blind them quickly with this whiteness. Some might think I really like the color white because... Wrong hand. That is white. That is white. Don't worry about that. That's not white. This is white.
That is pink.
This is white. This is white. Let's move on. All right. So
you're cruising into some real issued territory, Ron. So let's beep 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 beep.
Anyway, we had this base area that just got tested now yet again. So this base area was established on the 18th, on Wednesday. Reaction here on the 23rd, reaction here yesterday, almost a reaction. And look what we have just done. We have literally just wicked onto it right now. However, instead of having this reaction and coming all the way down to this spot down here, this reaction that we had over here has only gone down to about this point over here. And when we try to retest it again, same thing has happened. So the range, instead of being quite a bit larger now, has condensed ever so slightly. So because of this condensed range that we have right now, and this reaction that we're having here, I would like to see price pull back ever so slightly. Somewhere over here would be a absolutely perfect area So this is a base, but if I pull it back, you'll see that it's pretty much on the top section of this consolidation that we had earlier in the day. So base plus consolidation top plus a reaction and a strong bullish movement. I want to see a bit of a pullback. I want to get my drawing out again. I want to see price come back to this base area over here. Respect it. And when I say respect, I mean price comes back down, taps into it, does not break and close lower than the box, and starts presenting a new upward channel. So comes down, tries to push higher, retests it, and continues up higher. And then in that case, I would like to come and test the top sections here of GU. So that is what I would love to see. However, something that could just happen, it could just straight up decide that it's going to have a slight little pullback now and then start pushing up. It can happen. Another alternative is we're going to have a pullback, a retest of this base. We fail. We disrespect the base. And we start pushing lower, trying to get back to this low point down here, which to me doesn't feel all that likely right now because of the fact that the top end of the base, this top end that we've tested, remained the same. But the bottom end that this one created down here and tested down here changed to be higher. Meaning the bottom end of the base, the bottom end that we're testing, the bottom end of the range is shifting higher. And because it's shifting higher, I would like to look at price going higher more. It looks like you're about to say something, Will. You look confused.
No, my partner's just asking what I want for dinner.
I mean, was she answering you in Cantonese? Is that why you look so confused? You were like, what does that word mean again?
No, that was just me trying to multitask.
Okay, fair enough. Yeah. So based on this reaction that we're having right here, right now, I want to see whether or not this is short-lived volumetric reaction. Like I said earlier, I always look at how these movements have been in relation to the previous time that we had a similar reaction. So this is a bullish trend that has been established now. Yes, it is on the 5 minute. Yes, it is basically just from down here to up here. But within this short-term trend, when we did have pullbacks or attempts to break this upward trend, how did we react? When we tried to do it over here, it was sideways. Very little attempt to try and push it lower. The follow-up candles were strong, very strong bullish candles in relation to how the price was moving previously. Right now, we're having a larger than normal reaction in this whole upward trend that we've had. So that's one of the reasons why when we were looking at gold earlier, if I go back to gold, this was that one that I said I would have taken if I was taking gold based on how it was moving. I take into consideration these movements in relation to how the previous ones were, and then it kind of like dictates whether or not I'm cautious about the trade or whether or not I'm willing to get in on it. That's why I was like, I don't know if I would want to get in on it, like on gold somewhere over here as an example, because these pullbacks are becoming a little bit stronger when compared to the previous attempts that it had to pull back. So the same concept applies in GU as well. We're getting stronger pullback, and on top of that, we're doing it from an area that we tested multiple times. So I want to see it pull back, and I want to see it reaffirm its willingness to push higher. Another thing to take into consideration is we're 1 hour away from the New York Open. And New York Open means more participation in the bond market, more participation in the stock market, more participation in the futures market. And this is going to dictate how price is going to move with a dollar-connected Forex pair. In this case, dollar along with pound. So there's going to be some reaction. Right now, I wouldn't be selling, nor would I be buying. I would be waiting to see the reaction first. This could be a fake out to try and push, to try and get people to sell to get down here, and then they're just going to be swept out, as an example. Or alternatively, this could just be a bit of a pullback, pick up more orders to try and push higher. I'm more inclined for the secondary, where we're going to try and push up. But it's important to understand that you need to wait for price action to show that this is its intent. Its intent is to carry on pushing bullishly. So you want to see higher highs, higher lows. You want to see your reaction on established areas such as this be disrespected. I want this area to be disrespected. And when I talk about disrespect, I mean it doesn't respect the fact that that's a resistance point. It breaks through it. It turns it into a support zone.
Yeah, literally. So the gold, I'm for testing the entry. It's hit potential entry criteria, but yeah, I agree with you as far as like EU, GU, anything like dollar pound, euro pound, euro dollar. I'm just like, I said dollar pound, I meant pound dollar, euro dollar. There we go.
Look at euro, and this is a good example why I want that confirmation before I just jump in. The problem with this is that you're not really reacting off of a real big established area immediately. If you go more towards the left, then you realize, we've got this whole section over here where previously we tried to react off of. And on top of that, if I just go and look at this base area that we've had yesterday and have had multiple reactions off of, when we tried to break into it, there was a bit of a reaction, then it pulled off to go and push higher. We had a little bit of an attempt to try and push back into it here. We just come back into it, wicked it once again. We're not breaking significant highs. We're not breaking structure all that much on the 15-minute, but on the 5-minute, it looks as though we've broken structure. But let me.
I don't know. I think we need a pullback on euro and then a continuation break above the highs. And that's when I'll be like, okay, yeah, there's a nice, there's a real nice flowing structure break there. Until that, I don't want to take anything until I get a break and close above that where you're at now.
The reason why I'm saying this is that, once again, it's so important to see that how the candles react in relation to how it previously reacted.
Yeah, exactly.
Attempt to try and break this new upward trend, not very strong. Little bit more, lot more. Do you honestly think that this is just a quick little pullback and then a continuation? I'll leave that. I'll leave that for you to ponder upon while you have your I don't know, Kung Pao chicken lamien soup, which, by the way, I would love to have right now. I'm super jealous.
do you want to fly over to Hong Kong and she'll cook you some food?
Dude, I would love that. I would love that.
Yeah, mate, honestly. So she cooked me this dish day before yesterday. So my eating's a bit funny, so I do like some weird fasting method, and I decide that day when I'm going to have food, and it's probably going to be my only meal for the day. And today I thought, I'm going to be a little bit fat. I went out for breakfast, went for a 5-mile run, had a couple of boiled eggs, and then I said to Cece, I was like, can you cook me that meal that you cooked the other day? And she was like, yeah, why? I was like, because I want it really badly. It was really badly. It was all sorts of fish balls in it. And then I had some meat. I don't actually know what meat it was. And then it was in a noodle broth, it was in noodle soup. Oh, mate, honest to God, homemade, which is delicious. It was so good, man. So she's cooking that for me tonight. So I'm very excited.
We have he was in the background, and now he's appeared.
Yeah.
It's Batman.
What perfect timing! Look at that.
Hi everyone. I didn't want to interrupt any soup, any culinary activities. So I thought I
You
would
could have.
wait, the flow as we read the order flow. I'm trying to read the conversation flow, and to time my entry.
You could have
It's
rung
all
the
good.
bell for the restaurant, the Fivers restaurant, where we cook every day. You could have just rung the bell. We would have opened the doors for you and invited you in lovingly, open arms, to have your
some-
say.
Yeah. Yeah. Dude, I was just.
Go ahead.
No, go on, Victor.
Guys, get a room.
I was gonna
both of you.
say, what a great idea! Shall we all just hop on an airplane and go have a culinary experience at Will's place? I mean, the way he described that meal, I want to have a piece of that as well. I mean, wouldn't you, Richard?
I was salivating. That's why I had to take a sip of water now. I needed to quench this salivation.
Dude, I need to go have a cold shower.
If only we had water, I would have gone and taken that. But I think I have a swimming pool that calls my name today. So,
oh, nice.
Who kicked Victor off?
Victor has just changed.
Hello, guys.
Yo, it's good, Samir.
How are you, Samir?
What is up, guys? I can hear
Blood
some
pressure.
food talks here. I'm getting
My
hungry.
blood pressure is up right now. Actually, my blood pressure is low. I need sodium. I need that ramen. I need it.
Oh, right.
I need my sodium levels to pick up.
Yeah, so
I'm feeling a
one.
cramp.
Let's go. 1, 2, 3, 4. CC us a table 4, please, for that thing you cooked me the other day. Guys, it'll be ready by the time you get here.
24-hour
I think
broth.
that's a very pleasant proposition. We say it jokingly, but somewhere we're not actually joking. I really would like to test it out. I'm sure Richard is
serious.
Yes,
Dude,
yes,
yeah,
I know.
100%.
Samir as well. I can see it in his eyes. He heard
Yeah.
food talk. He said he came rushing in, ready to hear what's up.
Yeah,
Samir's sitting in the background listening to food porn, and he's like, "I gotta join in on this conversation."
I
so
also need something.
yeah, this is probably going to sound very unsavory, but I'm being as serious as cancer right now. I would love that food.
Oh my god!
That's how serious I am. I want.
Well,
that
we better
right
cure that and get you to Hong Kong.
Yeah, satiate my my hunger and my inability to put a guard in front of my mouth and just kind of like have verbal diarrhea.
Anyways, guys, how has the markets been for you guys, Samir and Victor? I feel like we need
That's such a good twist, Richard. Going from culinary talks to go to verbal streams. Shall I not say the word?
I am a wordsmith. It's just a shame that my brain and my tongue is not always aligned with which words I'm going to be using.
Bro, I feel you.
All right.
Actually, we have, before you guys go, I want to have maybe 30 seconds of your thoughts. Is EU reversing or not? That is the question of today, as far as I'm concerned. What do you guys say? Yes or no? Is it reversing or not? Up or down? By the end of the day or by the end of the week?
Let's look at the day. First and foremost.
That's a good question, Mohammed. I don't know.
End of the day is going to be bullish. Let's look at the week.
Man, I think end of the week could be bullish. I reckon, like, you're looking at Euro USD, right?
Yes.
Yeah, I reckon we're going to try our hard. Either 18.13.7 or 18.26.5 by the end of the week.
Could you mark those, Richard, on your chart, since we're all watching?
Okay, so
about half
what was
a
Will's
billion
prediction?
eyes watching you right now, Richard.
What was Will's prediction?
18. Okay, let's go with 1812.9 because it's just what's in front of me right now. So 1812.9.
Okay.
Or
That's the wrong color. I want that in black. Okay.
Or 1826.1. No. Do I want to go 1826.1? No, let's go. I can go a little higher. I think I said 1826.5. Yeah, let's go 1826.5.
That's for the end of the week, right?
That's for the end of the week. That's based on how price action is on the 4-hour for the week, for the end of the week.
Okay, so this is Will end of week, and what is this one? The 18.112? 18.12?
Still end of week. It's one of those, like, between that level.
Okay, so let's just do this rather.
Well, yeah, exactly. Friday is end of the month.
Okay, here we go. Okay, Samir, yours. What is your prediction?
Actually, I am bearish on this one because of the candlesticks that we are forming on the daily. We are rejecting
Nice, interesting.
from above.
Okay,
Just
so what is your prediction?
okay.
What is your
We
number?
have my chart. So I don't like to see the previous data. So I want to focus on this data. And right now I can see we are rejecting from here, and where we potentially can go. I think this can be the next target, which is 7421. Let's make it a psychological number, maybe 500, just to be a little bit safe.
500. Okay.
Yeah, let's see how many pips it is from this current leg we have. It is only 36 pip. Let's see if we do have some areas which is untested. Okay, we have these fair value gaps which are untested. So I do think we can test these areas, which is let's say, okay, it is
So
117,
17.
just to be, yeah,
117.
17117, just to be,
Okay.
more precise.
So
But
your zone is 17,500 to 17,117.
yeah, exactly. But the question is, we need to reject from this area, and definitely we are seeing some rejections once we break this area. Okay.
Okay, so we have Will's
Somewhere
end of
close to
week.
that.
We have Will's end of week all the way over here. We have Samir's end of week all the way over here. My prediction for the end of week is a little bit closer, I think, to Samir's than it is to Will. I think this whole base area that we have over here is a potential to be tested.
Nice.
So if I go down to the 4-hourly, I think that we can not necessarily reach this, but maybe this low point over here. So I am going to say that my prediction for the end of week is 17,600 to 17,434.
Well,
Okay.
credits to all of you, because EU is really in the middle, and I am going to, well, I don't want to, cheat the game or anything, but I think I'm bullish as long as I'll tell you guys where structures I'm watching, but as long as that holds, I think I'm gonna be bullish for the end of the week, or maybe not the end of the week, but between now and the end, right? It may switch back to bearish, because I certainly think the higher time frame is bearish, the weekly is bearish, and it's going to be at least just a pop. I don't know if it's going to continue further. As long as it holds the level. So I'm gonna tell you guys what I think. On let's say on the 1 hour, we currently have a fresh order block, right? So if we go to that order block, I'll tell you guys which one it is, and it is this order block right here. This structure needs to hold, right? So that means that we have an invalidation line, which is 1.1771. If that line holds, and it doesn't need to hold with a wick, it can, you can be a little bit flexible and let it be squeezed with the wick, but the close, at least on the 1 hourly, should not close below 117.71. That's just my idea. That's my trade. Not my trade. I'm not in the trade, but I mean, that's my
Your prediction.
Yes,
Yeah,
my
do I
prediction
like
for, and I'm targeting with my prediction. Let's say I can put it in here, something up below this level, but that's the invalidation line, a couple of pips below, whether that's 5, 10, that's up to whoever, and I'm targeting the next level up. Let me double check if that's the target. Yes, I'm targeting that level. Why do I say that? And I'm not targeting the higher level, the swing high, because that would be assuming bullishness on a higher time frame, which I'm not. What I'm seeing is that on the higher time frames, let's say the daily, it's still bearish. Look at that bearish order block that was created today, right? I mean, yesterday at the end of the day, the bearish order block. What does that tell us? It tells us that, market are eventually going to go lower and reach, probably, I don't know, going to go lower. However, on the lower time frame, so I think Samir is going to be right. The further down the lane of time, he's going to be right. However, on the lower time frame, I see that the market has given us this little push, and if we see, it is actually a a fresh retest of a bullish order block that was created. We came back into it and moved out. That's a nice move, and we came back again, and we have now. So this current candle tells me that we could be in for a follow through movement. And if you look to the H1, you will see that there is actually a very beautiful fresh, not a fresh. Let me show you guys where it is. So we have this. This is the quasi right here, right? That's the established downtrend. We break it, and we come back to retest that little fella or that one, whichever you want. And we did have that reaction. See that fresh order block? So that makes this order block, the sand in the line. If this holds, then we should be able to push at least to this level, but probably because we've already retested this level, probably
Slightly
at
lower.
this highest level, right?
Oh,
So
but higher.
maybe, yes, maybe this
Yeah,
is
I like
the conservative target. But I would say if we have a push, we're probably gonna be retesting something higher, but not break the whole structure, that swing point necessarily, because I think by that time, the higher time frames will catch up and will push price much lower. That's my prediction. I mean,
Okay,
it's
so
just a little.
Okay. All right. So let's put a number on a
I was
screen.
gonna say, let's have that let's have those numbers.
Let's have that number.
Either an area or an exact prediction number. Let's get that up on.
Yeah, I want to see
screen.
Victor's version. So I've got the text Victor's end of week coordinates. Where do you think?
All right, so I think it's gonna reach, let's say, 1.18196, and because it's a structure, let's take 1 or 2 pips out of that. So let's front run that. So 1.18176, right? And the invalidation of that idea is, let's say the lowest point here on my chart is 71. So let's take 10 pips out of that. So 61. So 1761, that would be my stop. If it goes below there, or it closes below 71, then I'm not interested anymore. And we're likely just going to continue lower and going to be reaching rich over some years levels by the end of the week.
So from what I can see here is that Victor is a very wide range, and he's covering his odds here.
Oh no, but I mean, invalidation is only, it's not the target.
Okay, so what's your target? What's your end of week target?
I think it's gonna reach between now and the end. It's gonna reach this level. I don't know if it's gonna be there by the end of the week.
Is it there or thereabouts? Have you got a low or a high? Like, is it an area or an exact prediction level, and that would be your high?
The high would be that level that I gave, 118.17.6. That would be the high of the week level. Is that correct? Let me double check.
So
yes, that would be the high of the week.
118.17.6. All right. So you think the week is going to end bullish?
Actually, I can't say it's the high of the week because the high of the week is already 118.34. But I mean between now and the end of the week.
Okay. All right. So 118.17.6.
Yes.
So let's go 118.
I mean, to me, it's just a line is fine. No, just a line is fine.
I'll give you a little bit of a range. I'll give you a little bit of a range. Just so that you're a little bit more aligned with Will, and I'm a little bit more aligned with Samir. So there we have it. We are split. We are split evenly. Will and
50-50.
Victor, thinks that it's going to end in bullish movement by Friday. And Samir and I are more aligned in the idea of a probabilistic lower movement by the end of the week. I'm going to keep this on my chart until next week, Monday, and then in the afternoon, we'll see. And this is just for Euro, by the way. This is just Euro. Okay.
But it tells us really that EU can go anywhere, up and down, because we have on both sides. You have enough arguments about enough reasons to build your case in that direction.
Yeah, fair, 100%. But this is a prediction, and a prediction we want to be a little bit more one-sided. I want to be either on the one or the other side. Otherwise, we're going to have fence sitting where both legs are
legit political answers.
Yes, we may or we may not have done a certain thing. Well, did you or didn't you? We may or we may not have. This is not Scrooging.
There is a high chance that we have done it, but there's also an equally high chance that we may not have done it, because the possibilities are there. It's like, just answer the question.
All right.
Depends on your interpretation.
Yeah, I mean, it's always open to interpretation. Okay, so we have predictions. Myself, Samir, and then William and Victor being aligned. So you guys have to come back on Monday to see whether or not which one of us is the best trader ever.
Or which two of us are the best traders.
Okay.
Right now, votes are 50-50.
Yeah, which duo is the best duo? And remember, if myself and Samir are correct, Will, you're going to have to leave our session and join Victor. And if Will and Victor are correct, I will leave our session and Victor can join it, and I will join Samir's session because it's just fair that. Anyway, I'm joking. All right, guys. You guys must have a lovely day.
Okay, go ahead.
Yes.
No, I'm gonna have you. I'm not gonna interrupt you. Go ahead. Sorry. Go ahead, Richard.
I just wanted to say thank you to everybody that has joined us today for this live stream. Please drop all of your questions in the chat box for Victor and Samir. If you haven't already, please drop us a like. Subscribe as well. Yes, we've reached 100,000 subscribers. We would love to have more. I've already told you guys that the 100,000K subscribers giveaway will be on the 11th of March. So a week and a half or so. And then we have a nice giveaway. Well, it's technically 2 weeks because it's going to be the next time that Saul is on the live stream. Yeah, that's it. And then have fun. Good luck.
Awesome stuff. I'm actually going to be jumping off as well because I can smell and hear the final sizzles of what CC is cooking. Dude, I'm excited and I'm so hungry because, like I said, I only had a couple of boiled eggs after a 5-mile run and now I'm starving. So, guys, I'm going to also love you and leave you. And I shall see you tomorrow. So, guys, thank you very much. Again, please leave a like and subscribe if you haven't already. And, we'll see you mañana.
Awesome.
Take care, Will.
Will and Richard, thank you for your predictions.
Take care, and thank you.
Before you guys leave in the background, stick around just half a minute. This trade, you may take a note of this, Rich. I'm not gonna actually take the trade, but I think this is the area. If anyone is wants to be listening and following the order block system that I'm using, the strategy, this is the order block that is being retested right now with a stop. That's the entry right there. So we would have been in. I'm not actually taking in, and you shouldn't take it as well. But just follow this. Put this on your chart and follow this. This is Rich. If you don't, just if you're interested in following this for the next couple of sessions or not. Uh, Let me indicate it here. How, let me.
It's 1 point.
There you go. That's
Open.
the entry 77. Stop at 66.7, and the target being at 19. Okay. It's something to keep you interested for those who are watching, and Richard's in the background having this conversation with me. If you think I'm talking to myself, I'm not. I'm talking to Richard. But anyways, maybe we'll get a very quick stop out, and that's fine. Or we will get a nice 4R out of that little trade here. All right, we have in a lot in store for you today. We have no one less than the actual CEO of the Fivers coming in, joining us shortly, showing some amazing scalping skills as always. So stay tuned. We have a 100K subscribers milestone celebration coming up, which Richard was talking about. And Samir and I will be uh, analyzing the market as well as perhaps even taking a trade. This is not a actual trade that I'm in, but this is according to the strategy that I talk about all the time. And it is a reversal strategy. As you can see, the market is retesting bullish structures, right? In a bearish trend. So it is a contrarian. Not necessarily you can use it with the trend as well, but in this case, it's being used as a reversal trade, reversal entry to hit something in this structure before we continue lower, because eventually I think we will be going lower, but before we do so, I think the market is setting up for a possible pop from here. It may be short-lived, it may be something only for today, and that's why I didn't want to say at the end of the week, because it might be just a little pop and hits that structure, and that's all it gives, and gives consolidating there and perhaps going lower. Who knows? We'll see. We'll even see. We don't know yet if this is actually going to move higher. Remember, this is we're not giving out financial advice. We're not giving out signals. You have to do your own due diligence. But this is just a fun way to follow maybe market on the chart as well, and the same entry, stops, and target, and engage us in the chat why you think it is or it isn't a trade that looks good, and whether or not you would take this trade as well. Okay, it's a sort of a conversation starter. All right, so Samir, how is the market looking on your
I was,
side? The Nas broke
yeah,
out a little bit this morning, or not this morning, but I
yeah,
mean
exactly.
not long ago. Maybe you should go to your screen to see what you're seeing. Of course, you're trading the US 30, not the NAS, but what are you thinking about the US equities in general
Yeah,
after
for
the
the
State of the
analysis
Union?
purposes, I can share my
Uh,
views, and
Go ahead.
so I was spotting some opportunities on these pairs in the background. So for NAS 100, I do think this NYSE we may can push to the upside, and we can tap this supply area, which to me seems clean. Why? Because we never tested this area, and I know you might be wondering why I don't have the EMA. For the regular viewers, I do have it here. I just hided it for you guys just to give you little bit more details about the price or price action here. So right now we broke above this area. I don't like this breakout, but if we see 200 EMA and if we go to the 15 minute, right now we are indicating very huge bullishness. I have one type of setup, which is if price is way too above or below the EMA, I can take a counter trend trade. I will love to take a counter trend trade here, based on the fact that we are way too extended, as this EMA, if price push to the upside, this EMA will also get like this. So I will take a reversal trade here, at least to the EMA or any structure point that we have here. This is the first plan that is here for NAS 100, and the other plan can be, what if price just dumped below and liquidate these areas and tested the EMA, and then it tries to go to the upside. This can be the plan B for today. And for that, let me give you some areas that we can deal with. We can go to the 30-minute. Okay, 30-minute. I do have this kind of a area, demand area, but please note that thing also, these kind of areas do get liquidated sometimes. So I don't want you to keep your stop loss very tight. Let's say you take a trade here and you keep your stop loss here. I am not that kind of trader. Let's see if we see some kind of rejections from here. uh, let's say we go on the 5-minute or 1 minute, we do see some price closing above the fair value gaps, or change in some kind of direction, then definitely you can take a trade here. Stop loss can be here, and that can be your target. So these are two areas which is very interesting. NAS 100, I'm gonna make it a red here because I do like the price action on this pair for today. So both the plans are making sense to me, and the confidence level on this on these two, plan A and plan B, both of the plans are solid for me. So definitely I will keep this as my A plus pair for today. Let's move forward. For let's take a look at gold for our gold traders here. For that, I have to start with the daily time frame, because gold really can mess up with the, if you focus too much on lower time frame. For the daily time frame, we are just breaking this resistance area and testing this as support area. And at the same time, we have tap this fair value gap. uh, okay, so Victor is in the background. My camera is a little bit here and there. Okay. So as I was discussing about gold here, so we tap the fair value gap, resistance turning into support. So definitely I am bullish on gold. Now it comes to the entries where where we potentially can enter. This entry is missed, as you can see. Price retested just that 70% area. So right now, if you enter somewhere around here, it is good. Right now, I will not, recommend you to buy here, because your stop loss will be way too wide, because this should be your, logical stop loss. If this is the structure which broke this structure, so this is the strongest point. So your logical stop loss is here. Let's go to the 15-minute and see what do we have. So we have these, some rejections area here and there. So I think if price decide to go above and play something around here and give you some kind of correction pattern, then you can use your trend lines for the entry, something like this. Then your stop loss can be something like this, and your TP can be something like this. So gold bullish for me today. I am not looking for sales, and this is not the A plus setup for me, because we have to wait for price to settle down or to give us some kind of confirmation so that we can enter to the upside, or I can get involved in longs. For me, just wait for some times on gold, and then we potentially can look for buy setup, as my bias is bullish on this particular pair. And for the euro dollar and
Before you
GBP USD traders, oh, we have a, okay,
switch that.
so we have,
Hi there. Let's exactly, let's put Saul in. Samir, thank you very much for your analysis, your breakdown. I'm very sure that everyone is enjoying and appreciating that. We will come back to your idea about EU,
yeah,
because I think we are very. I'm personally very interested in that. So welcome. Welcome to the stream again. Thank you for making some space in your very busy agenda, schedule as the CEO of the Fivers, to come and visit us in the stream. How are things on your side?
I'm very well. Very wait. Let me. I'm on a on a one screen setup today. So yeah, I will have some difficulties here with the PC, but overall good. We had the 10-year celebrations last week, which was a very exciting one, and a good time to share a little bit with the community what's going on. We had what happens behind the scenes at the company, and to show you some of the faces. Of course, the launch of the futures programs, which is something we're looking forward for a long time now. So yeah, happy and exciting things happening these days. I'm looking forward for today's session.
Perfect. So we're gonna put your screen, if that's okay with you, on for the viewers.
Yeah, sure.
Perfect. But before we go into the nitty gritty of the charts and PA and everything else, how was the reception? How was the feedback we're getting from the traders out there who have been waiting for futures, and finally we have the futures launched? What are people telling us, telling you as the fivers?
Yeah, it's overall it's being positive. Of course, we're still testing the waters. We're still getting used to trading behavior, assets behavior, programs performance, all of that, the risk management, the platform's stability, everything. So we're kind of in beta stage, and once we feel we're comfortable and everything's looking good after we gather some data, then we'll be ready to launch it fully. But overall, it's been good response, and yeah, looking good.
Perfect. Awesome. All right, so what is let's switch to the charts. What are you looking at today? I mean, we have yesterday there was the State of the Union. Trump was talking about everything, how great America is. What are we looking? Is that a theme? Are you looking to go into dollar strength, dollar weakness based on that? Or is there something else on your mind? Or what are the charts telling you, regardless of the fundamentals?
So I'm looking at dollar yen. That's the pair I've been caught my eyes when I opened the daily charts. I saw we're coming in this impulse in this leg. We had a strong bullish day. Then we have a chance to pull back, and then it was more continuation to the upside. So we're about to reach a resistance level, but we have room before we get there. And also, when we zoom in to that resistance levels, we'll find out it's not a super strong one. The stronger one is all the way up here. So I think, if any, we're going to react to this level. We're going to have some pullbacks, and then we'll have the opportunity to go even further to the next resistance levels, all the way there. So that kind of gives me my bias for the session, which would be bullish. Then when I zoom in a little bit more, we see in more detail what I just showed you. We had strength, and we're coming from strength again. Wait.
All right, so we having Saul is will
We
be
have
shortly with us again. Let me wait.
Yep.
We'll have to wait for Saul to be. Oh, there he is.
No, I'll find
There you are.
out. Sorry about that.
No problem.
Sorry, I was saying. So then I zoom in a bit more. We see this consolidation, this flag. I see this area here, also this strong demand here. I go to the 1 minute chart. I make sure, from pivot point to pivot point, I have enough room to make money. So let's just measure, from this, we got 11 pips here. So if I'm looking for 3, 4, that should be enough. Let me zoom out a little bit more on the 1 minute chart. We have demand over here, and we have, I don't know if we already tested or not. We have this demand over here. Maybe we reacted from that one already. And now any pullback towards this demand area or this lower demand area here, those will be good opportunities for me to to buy. We have the mid-range one here. So we can, like as you see, we have a lot of layers of demand in case people price drops. We have all these potential buying areas. So let's zoom in, and I'll try to find now setups on the 1 minute chart. Any pullback will give me the opportunity to buy. Let me make this bit. You don't see. I don't. I think you don't see it on your end, but I have opened my
Pop-up.
one click chart.
Mhm.
The depth of market for me to just enter trades quickly. So now we're trading here at the resistance. So now I want to make sure we have a deep enough pullback for me to make money. So around this area, you can see we got like the 5 pips or 4 pips. So any pullback towards this area will be deep enough for me to start buying. If we break the resistance now, then I'll wait for the pullback. If we do break, then I'll wait for the pullback to the breaking area, and then I'll take the continuation higher. So I think I'm happy about the setup. I have the bias bullish. I have levels like key strong buying areas, and I'll try to find now buying setups, and I have like kind of everything aligned. So that's what I'll be looking for.
Yes, I like how you have the bullish bias based on the higher time frames, and very importantly, you're not you have a bias. The market is moving in that direction. Like we are breaking sort of a trend line, a downwards trend line, from the previous swing highs. But you're not going to go in yet. You say, I wait for some demand areas to be retested, then I get in. So you want to get in sort of like on a discount, and I think that's actually quite important for traders who are new to trading. You get to choose when to enter,
Yeah.
and you get to choose your better entry, and that's there's a lesson, there's a gold nugget right there. Not just because you think it's going to go up, you enter now, but you choose the area, the demand area if you're going long, and the supply area to go short, then you get in.
You can see how wobbling is the candle is not staying low enough time for me to let's just throw one. Let me see if I can get in. Let's see if we can pick 3 pips from here. Where would that put me? Well, it's challenging challenging to trade on one screen. Yeah, so 3 pips would be all the way high here. So it's a bit high. It's not the best entry, especially because now in order to hit my TP, I need price to break these resistance levels. So I'm kind of asking the market to make an effort in order to get to my TP, which is not what I want to. It's not where I want to be. I want to wait for this to come even lower, so I can set my take profits below the resistance. So then, even a retest of the resistance levels that would give me my take profits. I don't need the price to break this resistance level in order to target. But let's just see.
I think it's going to hit it quite likely, since I'm looking at the 50-minute, and it looks quite nicely for a little pop here on the 50-minute, which is closing in a minute, almost 2 minutes. So we'll see. I like the direction. I like the fact that it's a pullback, right, on the higher time frames,
Yeah.
from a very impulsive move, and likely to be going higher, since I agree with you with the levels at 157 to be reached, in the near future, maybe tomorrow, maybe today.
Yeah. Yeah, so let's see.
Yeah, the momentum on those time frames are decent.
Yes,
I mean,
market is. Go ahead.
yeah, probably this is an you never know, right? Like sometimes if you think you find like a good entry and you see momentum picking up to the upside, sometimes I'm like um, tempt to
Mhm.
swing these trades and to leave them open, to leave them run because we might potentially have now a US session completely bullish, and if that's the case, we might be visiting the next the levels I mark on the daily charts. We might run what's distance here from where we are now to the resistance area. It's like 60 pips. Yeah, it's quite a lot, but it's doable, right? Like sometimes that happens. But I'm not a good swinger, so I prefer um, to let to bank my profits before the big breakout of today's highs, which is here. And if I have opportunities on any pullbacks to rejoin that movement. But trending markets like today, this is a good days for swing traders and patient traders. It's just not my best skill, but it's today might be those days that it's worth holding those trades for longer. But you never know, right? So,
Yes, and we see you are holding this trade a bit more than. There you go. Nice. I think your TP was there. I didn't. It wasn't visible to me, so I didn't know. I thought it wasn't in a TP. But yes, I see it. Nice TP right there. Nice push, and right, nicely caught, I should say.
yeah. So now this break, this has formed like a new mid-range demand or something like that. So now if we get a retest to this area, this is a good break and retest setup. So I'll wait for hopefully this is not going to just run away from me, but now retest towards this area. Those are good opportunities now to rebuy and to this is a new setup, so I can try to buy it again.
Nice. I like that. You mentioned
So
that the market
do you
was.
change your bias, or
Go ahead.
you?
Go ahead, Samir.
I was gonna ask. So do you change your bias, or you keep a fixed bias? So right now you want to take longs only. So so you have a fixed bias, or you can change it in future. I just want to know about it.
Yeah, the bias within my session, it usually doesn't change because my bias I bring it from the dailies, and within the hourly session that we're gonna be trading, it's very unlikely for the bias to change. But that doesn't mean I will not trade against that bias. I'm only minded that I'm doing like counter bias trades, and I will take them. You might see me do that. If I have a good setup that
Yeah,
it's
yeah.
counter bias, I will take it. I'm just minded that I'm kind of fighting the bias, but it's not that the bias changed. The bias is the same. For me, the bias is still bullish. But if I see a good setup
Oh, okay.
to short, I will short it. I'm just minded of price action.
Nice, nice. The market's moving very nicely in the direction
Okay.
you spotted in. Um, so you mentioned something here before. You said that the market was wobbly, was moving very quickly, didn't
Yeah,
get you a chance to get into a better price. Does the what does the wobbly mean to you if the market is, moving very quickly but not directional?
correct. It means that there's a lot of interest in certain prices. We've seen this when the market is going down. We're not seeing that right now when the price is going up. But you can see each time price is going down, like in this candle here or back here at this candle, or even this candle back here. Every attempt for the market to go down, there was already like pushing buying orders, like pushing market up. So there's a lot of you can see there's interest of moving the market to the upside, and it's struggling to go down. So if there was like a momentum in I don't know indicator or something like that, I'm assuming there's a lot of momentum to the upside right now. There's a lot of interest to buy the market. This
That's
specific pair.
yes. That's very interesting to hear
Yeah. But
you say that.
I'll say so now I need two things. Now this is my new high. So now I want a deep enough pullback to be 3+ pips before this level. Again, I don't want my TPs to be above here. So I want the pullback from the high to be at least 3 pips. So it's right now it's a bit tight. So I need a bit deeper pullback, and that would bring us, to the retest area, which is what I wanted to be more active. So I'll give it a chance to go deeper and to keep reading, and you can see, how it's just going up and down and up and down. There's like a lot of orders being triggered right now. It's like kind of the market trying to decide where is this going to break. Where's the next the next leg going to be for? I think there's a lot of volatility around USD, and specifically here dollar, yen. I'm guessing about this Trump speech, and the situation in Iran and all of that. That'll have a strong impact in the in dollar behavior, and I think that's part of the volatility we're seeing here.
Um, I was thinking about that wobbly phenomena you or description you gave.
Yeah,
Would it be fair to say, it's caused by high thick value volume?
yeah, but where's that volume coming from? No, why is suddenly the volume high?
Yes, I would. I know it's not the explanation, what is happening, why, but I mean, that's the same as high tick volume, right? A lot of ticks up and
Mhm.
down happening in short moments of time, and
Yeah.
that's what we see, right? Is that
Mhm.
the same thing?
Yeah, absolutely.
Okay. All right.
Now,
That's interesting. All right.
Now, this is a candle that was kind of unexpected. And I'm aware of, like, it's no problem. I just need to take that into consideration. That I was expecting, as we meet this buying area, to see some tails forming. So now the candles, closing strong down, that makes me hold. I want to now get a bit more confirmation before I keep pulling the trigger and buying positions, because what I expected here to happen didn't happen. So I'll keep reading price action. But now at least I do have my enough room for my entries to the TP. So I have 3 pips before we hit and we'll revisit the highs here. So I'm happy with that. Let's see. We'll keep reading price action. I'll manage this trade now.
Where would you consider a second entry to be added? I see you already added one.
Yeah, I added just to add a little bit to my first entry, but around, I guess it's down here. Unless I start seeing a different price action, this looks like news behavior or speech behavior or something like that. Something strange about this volatility. So I don't know if I'm missing something fundamentally.
I'm double
Let's see if there
checking.
is any sudden
There's no
news.
news according to.
Okay, let's
No,
go.
there is no news. Actually, there is in 8 minutes. There's going to be a yellow folder event,
Yeah,
which is the Barkin speech of FOMC, FOMC member, a yellow. So it's not supposed to be a huge thing, and it even didn't happen yet. So
yeah,
I'm not seeing anything on that side. We did see, Saudi Arabia about oil outputs on. Iran contingency. But that was also about 7 minutes ago. So I don't think that move. I don't see anything on financial juice or anything or otherwise. So who knows?
understood.
Maybe it'll pop up later.
Understood. So, because I'm small, I'm feeling like, okay, let's make money out of this position. But if I was heavier, I would be thinking on, okay, how do I get out of this position with the least loss? Okay, with the smallest loss possible. Um, just because of the change in behavior after this scandal. But right now, we are at this level. Last time we were there, there was a lot of buying pressure. I'll keep reading price action. I'll keep adding at valid entry areas. So right where we are now, a bit lower, and then I have these buying areas. And if the market keeps pushing down, then I'll need to switch into or taking losses or fixing the trade. So we'll see how it goes.
So your switch to defensive play now.
Yeah,
You're looking into the exit, how to get out of this trade with the least loss, or the with some profit or at least loss possible.
yeah.
Um,
Not just
and
yet,
that's
not just yet, but yeah, but
yes,
we might get there. I'm still
yeah,
there. Yeah,
and that's all because of the last couple of candles that are way bigger than usual. They
correct.
have very little lower wick, meaning that they were sellers were dominating in that candle. Right, that's the change of character, so to speak, the behavior of the market.
Correct. So I want to be minded.
Perfect.
I want to be aware. I mean, I still have the bias in my favor. I still have the momentum, which has been to the upside. If we see the 5 minute chart, nothing has changed. We're still trapped in this kind of channel. Just the last volatility that came, that's the only thing that makes me, okay, let's reanalyze this before adding more into this position or the way we're going to execute the trade.
I see that. Let's double check. Yes. Okay. Perfect. All right. So the
In
market
order to
has.
fix a trade, do you open a like a hedging position also?
Yeah, this account is a netting account. I just changed it for to make my easier to manage the trades. But on a hedging account, sometimes you can hedge, to kind of to pause things and to analyze again. Okay, what's my position? What I want to do. But before hedging, it's always wise to understand how to how to
Yeah,
hedge.
yeah.
Sometimes it just gives you more trouble than the benefit. But let's see, we're kind of hitting that support. Yeah, we're kind of there. Let's see behavior right now. I like the tails. Okay,
Nice. So
now
the market is pushing hard to the downside, but reacting to these swing lows. So let's see if these levels they hold or not. Um, Very interesting. I think people watching us are on the at the edge of their seats, watching the market. Uh, and how would you handle a position like this? Would you close all of it in 4 pips profit? Would you start
yeah,
winding down as it pushes up?
no,
What is your
for me it's it's the same position. So I'll just look for the 3 4, the next key level to take profit. So that would be something around here. That would be my TP level. If I see it's gaining momentum to the upside, then I might start like peeling off the profit and then maybe leaving some to run. But basically, my TPs are there. Like,
I like that. I
yeah,
like that. You're not making. You're basically paying. By adding at a better price, you're making it easier for price to reach you, as long as it doesn't, just go very rapidly down. The
correct.
market usually comes back to some level, and you're right before the next supply zone, even on the 1 minute. So that looks
Correct.
kind of nice.
Yeah, I just need now a little bit of bullish momentum. We're kind of, we're zooming out. We're kind of in this the range. So I just need now the price to go back to the mid range, to the middle of the range. Right now, I'm kind of break even. So if I was very heavy in the position, you can always, take one off just to reduce
Hmm.
size to not be overexposed. If you're very heavy on size, you can always take the full trade for for break even and take a step back, reanalyze your trade, and then re-engage. Right? It's not this, it's not the case right now. But let's see. I took one off. Let's see if we can meet, if we can get to my TPs.
Are the way you trade, Soul, there's a message or a question in the chat. Is this acceptable or accepted by the Fivers the way you trade?
Yeah, sure. Why not? I mean, as long as you have your risk managed, and yeah, it's I mean, it's fine.
Perfect. There you go.
No, as long as you understand what you're doing, we're all fine.
All right. So if you guys have any other questions related to how Saul trades, related to perhaps the style, the strategy, where he puts the stop, why he entered, why he peeled a few, position off, now is the moment. And while you're thinking about your question, don't forget to hit the like button, subscribe to the channel. Soon we will be having that 100K subscriber milestone that we hit last week. And we're going to have the celebration with a lot of giveaways. So like and subscribe, and keep those questions coming.
Yeah, looks like there's something coming here. Looks like there's going to be like a fundamental move shortly, just based on volatility and recent price action. You can feel how everything changed. Suddenly, the whole momentum has switched to the downside. So if we do break this and we start closing below the levels and creating lower lows and everything, then I really need to either take the loss or to see how I get out of this position. Let's see. We're approaching now this the next buying valid entry area. We're coming there strong, so I don't want to just add into it. I want to wait and see if we have any confirmation or slowing momentum as we reach these levels. Kind of those tails, for example. Let's see if we can create some of those. And then if I can bring my break-even area low enough so I can take profit now at these levels, that would be a killer, because then I don't need to, again, I don't need the market to break any key level in order to take profit. So let's see if we can get a reaction here.
You're casually putting 9 lots on, and while talking to us, while the market is pushing against you, that tells you you have good stomach or a nerve of steel. It's something important, right, to have to keep your cool as a trader, not to be uh, pushed into panic mode or being fearful, but trading rationally, not with emotions.
No, I mean there's sometimes emotions there, but I'm just executing like a plan. I'm executing of what I'm seeing. This, for example, this is against what I want to see. Okay, so if I start getting like oversized here, I also want to start banking losses. Not adding into this position, but taking some of the losses on purpose. It's nothing catastrophic yet, but if we start having like these tails and then being rejected and breaking down lower, 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 then at some points you need to kill the trade, right? So right now, for example, maybe I want to take 2 out to go back to manageable size, and then I'll be able to reallocate those later on. So we're completely breaking this level. Looks like we're going through, and the next level available is all the way down here, which a bit far. We have at least 7 pips before we get there. So I need to take that into account and to ask myself if I want to hold this trade for an extra 8 pips in a drawdown before any potential pullback. So that's also something to take into account.
What is your thought process? So when you're because we all face these moments when market moves against us. That happens to all of us. It's just, it happens to all of us constantly. Well, what is your thought process when things are not, the initial setup is not resulting right away? What do you think then?
First, I ask myself, is this fixable or is this not fixable? Because if it is not fixable, I mean, if I was going to 5 minute chart and I see no lines of defense for me, you need to kill the trade. You need to take the loss. You need to bank it, because that will allow you to leave another day to trade, right? When you don't learn that lesson of taking the trade and understanding the trade was not successful, you put yourself into all these emotional roller coasters, and you don't want to get there. Now, if this is fixable, if this has the chance to get to be fixed, then you create a plan and execute based on that plan. For me, the plan is to scale in and scale out as I read price action and as we reach these valid entry points. The strongest right now is the next one. I'm not sure if we're going to just break through it, if I'm going to hold the trade, the position towards the next two ones, because that'll put me already in a ugly drawdown. But as long as we hold above this level and I can find valid reasons to keep buying, then I'll try to fix it.
Yes.
And that's it. Just to execute. As long as you understand what you're doing and why you're doing what you're doing, then then you prevent those emotions to kick in the first place. Because you're under control.
So basically, you ask yourself if it's fixable or not, and if it is, you make a plan and you execute that plan. And if it's not fixable, you cut it as quick as possible.
Correct.
Yeah, that makes that's very hard to do though, because it's taking the loss is difficult. How do you how do you how do you handle? Do you have tips or things you have done that makes you better suited to take the take the loss, or to still execute the plan while it's still getting difficult, so to speak?
Yeah, I think many times we think of a losing trade. We think it's a reflection of how we are as traders, and many times, there's most of the times there's no relationship between losing trade and us being good or bad traders. For me, if this trade fails or ends up losing money, doesn't mean I'm a bad trader, right? So I don't get engaged with the trades. I don't care. Like I play basketball. Some days I win, some days I lose, and it's the same with the trades. Some will win and some will lose. And after it was 2020 when I had this big loss, just because I didn't take the loss, when I needed and when I was supposed to, I ended up losing a lot of money. That's a place I don't want to go back. I don't want to go back. That was a horrible experience, right? So now I know I have my I keep my losses at a manageable size, and if any I need to just take them, leave another day. The next session or tomorrow or in 2 days, I'll recover that loss and move on. It's just like a game. You just need to keep playing.
Sound advice. Would you say then trading small is a good thing because it allows you to not care too much and not get too emotionally engaged in any specific trade, so you
Yeah,
can have
absolutely.
that careless posture you said, that helps you deal with losses, right?
Absolutely. You need to make sure the P&L down here, um, you don't care about it, right? And if you're trading too big, and this is becoming hundreds of dollars or thousands of dollars and starts affecting you, then you need to reduce size, definitely.
Okay. Okay. That's some sound advice there for everyone watching. If you have difficulty with your stress levels, if you're sweating, if you get sweaty palms when you're trading, if you're getting heart, you may check your Garmin, Fitbit, or whatever heart monitor you have on your wrist, and you see it's going up. That's a good sign that maybe you're risking too much. You're gonna be too engaged, too invested in a trade, and you're not gonna be able to just not care too much about the trade. Take it without um, being affected too much about whatever comes out of the trade, because we can't control any single trade. We know what actually we have, what we can expect based on back testing, forward testing, and so on. But this specific trade, there's no one knows what it's going to be. Even if you do everything right, it's there's still a huge chunk of randomness in the result of any specific trade.
Absolutely. Just I keep reading price action. I see we formed this kind of bottom and we're reacting from it. This kind of creates a fresh demand area. So if we revisit that area, that's a potential buy again in order to bring my break even level even lower. And if we go up, I'll just take profit. So that's I just need to wait. You can see the volatility is crazy. You see the candle just going nuts, random, up and down. So if it goes up, it'll hit my profit. If it goes down, it will give me the opportunity to add again into that position. Let's do it one more time. And I need this level to hold now.
Looks to be at a pivotal moment here,
Yeah,
because that swing low on a higher time frame looks like a squeeze, like a little liquidity grab before it continues higher. But if it goes even lower, then it's no longer liquidity sweep. But it does look like promising for a pop or continuation higher.
yeah,
But looks to be right at that moment where whether or not it's gonna change direction or not.
yeah. Let's see how it where it goes. I mean, we did react to it. We keep pushing here, so there's a potential to break. Right after the break, we visit the next valid entry point, which is there. I just want to see the market to go up with the same easiness that it's going down lately. It's taking 3 minutes to go up and it's just 1 minute to go down that same distance. So
Yes.
it feels like a switch in momentum, and I need to be careful about that. So let's see.
Yeah, we have 2 minutes to the close of the 15-minute candle
Hmm?
for a 50-minute close, and I think the close will give us some guidance, some will make a will give us a signal whether or not this is going to continue or not. Um, we'll see. Very
Yeah.
interesting. Let's take a look at
I can tell you if I was just opening my charts and I would go short now to try to catch the breakout, I would get faked out and the market would move higher, right? So I'm keen now on that fake out to come, um, to
very intense. That's usually that happens a lot in trading. So um, I was going to ask you about silver, but since the market is quite quite interesting, the chart. I mean, on US yen, dollar yen. So I think I will leave that silver for some other time, and not distract you from the current trade.
Yeah. Okay, so we're approaching that buying area. Let's see. I don't want it to. I want to see now.
That is the last area, I think, that
Yeah,
you mentioned.
yeah. This is the last area, and we're now approaching it. We'll see if we can. If we see some
Wait.
slowing momentum here,
Mm-hmm.
and then I'll add to my position, and if not, I'll just take. If the momentum just continues down and down and down, I'll need to take the loss.
Yeah.
Because otherwise this might continue, this might reverse in my face, from a daily bullish candle into a red one, and I don't want to be
Yes.
there.
That's it. Exactly. I can see in Samir's face that he's probably in a trade. The U.S. equities are open, and I can see how concentrated he is, laser focus. I suspect he may have a position open right there.
I'm about to enter.
You're what? Say that again.
I just took a trade right now, as you mentioned.
Yes, I knew that.
I just took a trade right now as you was talking about, I was focusing on US indices. I just took a trade right now.
There is a
So yeah,
delay.
let's see
That's
the
why,
outcome now. Yeah.
for those who are wondering, there's some delay between when Samir hears us and says something back. The market being very volatile today,
Yeah, there is a
Saul.
delay in audio, I think.
Yes, the U.S. Open. I think that acceleration to the downside might have something to do with that. With the U.S. Open 15 minutes ago, and not to not to uh, coincidentally, the market also start moving the dollar. I mean, so the market going like a rocket. I'm looking the NAS here, and it's already what, about 150 points, Samir?
Yeah, Nasdaq is flying up, and that might tell me, people's dropping
Yeah,
USD
exactly.
or buy stocks.
Let
So
me see.
I might need to switch my objective of this trade into just come out break even, something like that. Now, this I have a challenge, because this will be now a strong supply area. If we
Hmm.
revisit this area, the market might continue from there lower. We also created this supply area, so I need to bring my break even level low enough to get out at those levels. So I'll keep managing this position.
Very lots of movement here at EU as well. EU
I took
has
short on
made.
NASDAQ as I discussed like previously when price tapped that supply area.
Go ahead.
There is a very much delay in the audio. I
Go ahead.
Now the audio will go like 10 seconds from the time I am speaking. I don't know what is wrong.
Can you hear me, Victor, or we also got delay?
No, I hear you without any delay, Saul.
I think it's
You're
on
good. I think,
Samir's
yes,
side.
I think it's Samir's
No.
connection perhaps has some extraordinary delay today. The market coming back from your demand zone,
Yeah.
and you're playing the defense mode. Price
Yeah.
has
Yeah.
pushed quite heavily against your position.
Mhm.
You're still very relaxed. I see that. Um, so you're now looking for not banking profits, but more keeping capital, right? Protecting
Correct.
capital.
Correct. I keep reading this now. I expect this candle or the next candles to visit this area, and then I need to reduce size at that area because we might have a next leg lower at that area. But close to this area, I'm going to be close to break even, so I need to reduce size in case we have a next leg lower, so I can add again and all the time manage my trades and bring it to the my break even level lower and lower and lower. So let's see if we can. Wow, I have 10 more minutes, guys, before I need to jump on another call.
Yes,
Hopefully I can pull it off within 10 minutes. Let's see.
that's
I need one more strong green candle, and we'll be there. We'll be fine.
I find it trading in general is quite difficult already, right? To handle ourselves, handle the emotion, handle the technical analysis and everything. It has a good degree of difficulty, but doing it on a time pressure like you're doing, Saul, that's like difficulty squared.
Yeah, that's fine. Um, I can always set my stop loss and take profits and leave it, right? Okay, I'm expecting now resistance selling pressure coming from this area, so I need to be prepared for that. I need to start also pulling out some of the sizing down my trade as I'm as if I'm at break even, just in anticipation to the next leg lower. Okay, we can see the tail, so that might bring us all the way down here. You can see my cursor, right?
Yes, we can.
So yeah, you see the tail that so we broke down. We're revisiting now the breaking area. Yeah, so we might go all the way low, but at least I came from 20 something lots now to 16, to manageable. So if we go down again to these lows, then I can reallocate those lots, and it will bring my break even level lower. So when we have the next reaction to the upside, the next impulse to the upside, I will hopefully easier be able to come out of the trading profit, or at least fixed. So that's the process. Now that really is that's what I need to do right now. Just managing size, allocating size, reducing size, allocating size, reducing size, until we get out of the loss.
I see that. The I saw you basically took off roughly a third of the
Yeah.
positions you had.
Mhm.
Is that a fraction that you use a lot of the time? You take a third off, you put a third on. Is that true, or does it depend on the
It's
market?
pretty much no, it's not something I measure. Just it's like I don't know. It's just
Discretion. You use discretion to
discretion.
do
Yeah,
that.
discretion. That's the word. Because I do need to leave enough on in case this goes in my favor to make up for the losses that are already banked. So I don't want to go down completely. Right?
Right. The market coming back from that level that you indicated before, very nicely. Even that last 1 minute candle, that pin
Yeah.
bar that reacted, retested, that tells you something, right?
Yeah, it's give me bringing my confidence back. Um, I don't want to get greed, of course, but at least it's telling me, okay, we have we have some opportunity to, okay, we were at resistance, we already reacted from resistance, and we're revisiting resistance now. So if resistance gives up this time, we might go higher to the next supply area, which is up here. Before that, I want to get out already from the market, and then to assess, how it went, because I think I think it happened to us like 2 weeks ago as well. But I worked very hard just to end up break even. So that might be the case, but just taking into account that I started adding here. I think that was my first entry up here, and I've hold the whole drawdown, and I managed to break out. To come out break even. That's a good position, right? So
It's actually it's
that's the process.
that's a skill. I mean, to fix as it is going against us, and to still come up at least break even or close to break even, while the market did not come back all the way up.
Yeah,
That's a skill.
yeah, yeah. You're slowly managing bringing your break even level closer and closer to the current price, um, and then you end up either fixing or reducing loss or making profit. So let's see what can we make in the next 5 minutes.
Yes, indeed. Last few minutes. So, if anyone has any question, now is the last chance to ask any questions to our CEO, who is with us today for the next couple of questions until the end of the hour. We are celebrating the 10-year anniversary this year. It's a huge event. Has been last we celebrated, but it's not just one day; it's the whole year. So it's an amazing year to be part of the Fivers family. All right, so let me check. I would like to remind everyone who's in the chat who has support questions. We are not support. I know it's easy for the client to see one company, but of course support are the best people to can take care of your support questions. You can get them live on the website. You can get them in a separate channel in the Discord. You can email them. So support is ready there to help you, but they are the best people to help you with your support questions. All right, the market pushing forward. Sadly, we don't have a lot of time left, about 3 minutes or two to be exact. The market coming back, very close to break even right now. And
Yeah, break even is. I mean, it's fine, but I think I banked some losses, so I really want to see, if we can push a bit higher and make some money. That would be good. But I might need to reduce some size as well, just in case I need to leave this open. Let's see. There
all
you
right,
go.
market pushing back in your favor, right in time. There it is. Just a little few pips, few pipettes away for hitting that target.
That's awesome.
I'm checking the news to see if anything is happening in the background. Basically, not. So that means that whatever moved the market was the regular market movement, the U.S. Open, um, and that's it. But nice session, even though it wasn't easy. We'll say it, but a nice display of fixing the position, handling it with ease, and being you know uh, trading responsibly, I would say.
Come
All right.
on.
scaling off the position because you're seeing that the market is stalling, it's not pushing forward with the same speed. Nice.
There you go.
There you go. There you go. Uh that was a nice display of the market didn't come back for the original entry, right? It didn't come back to the
No,
original entry.
the original entry was all the way up here, I believe. It was
Exactly. Yes.
alright.
I think so too. Yeah. And still you managed to close that in, well, the position you close in profit, but I think overall it's around break even, right? Let me
Um,
switch to mine because we lost your screen
oh,
while you're setting your screen, Saul.
yeah.
All right, so we are actually we I think we have time for your screen to come back to your screen, Saul,
Yeah, I do
because
need
we
to run, guys. But
yes,
I made $150. So
150. You actually made profit. That's I mean, given the situation,
yeah,
the market put you in after you enter, that's a nice nice profit.
yeah, not great profit, but at least not a loss. Now I can reassess the market and reanalyze and re-engage with it if needed. But yeah, I was
Thank you.
that was fine.
Thank you
I
very,
do
very
need to
much,
run.
Saul. Yes,
Uh,
we understand. Go ahead.
Always fun, always good to be here, guys. And thank you, Samir and Victor, and thank you guys for coming and staying. And I'll
Thank
see you next time.
Perfect. So have a great day
Bye,
and
guys.
see you soon again. Thank you. There we go. That's Saul with who was with us despite his very, very busy schedule. Take some time to interact with the audience with us. Actually, I always enjoy having him so he can, I learn all the time from him. It doesn't matter how long you've been in the market or how profitable you are or not. There's always things to learn from others, and that's that's certainly so when Soul comes on here. So I think we as co-hosts and here traders on the fivers, but as well as people watching us in at home or wherever you may be, it's a great privilege to have the CEO with us, the times that he is able to manage. Yes, nerve of steel, bravo. Yes, indeed. That's the well said, Jimmy. Well said. That goes to show, skill and experience. So, Samir, I we do know that there is a huge delay, so I will wait longer when you start
Yeah,
talking
if I
because
speak now, I
otherwise
think
I
it will
will.
reach to you in 10 seconds.
Yeah, so I would like to thank everyone
Yeah.
for watching today. It's been awesome having you with us today. Don't forget to like and subscribe. The Fiverr is growing constantly. Any last words, Samir?
Just stick to your trading plan. That's it from me. And thank you so much to our audience and to Saul also. And thank you for having me here. And thank you to you also, Victor. And that's it, guys. I'll see you tomorrow. We will see you tomorrow. And thank you for everything. And again, stick to your trading plan. That's how you will get the results. With that being said, guys,
Perfect.
take care and I'll see you tomorrow.
Nicely said. That's it for us here at the Fiverr. See you tomorrow again. Same place, same time. Goodbye.